Mic check, mic check. Mic check, mic. All right. Good morning. Okay, we got S&P 500 cash resistance at 6,900, support 6,800. If we lose that, obviously, we'll start to reassess, but 6,700 below that. Okay, futures, looking for that to move up. Okay.
Why? Well, it's in the midst of a 9-session losing streak. That would be its worst stretch since 2006. Seen more than almost $500 billion in market cap, about $450 billion in market cap erased during this.
All right, let's get ready for the opening bell. As you know, first 15 minutes, I don't do much of anything except take profits off the table if it makes sense to do so, if warranted. Looking for a trend after 9:45, 10 o'clock or so. Trend being important. Make sure you check out the watch list.
For sure. I mean, this is basically the center of the debate around how much CapEx is too much. They are going to
Put this
basically kind of break
here.
even free cash flow depending on how things swing this year. And so this streak is started basically at the earnings report. What's remarkable is Amazon has now underperformed the S&P on a 6-year basis. 6 years is start of the pandemic, start of lockdown, right? And so that was when they kind of got that massive burst of outperformance from stay at home, and they've kind of given it all back. There is a bullish case, or at least a sort of more constructive case, that of all the big hyperscalers, Amazon has so much history and experience with massive physical capex because they have, recreated a logistics and delivery system and all the warehouses and everything. So maybe that they're actually have a slight advantage over some of the sort of pure virtual companies, but it's not really fair now.
That
Plus,
is
I keep talking about how expensive
need.
Walmart is and how it's like the one stop people feel safe in bidding up every single day. And 40% of Amazon is something comparable to Walmart. Yeah, we'll get Walmart on Thursday, as we said earlier. The other wrinkle is that AWS
Just setting up my charts here.
it's not growing nearly as fast as Google.
I don't know why this is all messed up.
No, spending much bigger base.
Okay.
The dollar increase is not dissimilar from what those have seen based on the bigger base. I do wonder about that, the retail business. In other words, your argument would be if you're willing to pay, what is it, 48 times or something?
43.
Okay, we got 7 minutes to go. 7 minutes to go.
Throw the same multiple on Amazon?
Yeah, the market never
Futures
when it's inside another
still off a bit.
Walmart has a lot of these other attributes of seeming like an absolute clear, AI winner without having to spend quite as much.
Just listening to Mike Santoli. He's really good.
Still like a 3% net margin business. You know what I mean? It's not like
No nonsense review.
Massively
Views of the market.
high return business relative to sales. So it is fascinating that that basically the whole kind of Mag 7 concentration to now deconcentration trade has just caught basically every one of the stocks up into it.
Although, Walmart has done a very good job competing with Amazon in that way, and I think that has come to the fore in terms of in investors' minds and/or concerns for Amazon.
Yeah, for sure. Yeah, it'll be interesting to see what impact some of these price cuts now are having on Walmart over safer consistency. Take a look. We'll get the opening bell here in a moment. Don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
Okay, we've got about 20 stocks advancing at the moment on the NASDAQ 100, and about 30 to 40 are declining. The rest are unchanged. Got about approximately 20 unchanged. Okay. Let's see what else. Let me just review this real quick. I didn't have a chance to review it. Okay, that's good. $6,600's on deck. If we lose 6,800, so that's the most important thing today. We got to stay above 6,800. Bitcoin, just in a range that it's been chopping out for the last 3 weeks near these lows. I do have some protective puts. They're really far out there. They're in December. Probably didn't need to go out that far, but it's after the election, midterm election. You know my view on the midterm elections. I showed you what I was thinking. S&P. Okay. Let's see. 2000. It's this one, I believe. Yeah. Okay. 2018. This is one of them anyway. We had 12% pullback. We bounced, and then a 16% pullback for a total of 20%. Okay, that started in September. Now we're pretty far away from that. A lot of things can happen. It's just some puts that I bought. They were cheap. You know, I bought a spread. Looking at 650, 640, 650, 640. 650 is the SPY. I believe that's where the 200-day, I mean, the 200-day, right? SPY. 200 days down there at 650, more or less. Okay, we'll be at 650. 200-day is still up and to the right, still bullish. Intermediate term, we're just below that. We're still sort of neutral to bullish. If we pop back up, neutral to bearish if we lose 680, 675.
Welcome back. Published reports say that Ford is asking the White House to allow Chinese EV technology into the U.S. Let's get more this morning from our Phil LeBeau. Hey, Phil.
Okay, let's fill in our 0-day options. I like to have a 30 delta ready to go, calls and puts. That way I can follow the ebbs and flows, whether we have a lot of bullish volume in the call side or the put side. I can see it very quickly the way I have this laid out. Okay, let's go to S&P, 0-day.
What are going to be the policies? Not necessarily bring them in, let them come in, but more along the lines of if the Chinese are ultimately going to be allowed to manufacture through a joint venture in the United States, what are the policies going to be? What are the implications in terms of the
2 minutes to go. 2 minutes to go. I got to get these filled in here.
Supply chain base, given what we've seen, the pressure that is going to be coming from China worldwide with their supply chain being subsidized and undercutting suppliers around the world. That's the way Ford is portraying this. Not necessarily we're pursuing a JV, but more along the lines of the president has said maybe the Chinese should build vehicles in the United States through a joint venture.
68.70.
What should be the policy? What should be the discussion?
68.35.
So
68.35.
It's a fine line that Ford is trying to walk here, but they are pouring cold water on the suggestion that they are pursuing a joint venture, or we think the United States, the administration, should look into more actively allowing the Chinese to come in. They are portraying this more as, look, conversations have been.
Where is this one here? This is 67.50. 67.50. I'm just going to pull those up.
Look, if there's going to be
Okay, less than a minute to go.
What are the policies going to be, and how are you going to have some of the key protections in there so that the U.S. auto base?
Okay, we're open. That was quick. Snuck up on us. All right, let the markets. Okay, we're starting to bounce a little bit. Okay, we're starting to grind up a bit. First 15 minutes, I'm not doing much. Just watching how the markets deal with imbalances. These first 15 minutes. Okay, RIG, RIG, that one has earnings. What do we say? We have that in the watch list. RIG's on the watch list. Let's see. RIG is February 19th. Okay, so was that Thursday after the close? RIG.
Just seems to have kind of lost its hold on that piece of speculative flow. Last week, got results from Coinbase, got results from Robinhood. They're kind of hopeful that maybe that kind of activity is bottoming out. But it's, to me, sending no real signal except that we don't have this kind of, very open-ended.
Yeah, Mr. Tuccini, most maritime shippers.
Some of the winners out of the gate were some of last week's disrupted trades. So you got your C.H. Robinsons that were rallying, some of the real estate.
Okay, Zim Integrated you're looking at? Zim, okay.
Services company. So people trying to go and find where there might be some value in the wreckage where it was overdone. As well as ServiceNow, by the way. So,
okay, S&P pushing a bit higher.
Of the software sell-off, which
RIG.
executives are going to halt their automated share sale program and purchase instead. And maybe CEO Bill McDermott doing some
Keurig
purchasing
Dr.
instead.
Pepper.
Obviously, everyone knows
Okay,
it's a
so
signal.
Zim, STNG, these maritime shippers have been looking pretty good.
In fact, if anything, they kind of used it.
TK. All right, those are trending. That Chinese stock HSAI that Mr. Tuccini mentioned, HSAI is gapping up.
Yeah, with Elliott. I don't have a lot for you there. It was a busy morning for me, frankly, on the reporting front of other things, so I didn't have a chance to sort of dig in there. But as we always say, Elliott is by far the most active and most significant activist investor in our markets. And they're now building a large stake, which it doesn't mean they always get it right, by the way.
Okay, Kimberly Clark. I'm jumping around the sectors, but I see lots of different things moving here. See if we can discern a trend. Okay, silver, ZSL, silver, SLV, silver, silver below the 50-day.
I mentioned it in light of activism because activism here kind of worked. Massimo, a number of years ago, I don't know if you remember this, Mike, they owned like Harman Kardon, they owned the speaker company.
Silver, SPY. Okay, we got to hold this level. I just feel this feels very sneaky to me. I don't know why. If we get a lot of people are thinking the same thing, is that if we get the regional banks to start moving, the S&P, Spider, small cap 600. Okay, need to see this break out. If that can break out, that would be a good sign for small caps altogether. Small cap 600, as the name implies, is only 600 stocks, and most of them, a good many of them, are KRE, regional bank related. All right, so watch KRE, SML, and IWM. Okay, watching that, just consolidating.
One of the potential buyers, no longer obviously on the board there. You'd expect, or given that they have stepped up to buy Massimo.
Interesting. I mean, I guess down 3% for Danaher is not a big.
Okay, calls are getting a bid here. S&P 500. It's pretty ugly. The last couple of times we dropped below the 50-day, with the exception of this one over here in November, we quickly got back above the 50-day. JC Parents is thinking that we're going to push higher. I just noticed different people saying opposites. Brett talking about the possibility of a pullback. Watching the S&P here, though. Not doing anything the first few minutes of the trading day. I want to see if there's a trend that will start to develop. Chevron pulling back a bit. Chevron.
We think it's about Max, but that's the one data point on Apple. The other's about their push into video podcasting, trying to take Spotify and YouTube. But have been challenged last week, certainly.
For sure. In fact, it's
Could be starting a base up here.
of Apple. It's bouncing a little bit today, up a percent. It really kind of
CVX. Sorry, that's CVX.
24 levels around 260.
CVX.
I think a lot of folks were wondering if that's where the market could find a little bit of buying interest. That was the price basically where everybody was slapping more.
S&P climbing. Very early. S&P is climbing. You can see where resistance comes in, right around 68.70.
Something like that. Although Amazon also trying to bounce this morning after we talked about 9 days down in a row. So we're trying to find a little bit of stuff that looks like a decent entry.
Yeah, that 1.5% down day for Apple last week was blamed largely on memory prices. And I know you're interested in this Micron take in the journal today.
I am. I mean, obviously they're talking about they're going to, spend $200 billion to bring on supply. It can't happen quickly.
SPY coming back. All right, 50 days up here at 687 or so. 50 day. Volume pretty good. Looks like shorts covered right at the open. And just before we started coming off the low, around 8 o'clock, 8:15. SPY. Okay, so supposedly there's a big infusion of cash by the S&P. I mean the U.S. government Treasury. Let me just go back and read that. It was posted last night, right?
Based on how the supply chain is repricing here. So markets only had conviction about the memory trade and to some degree.
Okay, let me just copy this.
So we're giving some of that back today. I don't think it's really changed the overall story. But, again, in this whole kind of whipsaw rotation type action, memory is coming in for a little bit of profit taking there.
Yeah. You mentioned earlier.
We did notice that the 10-year was down, so that makes sense. The 10-year yield, or we're still moving higher here.
And where's the S&P?
21 and change. If you just look at NVIDIA's premium over the overall market, it hasn't been down here. Now, what's interesting about that is another stock that had that experience was Apple after the iPhone.
Yes.
So in the couple of years after the immediate kind of mega blockbuster iPhone cycle in the late 2000s, everyone can remember this. Apple traded at like
SPY still going. Keep an eye on SPY.
Nobody thought that a hit-driven hardware company was going to get a premium. It ultimately did. It obviously became more services-oriented and all the rest of it. So NVIDIA, I think people are struggling not with how our number is going to be for the next few quarters, but just exactly how persistent is these.
Hedge flow still going. We have resistance overhead.
Is the rest of the world happy to?
Okay, let's look at 0 day. A lot of positive gamma on 0 day. That's kind of unusual to see that much already. Let me see if I can zoom out a little bit there. Okay, 68.90. Coming up against 68.90.
To design a chip that could at least replace some of the things that NVIDIA's GPUs are doing. And then on from there, in terms of the actual competitors, whether it be, although Grok, which was, well, they weren't bought by NVIDIA, but they were bought by NVIDIA, but they weren't. And then Cerebras is another private company, any number of these other companies that we hear about as well that, may challenge, at least to a certain extent, their lock. Guys, coming back to Warner Brothers, they're all kind of up this morning.
Nice volume at the open. MACD is still rising.
Remember, doesn't have a large float, up almost 10%.
Okay, we only have about 6, 8. Oh, okay, there we go. There we go. Bunch of stocks starting to advance now on the S&P 500. Let's take a look at that. Okay, so let's see what up-down volume looks like. Okay, nice charge higher already. Okay, with 1-to-1 up volume on the SPY, 1-to-1 up volume on the Qs. So expect dojis for now, unless we see up volume surge to 2-to-1, 3-to-1, something like that. The diamonds, the Dow Industrials were up 3-to-1. Let's take a look at the diamonds. Dow Industrial equivalent of spiders. The diamonds, okay, we're just sitting above the 21-day. Back to SPY, still pushing higher SPY. We got fair value gaps on the way up.
And they're owned by a lot of the same people that own things like software and, you know, the traditional
VWAP
names.
starting to pull away from VWAP.
I do think there's been a general retreat from that category of stocks. And now you're seeing Spotify, you know, get a little bit of relief here. And again, I think the market wants to try and see
60 minutes. 60 minutes on a buy signal, 5, 15, 30 as well. Tick cumulative is green. Okay. Number of stocks advancing. We've got 282 stocks advancing on the S&P 500. 54 stocks on the NASDAQ. The Qs, 55. So we got a little bit more than half. It's about 50-50 right now. 720 on the diamond, the IWM. SPY still pushing. Futures are positive. So not a bad start. Not a bad start.
Consumer cycle has been really conspicuous in how they've lost a lot of their advantage over staples. So causing people to question it.
Okay. Let's see.
JP Morgan, I mean, you know, it obviously outperformed the whole way, you know, when bank stocks were not really in favor. But the degree to which it's really flattened out and gone back to levels that we, you know, first saw in, you know, late summer is been interesting. And so they're, you know,
hedge flows still rising.
People wanting to buy that pullback here.
Hedge flows are still rising.
Of advancing stocks over decliners in the New York Stock Exchange. It's been kind of this 50-50 story most days here. The equal weighted S&P is just destroying the market cap weighted version by like almost 6 percentage points year to date.
Yeah, that's a good point. That's a good point. The equal weight index, S&P 500, equal weight index, doji inside of the wick of Friday's price action, the top of Friday's price action.
Historically, though, when more than 60% of S&P stocks outperform, it's been in the context of a weak overall market. In other words, the S&P is not going up and 60% of stocks are beating it. It's usually flat to down, as it has been, you know, since October.
The other chart people are enjoying today is the XLF versus the staples, the XLP, year to date. I mean, just going in opposite directions, really, since the first week of the year.
Yeah, and I think a lot of it really
Okay, what do we got? Chevron pulling back. It looks like it's starting to base. Chevron, Tesla off 1.5%, 1.7%. Tesla. Micron's off 1%. Boeing. Watching Boeing.
Of what AI is going to be for the economy and the rest of it, and you had this momentum reversal and the stuff that worked really well, and then it just creates this forced repositioning, and there's a lot of money coming out of Mag 7 and financials and other consensus trades that didn't have a lot of places to go aside from the smallest sectors in the index, and so that's why.
Okay, puts are being bought. Calls look like a little profit taking at the highs.
So it's a lot of it really is just reverting to the mean and forced mechanical type stuff, just to kind of compensate for the fact
puts are catching a bid. Okay, we made it to the made it positive. Now we're back to negative again on the day. SPY.
1.5 to 2 for the year, and down 6% is going to take you back probably to the beginning of the month or so. We'll keep our eye on what some of these staples companies say.
Yeah, that's a good kind of real world experiment of what was taking the stock up. Well, it probably wasn't. Yeah. That guy numbers were going to be going up very soon.
Not seeing rebound in some of these names that, you know, were with these curious, but incredible moves down. CBRE, I've talked about
A lot of positive gamma.
Wednesday.
Should be sticky in this area. A lot of positive gamma.
They're not going to work anymore in office towers because they're not going to work. And I just wonder if we get to that point, are we going to have bigger problems in commercial real estate?
For sure.
That said, I mean, the thing went down 30% almost in 2 days.
Oh, there was another storyline attached to that,
There
which
is,
was
yes.
kind of that AI can do a lot of that,
Of the
intermediary type work.
without a doubt.
Who
It wasn't
knows? I
just
mean-
about people being, and that's been the case with any number of these sort of stories where you're looking at one thing and then there's obviously another.
Sure.
Right, to your point, they can lease or AI is going to be able to take over many of the functions that they currently do at
Right.
CBRE.
Although Journal's got a big piece on office commercial mortgage-backed securities.
Yeah.
Yes.
Delinquencies are the highest since 2000, right? You're in the 13% neighborhood
Yes.
on office delinquencies.
Is so slow to kind of ripen and spoil, basically, and that's you're seeing the effect of that for sure. Yeah. The kind of,
Okay, puts definitely got a bid. We got lots of flow coming into
great offices.
these
But
puts.
no doubt about it.
Again, I come back to because I was on Thursday when I watched Disney down, Netflix down, and Fox was down too, which was odd because they're sports and news. They're
Right.
they're not a studio anymore. I was kind of curious about that. Some saying, well, you want to add on another layer of concern for all these companies, the NFL negotiations, which would seemingly be a bit away, but nonetheless maybe closer than you think, and
Okay,
are going to be
back down to this fair value gap.
Therefore,
A lot of times these fair value gaps will get filled,
companies that have that contract,
and then price action continue. Okay, there's a fair value gap right here. I'm looking at that green rectangle with a line through it.
You know, I think people do the thought experiment.
Okay, that green box there.
Do a lot of these necessary things, maybe.
That's the gap between this first candle at the right before the open and this second or third candle. Fair value gap. Watching this for now.
The S&P 500 value is attached to. It's wants and it's things that we choose to do. And my example of that is the NFL does not need to exist. We don't need it, but it's this quadrillion-dollar.
All right, Bitcoin is down. Bitcoin.
As a core piece of the economy.
Bitcoin stocks are lower at the moment.
These cash flows attached to it, so we can just create more of those things.
Constellation Energy, that was up.
I don't know. But I think
That was up last week. CEG, rig, CEG. Constellation Energy follow through today. Constellation Energy, they have earnings, right? On the watch list. Constellation Energy, February 23rd. See, Constellation Energy, February 23rd. That's next Monday. Is Constellation Energy earnings? A lot of these energy producing companies like Constellation and Nextra Energy. That's up again this morning. Nextra, that's on the watch list as well. Earnings in April. A lot of talk about the companies that can provide a lot of electricity to these data centers are catching a bid. Nextra is one of them. Okay, S&P continues lower at the moment. S&P's lower. Okay, it's only 9:48. It's 9:48. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, February 17th. Just waiting for the markets to settle down and give us a trend. Do we fade all day? Do we bounce? Hard to say at this point. Let's see what is actually strong today. Okay, S&P 500. We've got cruise lines of all things. Carnival. Well, isn't that something? Carnival. Norwegian up. What's RCL doing? RCL. Here it is, February. NCLH. Carnival. Okay, so they still have to break out. All right, so that looks okay. Carnival. What else? What else? Moderna's up again. Moderna. Okay, that looks okay. Moderna. Moving higher. Edwards Life Sciences. This one is bouncing. Not really that interesting, right? Chipotle coming off the low. Not really that interesting. What's Starbucks doing? Starbucks was really busy this weekend. No, nothing there. What about Disney? Disney? Nope. Nike, NKE. Nike, not much. Boeing pushing a bit higher. S&P still fading. Okay, S&P. All right, so this is not looking that great, folks. Not looking that great. We're going to test 6,800, it looks like. Okay, people seem to be getting nervous here. Boeing. Boeing a bit higher.
Today with the Dixie back above 97, taking some of the wind out of gold sales, down 3%. Silver had a rough overnight, down 7%. Although we mentioned that B of A fund manager survey where surveying respondents see the gold peaking around 6,200.
Yes.
I think was their number.
But also very, very crowded against the dollar.
Yes.
Right? So very bearish consensus on the dollar. We'll see if that proves contrarian.
Interesting times in metals continues as the Dow's down 61 to start a holiday shortened week.
Kind of a rocky start so far. Puts are catching the bid. We got a lot of flow on the put side. Just looking at 6,700s. We're right at 68. Okay. S&P looking in trouble. Very quick reversal. Get a gap up or a gap down. Reverse early and then roll over. In this case, rolling over. We're down at the low here. S&P. Tesla still pushing lower. Tesla. Okay, defensives are probably active, right? Defensives. Let's look at the Dow Jones. Insurance. It's okay. Visa. Apple. Trying to bounce after getting shellacked on Thursday, Friday. JP Morgan finally bouncing. All right, the financials are starting to bounce after a poor showing last week. Amgen bouncing. Okay, S&P still moving lower. McDonald's, Coca-Cola, Goldman Sachs. All right, the banks are definitely bouncing. What's KRE doing? KRE. Regionals, small cap 600. Okay, it's still consolidating. IWM is lower. I think, Mondo, you said you're in puts, right? Okay, so last week, the 10-year yield really got decimated. 10-year back off. All right, let's see what junk bonds look like. Junk bonds. One of the things you always want to pay attention to, junk bonds. Still sitting on the 50-day. That's interesting. Okay, I'll keep an eye on SPY because we're definitely showing some weakness. All right, S&P over there on the right. All right, this is like the fourth time we've hit this level, more or less. Okay.
Comedian Stephen Colbert slamming CBS last night over an axed interview with Trump critic, Democrat James Tallarico. Take a listen.
Oh, I don't care about late night hosts like they're some kind of important. Come on, CBS, NBC, CNBC. I'll get it right. Let's see.
In the long bond.
Okay, we're right here at the low. We're gonna like shoot lower. What are we gonna do here? The volume is really picking up here. MACD is turned down. We're testing that level. Hedge flows. Quick reversal on hedge flows. Okay, we got a level right here at 67.80.
Pretty significant. Microsoft down close to 18%, Apple down 4.6%, Amazon down 13%. So, I mean, these stocks are kind of showing there's economic weakness out there, and that's the reason the bond market is rallying right now.
Okay, and look, I'm looking at IGV, looking at the software index here, or a group, I should say, and it's just been tough, down 25%.
Constellation.
3 months, still not
All
really
right.
showing signs of strength, even with the self down 2.3%. What are you watching here in the final moments, George? I know the Fed minutes are tomorrow.
Yeah, so I think in the context of the IGV, this is important because if you look at the constituent holdings, Microsoft, Oracle, and
Hedge
Palantir
flows.
are over 30% of that entire ETF. So you got to consider there's weakness in those three names. Palantir from a valuation standpoint, maybe Oracle and Microsoft over investment, OpenAI exposure standpoint, but there's a lot of opportunities within the software stack, maybe not necessarily the broader ones.
All right, we'll continue to move lower now.
In those particular names. But right now, considering some of the things we've got going on in terms of earnings, Palo Alto, another weak area of the stock market and cybersecurity. I also noticed Zscaler really weak in the last few months. I mean, it's just getting decimated considering the disruptor elements to artificial intelligence. But you got to consider
Silver short
really
may work.
strong
Silver
name,
short.
defensive area. Generating pricing power and scalable business. They'll be reporting this week as well.
Yes, I noted that, Matt, just how great it is at a new high, over $1 trillion in market cap. One to watch for sure. George Silas, Dan Grant, thank you both so much. Thank you, friends, for being with me here on Opening Bell. I'm Nicole Petalides. I'll see you at 2 o'clock for the watch list. Join me then. Coming up next.
Started off the day with 1-to-1. We're quickly at 4-to-1 down volume on the Qs. Almost 2-to-1 on the SPY. 2-to-1 on the NASDAQ Composite. New York Stock Exchange, almost 2-to-1 down. Okay, S&P still drifting lower here. Okay, let's look at the New York Stock Exchange. When in doubt, you always want to check the New York Stock Exchange. All right, so this is neutral to bearish at the moment. We could see a move back down to the 21-day short-term RSIs moving a bit lower. MACD stochastics looking like they could roll over.
Worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location.
Okay.
Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing.
Dow Jones, what's down right now? IBM. CRM's down 2%. IBM down 2%. Caterpillar's off. Caterpillar's off a bit. Do we get a trend day? Is this going to be a trend down day? Are we going to lose these levels? Hard to say at this point. We got some support at around 67.80. That's 0 day. Non-zero day, 6,700, 6,750. 6,750. 6,700. So it looks like 6,750 might get tested.
Break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Okay, a lot of these ETFs are starting to see some topping. Maybe take a little bit off.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. Everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that
Okay, some of the defensives like KMB, Kimberly Clark, grinding higher, that's fine. Keurig, Dr. Pepper, ooh, Colgate. All right, that looks all right. Clorox, Procter and Gamble. All right, material sector, XLB, pulling back. XLC Communications, pulling back. Energy, pulling back. Oil and equipment services, trending, but topping it at the moment. Financials, they get a bounce. We definitely need the financials. Industrials, consolidating. Consumer staples, consolidating. XLU had a big bounce last week. Way overdone. That's pulling back in. Healthcare, maybe a healthcare bounce. So watch the pharmaceuticals like J&J. Okay, that's consolidating. Bristol Myers. There's quite a few of those that look like they could follow through. AbbVie, AstraZeneca, Moderna. Okay, those look okay. XLY, consumer discretionary. Amazon and Tesla make up almost 50%, so no surprise here. Moving lower. XRT, what's Walmart doing? Walmart consolidating at the highs. All right, back to SPY. SPY's trying to bounce here. Okay, we're respecting this level for now. Do we hold this or do we snap and lose it? This is like the fourth time we've been along this level around 677. Mohamed Al-Arian on CNBC.
So I think that there are lots of questions going on. And one of the simple ways to explain it is we have lost unifying narratives. We no longer have unifying economic
Tesla
narratives.
trying to bounce.
We no longer have unifying market narratives. So that the bottom-up disruptions are starting to be much more impactful in terms of economic outcomes and in terms of market outcomes.
So when you think about the lack of hiring, Mohammed, at the moment, is it about the reversing the overhiring that came out of the pandemic? Is it about trade and policy uncertainty? Is it about the promise of AI? How would you ladder those three things?
It's about all three, and I would say the first one is the first one you mentioned. Companies are now resizing after the employment boost they had after the pandemic, and they're resizing.
All right, GE pouncing a bit. It's up less than 2%. Yeah, insurance looked good. I was noticing the same thing, Brian.
The displacement side of AI, not the labor augmentation side. And then the third element is policy uncertainty here and in the rest of the world. And these three things mean that we are seeing increases in layoffs and firms are more hesitant to hire.
You talked about, Mohammed, the displacement in the jobs market by AI, but I wonder if we can just zoom in a bit more on that topic. Once again, this hour, we're seeing software names trade off on this concern that AI will be an immediate
Insurance getting a nice bounce.
Business. Have you been thinking through the effect it could have on the labor market, specifically on layoffs, if that potentially does come to fruition? fruition as these companies figure out, how they reorient their business models?
Yeah, whenever you look at the impact of AI, you're torn between automation and augmentation, between labor displacement and labor enhancement. And if you're not careful, you will be pulled into the labor displacement side because that's a shortcut. Do the same with fewer people. Do the same activity, but use fewer suppliers. So that is the easy mindset, and unfortunately, that's the mindset that quite a few companies are trending towards, and quite a few investors are trending toward. But that's not SEMA. That's not where the promise of AI is. The promise of AI is in labor augmentation, with the same amount of people or more people, and that implies labor retooling.
That's interesting.
Much more sophisticated adoption and
They usually do that. They usually dock Mondo over there by the the Intrepid, whatever it is. Mm-hmm.
But we don't have it as yet. And in the process, you're going to see a jobless growth. You're going to see strong growth and muted employment growth.
So, given all of that, Mohammed, you don't think a 10-year at 4 makes sense?
Yeah, I'm really, really scratching my head. Yes, we had a better inflation report, but we had strong economic growth. We've had a step up in oil prices. We have had further evidence of...
Yeah, I see the 68.70 you're looking at there.
We have a whole host of things that would suggest lower.
Okay, and we're trying to bounce in this zone. There's a lot of positive gamma, too.
Overextended in risk assets, they were overextended in gold. So they've gone to the one thing that didn't perform the way it was supposed to perform, U.S. Treasuries, and now we're having the correlation come back between Treasuries and equity. But from a valuation perspective and from a fundamental perspective, it's very hard to justify a 4% 10-year.
So would you have a target in mind for maybe the back half of the year?
Yeah, I think we will see it going back towards 4.5, and when we get closer to that, you'll hear something from the administration.
Constellation Energy continues to move higher. Constellation CEG.
You'll hear more about some form of yield curve control. So I think we are in a range from 4 to 450, with the average being closer to 450 than it is before.
Mohammed, if you were a PM,
All right, showing a bear flag at the moment.
These software stocks that have just gotten absolutely crushed, and multiples now are half what they once were. I don't know. I'm just curious how you view it. I know you're not a PM,
S&P.
you certainly talk to plenty of people who are still investing.
It's a little after 10 o'clock on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Just taking it a little slow this morning and see if we're going to hold this level here.
Position bottom up, not top down, and I would certainly be picking up names that were impacted by this theory of the market for lemons, meaning they overshoot on the way down because they end up having a one technical correlation with names that are weaker. So I think this is a massive opportunity for stock picks, and it's particularly in the AI world and in the world impacted by AI. So for me, this is a world in which people should be building their portfolio bottom up and picking up some really good bargains at this point. It doesn't mean you buy the sectors across the board. It means you buy those with strong balance sheets, strong business models, and strong leadership.
Microsoft off a little bit this morning. Apple still going here. Apple still moving higher.
Yeah, I mean, it ties to both, and geoeconomics rather than geopolitics, meaning that increasingly economic outcomes and policies and market outcomes will be less.
Got a lot of positive gamma above and below price action. Should be kind of sticky. You would think. Let's see what net open interest looks like. Okay, there's a big level right here at 67.80. And some big levels overhead north of 68.55, 68.60, all the way to 68.70, 6,900. Microsoft trying to bounce. Apple's still pushing here. Apple's still pushing. Apple. I don't know. I don't trust Apple. It's still going though. Apple's still looking pretty good.
The software companies that could be most hurt by AI will look at the big disruption and the potential opportunities after a brutal start to the year for this sector.
And after the break, we've got another chapter in the Warner Brothers Discovery saga. We'll have details on that new window for talks between Warner Brothers and Paramount. That'll be next when Squawk on the Street comes right back.
All right, Bitcoin not looking so hot. Bitcoin, so let's move on from there. Had a nice little bounce last week. Coinbase was up, and a few others on a little strength. Okay, just watching Bitcoin as well. Apple at the highs. Hedge flows. Looks like a bear flag. Looks like a bear flag. Okay, starting to roll over again. All right, so we're below 6,800. So you know that below 6,800 things get really dicey. We could see a quick flush. We're starting to roll over right now. Puts are catching a bid. I see them bidding on 6,700, 6,700s. S&P. So if the S&P continues to move lower, I would expect to see Apple get drawn down with it. So don't chase Apple up here. I don't think anybody is, but okay. Really odd to see the to see these bid the cruise lines in February. All right, Edwards Life Sciences turning back up. Big move on Edwards this morning. Constellation Energy stocks, especially those that are providing electricity for these data centers. They're trending. Constellation turned back up with American Electric Power. Gapping up this morning. American Electric Power. What's Duke? Duke. On the East Coast, Duke. S&P.
Welcome back. Keeping an eye on shares of Warner Brothers and Paramount and Netflix. Why? Well, we do have the latest chapter, and as we call it, the saga, of course, as Paramount and Netflix continue to vie for ownership of the company that is Warner Brothers Discovery. Netflix still has the deal, and in fact, interestingly, Warner Brothers board did not say that Paramount's enhanced offer that we got a week ago, where they seemingly answered many of the concerns the Warner Brothers board had around their deal. They did not say it was likely to lead to a superior proposal. But they did get Netflix to say, we'll give you a waiver that lets you talk to Paramount for 7 days. And we are now in that 7 days. It is beginning. A advisor for Paramount has reached out to a board member of Warner Brothers indicating, hey, if you actively engage with us.
AMSC above the 50-day. Looks like it's trying to come out of this base. Fairly inexpensive. Superconductor, American Superconductor. This one just popped up on my screen. Let's see what this is. Let's see. Right along in this area is where the Kirby starts, and we got a ceiling up here. Volume looks pretty good. AMSC.
That said, in their press release this morning announcing this waiver and the talks certainly will follow. Warner Brothers did make it clear that
Bitcoin's still looking kind of ugly.
press release that they said they were doing, they did not show up in the merger agreement that sort of was offered. They would like them to basically copy a lot of the things that Netflix has. What I'm hearing from the Paramount campus when it comes to like operating agreement, interim operating agreements, those are things that need to be negotiated. A lot of other things may need to be negotiated during this period, and we'll see whether they can get there. The main sticking point perhaps being the overall structure of Paramount's deal, which is requiring
Boeing starting to move lower now. Boeing.
$4 billion in debt, $43 billion in equity to get done. It's the LBO structure, given how much debt Paramount already has as well, that perhaps gives the Warner Brothers board pause. Will they ask for something to cure that in some way? They're not going to guarantee the debt, obviously, but this idea that when you get near the finish line, will Paramount be in the financial
Apple.
condition it currently is, or will it be in much worse condition and therefore want somehow to not close the deal? That seems to be central to some of the concerns.
All right, so we were down. The markets bounce. And they sell into strength. I don't know. Just feels a little bit like distribution over the last few weeks, especially since we couldn't get back above 7,000. This is the third time we touched this level. We dropped a little bit lower. Back in December, right there is another level here. So we hit this level several times. 67.97. We're trying to hold on to 6,800. If they defend this level, we could get a nice bounce back.
And then the question will be, what does Netflix come back with? But it doesn't necessarily have to be just a pure price. It could be, if they want to choose. It could be, some have thrown out the idea that I've talked to about contingent value right, because so much of this has to go back to, and I know it gets complicated, to the value of the spun-off entity and the Netflix deal, namely the cable networks of Warner Brothers Discovery, and what they'll be worth, given how much debt they may have on them, they may be worth very little. And so is there something Netflix can do there to guarantee value, a so-called contingent
All right, GE with a nice bounce. GE Aerospace. Okay, so for the last week, we've just been sitting here above the 90 EMA, 21-day, 50-day. A lot of spaghetti below, but we're getting a bid here on GE. Watch GE. GE looks bid.
Both sides will continue to go back and forth. You're right. That is, again, now there is a lot of Mideast money there. That said, they don't have any governance rights in the overall company, but that certainly may be a concern. Paramount would come back with and say, hey, you're not going to get any trust approval. Simple as that. Their camp continuing to believe that at some point there will be a Section 2 investigations under the Sherman Act saying it's a monopoly and you're never going to get antitrust approval in the United States. So both sides will go back and forth, creating certainly concerns around the respective deals. The question is going to be, Carl, what the board decides to do over this next week in terms of how actively they engage and where they get to.
Right. Meantime, I was just doing the math on the drawdown for Netflix from the highs. That's like almost 45%.
Silver.
And almost 25%. Well, you can see right there, about 26%.
I would say
so yeah, they have lost
260.
Far more than they're paying.
260 stop.
$27.75 a share for Warner Brothers. Remember, it's just the streaming and studio business that they are buying.
We'll watch it. Getting more interesting though, and now we have some shorter-term deadlines to keep us busy.
We do, and and we'll keep an eye on our parent company as well, Versant, which is back to flat on the day, but figures into this because, of course, of the multiple that Paramount says you need to use to apply to the Discovery global businesses. Obviously, also disagreement around that as well, in terms of whether that is deserving of those businesses. By the way, Paramount's got a lot of cable networks also that conceivably are not in a great place. Is that MTV people watching that these days?
CCJ looking good there, Rob. Thank you. CCJ. Kamiko. All right, bounce at the 50-day.
not looking great for their their entertainment networks, but they do own CBS, as we know.
6,800. It's a line in the sand. We need to see 6,800 hold. All right, we're starting to see a nice bid. Calls or bid.
Still to come, while AI concerns wreak havoc for those software names, are investors overlooking one part of the market that might actually be AI proof? Plus, if you can't beat them, partner with them. Ford reportedly making a push
Okay, calls are bid now.
to bring some Chinese automakers to the U.S. Former Ford chairman
Okay, so Constellation,
details on the news that
CEJ, CEG. All right, Constellation Energy, CEG. Constellation off the low. Okay, Carl Catania. All right, Constellation Energy looking really good here. Constellation on the move. CEG. Constellation Energy. CEG on the move. What's Nextra Energy doing? That's been trending. That's being bought, accumulated by institutions. Nextra, from everything I've read.
Not seeing roadblocks as we grow. So we did take some time a couple of years ago to reset, make sure that we had all the market planning tools in place, make sure that we had the teams in place to do everything. But we're really in great shape to continue on that trajectory to hit 2,029 shops in 2029. So feel like we have the people in place. We have 475 operators, which is there are people who sit just above our shops and go and open a new community. So we're ready from a people perspective. I think as our brand becomes more well known, that developers are very excited to see.
All right, so banks, I think it was Mondo, you posted the 53.5 or 8.3 billion in liquidity operation by the Federal Reserve. The operational goal being a significant technical adjustment aimed at stabilizing short-term funding markets rather than a shift of long-term interest rate policy. So banks bouncing, no surprise there. It follows the official end of quantitative tightening on December 1st. Historically, such injections of capital by the Federal Reserve are viewed as supportive for risk assets like stocks and cryptocurrencies. Crypto didn't get the message yet. The Fed typically uses short-term repurchase agreements, repos, or treasury bill purchases to funnel cash to the banks and primary dealers. It's just a protective measure at this point, so protective of what we have to see. Okay, so knee turning back up.
Significant volatility have weighed on category growth and impacted consumer purchase patterns. And medical device company Danaher under some pressure after a report they're closing in on a nearly $10 billion deal.
Costco looking good. Costco.
Yeah, it's $180 a share. It's all cash from Danaher, which obviously does have.
Okay, Costco higher. Walmart, looking for Walmart to catch a bid too. Walmart's just sitting here looking for a follow through.
There was an activist in this name a couple of years back. They got a CEO
We got to hold on to 6,800. If we can push it back above 6,800, it's still very sketchy at this point. I would be reducing my exposure to the markets. That's just me personally. Sectors looked okay on Friday. A little weak today. Okay, let's take a look at materials again. Materials. All right, so it's in a bullish trend, but it's just kind of taking a break. Junk bonds. Okay, that's starting to lose the 50-day. Junk bonds.
Understanding on the main guiding principles during a second round of indirect nuclear talks today in Switzerland, but he said that does not mean a deal is imminent. Oman's foreign minister, who had hosted those talks in Geneva, said they concluded this morning with good progress and clear next steps before the next meeting. Meanwhile, the U.S. brokered talks between Ukraine and Russia were also underway today in Geneva. Negotiators are expected to meet for 2 days and discuss the major sticking point of territorial concessions.
Energy, CEG, Constellation Energy. Constellation Energy has earnings on the 23rd of February. Looking pretty good. Looking at 290 and 300. 290 and 300 is next levels. We're coming up against those levels now. Puts are still very much bid. S&P puts. S&P puts are much still bid.
Company. Their CEO joining us to break down the move later on.
Yeah, the banks are the shiny object for now, with the Federal Reserve injecting liquidity into the markets, 8.3 billion. That was noted by Mondo yesterday. Or was it this morning? I forget. Injections are viewed as supportive. That said, we need to hold on to this 6,800 level. Still looks like a bear flag for now. 6,800. Okay, we're below 6,800. MACD is still drifting lower. As you can see, MACD is still lower. Volume is okay. I had a lot of short covering. And then a fade this morning. I don't like the markets right now. Don't like it at the moment. Let's see. What is silver doing? Silver below the 50-day, looking weak. If it loses this level, silver, next level on silver is what, 48, 49, something like that. Let's just say 50. The 200 days down here as well. After that historic run-up in silver, this is looks like institutions trying to keep things up here long enough to reduce their. They don't want to all sell at once because this could really drop. This dropped, what, 30% on that big red candle on the gap down. Been consolidating for a couple of weeks. Just looks like silver is going to lose it. Okay, Tesla's still fading. What's Apple doing? Apple, I didn't want to chase Apple. All right, we just saw a little profit-taking candle right there. Little toppy candle on the Apple at the moment. Watch Apple. Okay, so S&P. I'm reducing my risk again. I'm still doing that this week. TRBCX, SPHD. Those are just off the highs. Looks like a little profit taking. SPHD, SCHD. Let's take a look at those real quick. Materials, XL. Let me just look at. Okay, XLP coming back. SPHD. SPHD. Okay, SCHD. Looks like profit taking. January 8th, we started to break higher on these. Yeah, it looks like you should take some off here. Micron. Micron's off 2.8%.
Names like Datadog that are seen as a beneficiary. They aggregate data for the big large language models. And now our attention turns to Palo Alto Networks, cybersecurity.
JP Morgan with a bounce. Looks good.
Actually address the threat of AI. It's been going on a mega acquisition spree over the past year and embeds agents to help their clients figure out and address cybersecurity threats.
Okay, JP Morgan, the banks, JP Morgan, insurance companies, broker dealers were off last week. Let's look at IBKR. Those were off. They're still off this morning. Schwab down a bit. Raymond James Financial, okay, down a bit. But the banks, JP Morgan, bouncing. Wells Fargo, bouncing. Goldman Sachs, okay. Travelers Insurance, Cincinnati Financial, Chubb. Okay, all of these look okay. I did notice they increased the insurance, my homeowners insurance. In the latest update on my account.
Right? It used to be,
Micron.
they'd say, Microsoft would come in and say, oh, a third of our code's being written by AI, but now there are entire tools that are 100%.
Tesla's still drifting lower. Tesla.
But I also think there's been this consensus over the past maybe 6 to 8 days that even if you're able to develop your preliminary user interface, that's not enough. Are you bringing in a Fortune 500 company? Well, where is your customer clientele? You may have the technology, but to then take that into a real business, that takes time. Let's discuss this further, this software disruption opportunities with Adam Silvershot. He's a former hedge fund manager at Coatue and currently managing partner at True.
Okay, what's we said Walmart was taking a break up here. Walmart, okay.
So we're just discussing what we're seeing across software. Goldman Sachs writing this morning, that's what's really hard for them to figure out is given how
S&P futures drifting. It looks like we're going to lose this level right here, folks. Looks like we're about to lose it right here. Let's take a look at VIX real quick. VIX. Okay, VIX is making new highs. We got the 2030 call vertical, VIX.
License-based model to cloud-based subscription model. The financials looked messy for a period of years. And the stock.
If we didn't have the financials, we'd be, I don't know. I don't want to say in trouble, but with most sectors looking strong. All right, we're already starting to fade the high of the day on the financials. So be careful. I don't know. When most sectors are not working, I pause. Okay. Let's see. Let's go here. Let's see what breadth looks like. Everything's pointing lower. Okay, so most stocks are pulling back. Be careful. All right, so we're making new lows here. S&P. S&P making new lows.
Observability is another one of those layers, and then data infrastructure is another one of those layers. And it isn't necessarily the model layer that's going to own agent deployment in the enterprise.
Okay, SPY. I do have December. Yes, I said that. I said December. I have December 650, 640 put spreads. The original idea was that, okay, so we know what midterm elections can do. A lot of people still talking about 20%. Brent's talking about a few things this morning that were things that you need to pay attention to.
Founders return to some of the publicly traded companies to help
put call ratio. Okay, these tend to top at bottoms. We're way up here.
You know, the Carl Eschenbach, who was running the Workday, for example, before him, don't. What do they add?
I think if you look at Google, for example, when Sergey Brin came back, large organizations, the founders have the ability to pivot and to help drive, new product cycles at companies that maybe as these companies grow and, get a little bit more ossified is harder to do without the founder in place. And so I think where you've seen the founder come back, that's a good sign for those kind of companies.
Bottom line is, though, if we can't hold on to 6,800, that's not good for the market. Right now, we're doing exactly that, losing 6,800.
From defaults might be weaker than historical precedents because these companies are asset light. Does that make sense?
I think that entry price matters, right? And so if you're financing a company at an attach rate of several times revenue versus an attach rate of several times cash flow, that'll matter when
Don't want that.
And so I think that one other
6,800.
attribute of a lot of software companies is they haven't been profitable, which can impact recovery rates. And so I think companies in the software space that have derated, they're either going to show dramatic reacceleration or they're going to show dramatically increased profitability, which will bear
MACD still
rates as we described.
drifting lower.
Turning point that many seem to believe, where we're sort of moving from AI as a novelty to clearly what is sort of infrastructure with tangible impact?
I think that you're getting more granular in the enterprise, and it's not a generic concept. You're developing task-specific benchmarks inside different kinds of companies, and you're seeing the kind of AI-native companies forward deployed into these big enterprises the way Palantir might have done years before. Many software companies that are AI-native are forward deploying into big businesses to figure out how to structure all of the various processes of these businesses to be able to leverage AI and deliver actual concrete business outcomes. It's not just
Okay, so we're looking at breadth across the board is negative at the moment.
So what does that tell you then about the
Okay, RSP, the equal weight. Equal weight is also giving us a caution signal.
Does that business, how are you thinking through the competitive threat of AI, or does it just need to change its business model and not rely so much on this seat-based model?
I think that's exactly right. I think as you saw the license model move to subscription, you're now seeing the subscription model move to more consumption or outcome oriented. And
Okay, are they going to suck a lot of people in here?
And not just have
What are they going to do?
cost or a cost plus.
S&P.
A company like a ServiceNow, it's not just a user interface, it's a network across many parts of an organization. It has third-party integrations, it has a data layer.
So much more fun podcasting when there is bullish flow. Bearish flow, people get positioned incorrectly. They don't take risk off. They don't reduce risk. We're not trending. We're chopping around, threatening support. If we lose support, this could get ugly real fast. We're already below 6,800. So just taking some things off. Maybe you don't have profits in some positions. And you're looking to accumulate some cash. It's not a bad idea. If we bounce, then you can always put it back to work. But for now, we're just like in this choppy range. Third time's a charm. We're going to come down here to the 6,700, 6,720 level. And then this level here. Okay, this level here, right near the 200-day. That's where I have put 650, 640 on the SPY, 650, 640. Put spreads. I'll add to that if we start to lose it if we get a bounce. The best I can say at this point is I would be cautious taking longs because we don't have a whole lot holding up the market right now. Okay, so XLB materials fading. This could fade for a few days back to the 21-day. Still stay bullish. I think it probably will. XLB, communications, XLC. That's down here at support. It looks like it's headed to the 200-day. XLC. XLE, energy. After a big run up, stocks like Chevron pulling back. Chevron over 2.6%. Chevron, CVX, Chevron. Okay, it looks like that's going to consolidate, pull back a bit.
When you have an outcome-based business model where potentially the whole sector is heading towards, and you have people and agents working together with
How you like that? Interesting. I took CVX off on Friday. Okay. I don't remember doing that. Okay. See, Electric Energy. Constellation Energy, big move here. It's got earnings on the 23rd. All right, if they're going to do it, let's just do it. We're trying to hold on to this level. Can sense people bidding up premiums out of fear that we could dump right here. The markets could dump. We're below 6,800. We absolutely, just like last week, we had to stay above 6,900 and we couldn't do it. We were risk off at that point, right? We said that reducing your risk made sense. We had been doing it for a couple of weeks. And now we talked XLB, XLC, XLE, energy. Financials are the only thing holding up, and that's starting to fade right now. So don't chase these. If you got profits, watch these closely. Industrials, these are holding up pretty well, all things considered. Caterpillar, holding up very well. Industrials, tech, XLK. Okay, that's not looking so hot. Looks like it's headed to the 200-day. So maybe a day or two from now, this will look a lot better. Maybe by Thursday, we'll be at the 200-day and we can bounce. That'll be a triple bottom. So that's something to look forward to in the future. Okay, so we got lows right along this area and the 200-day, all in this area. Okay, we definitely, RSI is weak. So is MACD and stochastic. Okay, these are weak. Volume is above average. Okay, tech. We did have some activity in the consumer staples. Even that's taken a hit right this moment. XLP. Utilities also got a bid last week. That faded from the high. We gapped up this morning. XLU. Healthcare. I don't know. I don't see a whole lot of reasons to get really active on the long side, folks. Consumer discretionary dropping off thanks to Tesla and Amazon. Okay, these two look like they're headed to, well, Amazon's already below the 200-day. Tesla looks like it's headed to the 200-day, descending pattern. We'll get an opportunity. It's just not right this moment. Reduce risk. We are risk off at the moment. Let's see. IWM is another risky asset class that we want to pay attention to. That's risk off right now. Bitcoin is risk off. Bitcoin is risk off. This does not look good for Bitcoin at the moment. Needed to at least get above 70,000 and stay up there. Started to trend. Not happening now. What else? Biotechs. They're holding, but I don't think it doesn't look like it's going to hold very well. IBB. All right, it's above the 50-day. Transports, IYT. Real estate, XLRE. Nah, looks like we're going to fade.
Ford CEO reportedly spoke with members of the Trump White House about a potential plan with Chinese firms to build cars in America through joint ventures. Joining us today is Mark Fields, former Ford CEO, former Hertz interim CEO, also a CNBC contributor. Mark, always a pleasure to have you back. Thanks for the time.
Okay, so SPY. I told you I have December 650s. 650, 640. Okay, I have a spread down here. Okay. So okay, so 650 is down here, 650. So I am long. Okay, so it's a put spread. Okay, so I'm long this put at 650 and I'm short this, so I get the spread. So maximum profit would be if we got down to 640. So I bought this, I sold this. That's in December. That was last week I bought. If we get a bounce, I would suggest reducing your risk. If you have shorter term positions, I'm not talking about long term stuff like TRBCX, which I've already started to take a little bit off of. SPHD, SCHD, those look like there's a little profit taking short term.
You think it's a non-starter at the end of the day?
Well, I don't think it's a non-starter. And listen, from Ford's standpoint, if you think about it, they got out of the low-priced, small and mid-sized sedan market. This could be an option for them. But I think whether it's this or any other form, all the automakers, the domestic automakers, are trying to figure out a way. How do we compete? It's not exactly if you can't beat them, join them. But at the same time, how do you position yourselves potentially for these vehicles to come in and be able to control that, or at least get a piece of the profit if that's the case?
Mark, I want to get your take on something else kind of related, which is the news.
Risk off.
I think,
If you came into the day looking to take any long positions, I would suggest just take a break at the moment. Curb your expectations because the markets do not look conducive to longs at the moment.
Manufacturers and their ability to compete internationally.
Well, clearly, it gets rid of a number of constraints to compete what I would call in the short to medium term.
Okay, we're starting to bounce.
Right, it allows particularly the U.S. automakers.
All right, chopping people up for sure. Let's see what up down volume looks like. Still 3-to-1 down volume on the Qs, 2.5, 2.25 on the SPY, 2.3 down. Everything is down volume. So any bounces most likely will get sold. Got a nice little power up right now. So we got to get back above 6,800. We're trying to get back above 6,800. As you can see, S&P. Reduce your risk. Reduce risk. Let me just take a look at some longer term things. Longer term. Okay, so TRBCX was like 4 weeks ago. We decided to reduce our risk here. Okay. So this is starting to play out. It's exactly what we were looking at. Okay, so I'll adjust some of this, but for now, we're about 10% off the high. We're exactly 10% off the high. Ooh, man. Glad I paid attention to that.
You could argue that's a bit of a subscription service because you have to give the vehicle back. but I think it pay as you go on a monthly basis. You know, I'd have to understand what Tesla is actually proposing, but I wouldn't exactly rule it out. But Tesla pure subscription models have not done well here in the U.S. in the past, which doesn't mean it may not work in the future. It may be a variation on the theme of things like leasing and other things that are in the marketplace right now.
Okay.
Mark, back to the subject of Chinese.
So there's definitely distribution up here.
Previously, I know Ford CEO Farley has gone on and on talking about the level of quality and the like of some of these Chinese competitors. I'm curious what you think, whether you've had an opportunity to ride in any of them, and therefore what your thoughts are about that level of quality we're seeing coming from China.
Bitcoin trying to bounce. Bitcoin.
You know, you got to be impressed with the design, with the technology, particularly the digital and communication technologies that they've incorporated into these vehicles. Quality-wise, don't know. You know, it really comes down to long-term quality. Really haven't seen any data on that yet.
Constellation Energy, CEG. There are some bullish undercurrents in the energy space. Electric utilities.
The single biggest capital allocation mistake that's happened in the automotive industry. And, you know, I think this really comes down to a lot of lessons learned EVs and potentially Chinese vehicles coming. You know, the OEMs need to have, you know, strategic flexibility around avoiding all or nothing bets on one particular technology. They got to keep their product planning flexible and don't kill off the revenue producing vehicles today. But the Chinese vehicles are very good. And I think that's why you see Ford and other domestic OEMs figuring out
Silver and gold. Let's check those out. We wanted to pay attention to these. Gold was looking a little more bullish into the close on Friday. Maybe we were ready for a bounce. Not happening. Starting to show more weakness. Silver, same thing. Silver below the 50-day, losing these levels. You can see that lower Bollinger Band starting to open up. RSI is below 50. MACD and stochastics selling off. It's not really high volume, so silver looks like risk off on silver for now. Junk bonds looking worse for wear. This is telling me to be cautious. All right, so Bitcoin's trying to bounce. Futures are bouncing. Oh boy. Okay. Again, stocks that are showing strength. Norwegian Cruise Lines, airlines, alcohol, Constellation Brands, let's CMG, CEG, Fiserv, Dow Jones, Apple's still hanging in there. Apple, Microsoft turning back up. Okay, maybe they saved this. Maybe they save it. We need to get back above 6,800 though. With all the sectors looking as bad as they are, I can't see anything moving here. There's a few things. Cisco, nope. Coca-Cola, taking a breather. Amgen, Amazon. Some people looking at Amazon down here. If the market moves lower, it's going to take a lot of this even lower. So we're below the 200-day Amazon. That is what? A 21 PE versus Walmart's 45 forward PE. Walmart. Okay. Okay, I have to take a 2-minute break. I'll be right back.
Dave actually was previously leading the supply chain for Walmart and their e-commerce division. So it's a very kind of clear focus on driving profitable growth through e-commerce, which again is driving most of the growth. They posted a 4.5% same-store sales number in Q3. Of that 4.5, 4.4 of those percentage points were driven by e-commerce. So that is where the growth is, and I think that's where John is most likely to be focused as we look ahead, because the store business, while it's very, very important and serves as sort of a nexus or a hub for its e-com business, the incrementality, if you will, is going to be stemming from the e-commerce growth.
So I got to ask you about Target before I let you go, Corey, because there, as I said, Michael Fidelity taking over, and you've held on to hope for this one, and it hasn't paid off. Is it finally going to pay off under him? What needs to happen there to turn Target's fortunes?
Well, it's done well in the last several months. But
I mean, you look at a 5-year chart of this thing, Corey. The last several months are like a blip.
That said, I think that what we were looking for Michael is very simple. And I asked this question on the last earnings call. Is one word: change. Because that's what the market wanted when we got the CEO appointment. They wanted an outside perspective. But our thought is you don't necessarily need that. Let's look at what he's done so far to drive change in the business. He's taken down prices on thousands of items across the store. He has communicated that he's cutting up to 10% of headcount at the corporate headquarters in SG&A. So he's committed to driving market share through volume and lower prices, and then being disciplined on cost. And then lastly, they also talked about upping CapEx by up to 25%, going from $4 billion spent to up to $5 billion spent on things like stores, supply chain, AI, automation. I mean, these are the kinds of things, and Target owns almost all their real estate, by the way, so they have great assets that they can leverage within grocery, within general merchandise, within their private label business, and all of this kind of comes together, we think, very nicely, especially at this valuation, which is incredibly undemanding in our view, to help drive change, higher sales, higher numbers, and get back to more profitable growth for one of America's leading retailers, in our view.
SMJF may rise in 10 seconds. Valuation. I love that descriptor, Corey. It's great to see you. Thanks a lot for joining us. And of course, we'll be watching for those Walmart and eventually for the Target numbers too. Thanks.
Thanks, Julie.
That's it for Market Catalyst. I'm Julie Hyman. Thanks for watching. More Yahoo Finance.
JTCG.
February is bringing sweet savings to Sparks Toyota, South Carolina's #1 volume passenger car dealer. Save big on new Corollas, now only $169. Yes, $169 a month. You can even try before you buy with Track. Toyota's exclusive Rent a Toyota program. $169 a month for new Corolla. SparksToyota.com.
All right, so we're trying to get back above 6,800. Sectors look terrible, though. Sectors look terrible. Do we see buyers come in? I don't know what would prompt them to do that. We do have the Federal Reserve cash infusion, but that's more for supportive liquidity for the banks. All right, so we just have to play this out and see how we hold this level. So far, okay, hedge flows back up, hedge flows back up. $6,800. Bitcoin's managing a bounce. All right, so we're catching a bid. Markets are reversing, pushing back up. Microsoft looking a little better. NVIDIA looking a little better. Apple's at the highs. Amazon's pushing off the low. I want to see more buying in Amazon before I do anything. What do I mean by that? I mean, I want to see institutions starting to step up and buy. I want to see volume. Look at the selling volume. That's Amazon. That doesn't look appetizing to me yet. Amazon. Okay, so at minimum, I'd like to see a base. I mean, this kind of reminds me of Microsoft. You know how Microsoft plunged lower? Okay, Microsoft plunged lower, and it's attempting to make a base down here. Microsoft still trying to do it. I mean, Amazon looks very similar, right? We need that leg higher first. Not really going to do anything there. Apple, inside day. Still don't trust Apple either. NVIDIA, got earnings coming up. Just chop. There's no trend. Remember the days when when NVIDIA would trend? Remember that? Okay, over here. Remember this? This is a trend. This is this is not a trend since September. August, September, this went sideways, flattening out. Everybody's questioning whether or not NVIDIA can hold on to these leadership. It is bouncing. I just don't like what I'm seeing. All right, S&P is trying to hold on to 6,800. Absolutely must, just like we talked about, absolutely must hold on to 6,900. We couldn't do it. I don't know. If I had very large positions at this point, I was betting on a bounce, I'd be more concerned that this holds and doesn't lose. If it loses it, we're 6,500, 6,600 seems like it's in the cards. RSI below 50, MACD, stochastics. These don't look supportive. Volume looks like institutions. This looks like distribution. There goes NVIDIA. Okay, the S&P charging higher now, S&P.
It's the first I've heard of it, but I kind of like it. I mean, like you said, yes, I do have a few years on Wall Street, so I've seen a few cycles.
Okay.
They're all dramatic. They all are, to use my daughter's word, scary.
Okay, Coca-Cola. All of these defensive names. Looks like we got people taking profits. Coca-Cola. PepsiCo. PepsiCo pulling back. That looked really good 3 weeks ago. Consolidated. Same thing with Chevron. Chevron consolidating. So that one looks like it could come back a bit after a nice run up. Still very bullish on this one. Constellation Energy. That's looking really strong. Constellation. There goes. We got a bid in Bitcoin stocks. IBIT out of the corner of my eye. I just caught a glimpse. IBIT. Buyers at the low of the day. Still basing. This is what I'm going to see Microsoft do. And Amazon needs to base and then push off of this level. Volume needs to pick up. Still not there yet. But intraday coming off the low pretty quickly. So for a day trade, not a bad idea. BITX, Bitcoin 2 times, turning back up. Riot. Moving back up. Amazon. Nice move off the low, Amazon. I just want to see a base. Okay, NVIDIA doing a nice job of coming off the low. NVIDIA. S&P coming off the low. S&P 500. Back above 6,800. That's good. Good defense. Okay, Google turning back up. Tesla. All right, Tesla. sucking the bears in and having people sell their shares down at the low. Oh boy, hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, February 17th. Haven't done a whole lot today. Concerned about the 6,800 level. Shouldn't be overlooked. 6,800 is a big level. So if we get back above it, we could see some more shorts cover. Tesla's starting to bounce now. So is Netflix. Supposedly Netflix is going to, I guess they're a front runner for the Warner Brothers Discovery acquisition. The way price action, I mean, we're down in the 70s. Wow, I can't believe Netflix is down to $76. Netflix looks absolutely terrible. Netflix. What's Oracle doing? Look at Netflix. Just slide. Hard to believe this was a leader. What's Disney doing? Disney. Most stocks are down. Most stocks, they might be bouncing right now, but most stocks are down. Nvidia, while it is bouncing, range bound, flat is no trend. Constellation Energy, I keep focusing on this one because we have a nice bounce, follow through for 2 weeks. Headed back to the 50 and 200 day. Those have crossed over. Okay, silver. Okay, we're getting a little bounce on silver. Nvidia still going. Okay, Nvidia coming off the low. Tesla looking good, coming off the low. Tesla. Futures looking good. 5, 15, 30, and 60 are now on buy signals. All time frames are on buy signals right now. Now that we're back above 6,800, so they defended this. They dipped it below. Now they're reversing it back up. Okay, cool. GE having a good day. Some of these stocks are doing okay. I don't want to sound too pessimistic. I believe, Bill, you're in this one, right? I have some GE as well, but it's a small position. GE taking off like a bandit. There goes, GE looking really good. So these Bollinger Bands might actually open up. We've got RSI rising. GE looking really, really nice. GE, nice.
I don't think we're going to run out of workers here. I'd say it all the time. 35 years ago, when we created spreadsheets, we were worried about what happened to the accountants of this world. We have more accountants than we did 35 years ago. And I think that's what's going to happen today. It's a different job, and that's what we're seeing.
I mean, all of that said, I was really struck by two pieces last week. One was in the Atlantic, and sort of looked at the real differentiator in how this technological wave is going to hit is going to be speed, right? Our company's going to have time to adapt, but we're just so quickly that neither they.
All right, you're looking at Cisco, Tony. Cisco. It's holding at the 50-day, and you're looking at what else? Hewlett Packard, HPE, Dell. Yeah. GE Vernova. Nice pop. Futures, man, they just flipped the switch on futures.
I think both can be true, right? You see this freight, it is a freight train, right? You're hearing all these stories about people who work at these big companies and what they're creating, and they're talking to their friends or spouses and saying, oh my gosh, you have no idea what's coming. I think we're soon going to say, we're not saying, oh my God anymore, because we've heard it so many times. The reason I embrace it is just because it's happening. We saw this earlier in the 2000s with the internet and what it did to some consumer companies and what it did to bookstores, obviously, which is what the first thing.
Caterpillar, it's trending. Caterpillar's trending. That's what we need to see. We need to see NVIDIA doing this, right? That's what I want to see. This is much easier to trade than NVIDIA, which is doing this. I mean, why would you want to trade this? I understand intraday. You know, we got day trades. You can definitely pick it up when they start to bid it. Okay, I can see this kind of trade intraday, NVIDIA doing that, but I much prefer a trend. Let's see what SPHD is doing now. SPHD. Okay, SPHD. Still a big outside day. I would reduce my risk in SPHD, SCHD. A little less, but it's still a bearish engulfing at the highs. Reduce some if it continues. We can always get back in. You should be up quite a bit though since January the 8th. January 10th was it? 10th? No, January 8th is when we got in. Chevron did dip a little bit, but looks like it's starting to bounce now. Micron turning back up. Micron, big move on Micron off the low. Okay, Micron. Dipped this morning, big reverse. A lot of these stocks shaking people out.
Plus 800.
Oh, high tick alert. High tick.
Mark Zuckerberg raised his hand 5 or 6 years ago, begging them to regulate them because it was going to be good for the company. Never happened.
Well, isn't that a problem then? If Congress is not going to do it, and you have this technology that we're seeing now in the form of AI that is so unbelievable.
Okay, we did get a stick save here. The markets are turning back up. However, sectors still look pretty ugly. Let's look at them again. XLB. Okay, nice bounce. XLB. Let's do it this way. Let's look at this. Because this will find stocks that are even bullish inside of sectors that are not looking that great. All right, so let's go to the market. All right, so you can see Amazon up 1% off the low. I still can't believe these cruise lines are doing so well. Norwegian Cruise Lines up almost 9%. NCLH, CCL.
Where people are saying we got to wake up to this fact. Hoping for that is hope's never been a great strategy, but I'm an optimist. People who work on Wall Street generally being a pessimist is a bad idea because things generally work out.
Mara, let's see, Mara. M-A-R-A, M-A-R-A. Doji. Trading 750. Could see the high of the day.
High tick alert plus 800.
750.
It looks ugly, right? Microsoft down 17% just this year. Oracle down. Palantir down 26%, although obviously from Shopify down 30%. So if I'm an investor, and you have the benefit of conversations that you're having with businesses that are in technology. How do I know where to pick up things on this board or on any kind of tech board?
SMG. It's hard. I think some of those. Like you said,
Okay, GE is still running. GE running.
24 and 25, and obviously, the bigger they are, the harder they fall. I think you could say that somewhat about Oracle got so much.
Wow. Oh, man, that's looking really good. Intel, big bounce. Bounce. Micron, Intel, NVIDIA.
So the issue is, are there people who AI are beneficiaries that we have already
Okay, nice move on the S&P off the low. Well, that was unexpected. I like it, but that was unexpected. Okay, market. Generac, that one gapped up last week. Generac Energy, that together with Caterpillar, Kohler, a lot of the diesel or liquid natural gas fired generators are getting a lot of attention. Cummins, they can make them as well. Cummins, Caterpillar, GNRC. GNRC is just ripping. You don't see this very often with GNRC. It usually stays in a base. But we're breaking above multi-year highs. GNRC multi-year breakout.
Microsoft reinvented itself. Apple reinvented itself. To some extent, those are the only two companies that I've seen.
That was a pretty sharp reversal with the S&P. Pretty sharp reversal here off the low. Okay, so they're defending 6,800. Can we bounce back up into the range? I have to be honest, I didn't think it was going to be this easy. I don't want to call it easy, but this does look pretty good, right? This is what we're dealing with. 3%. Back down to 3% again. Is this going to be enough for the markets? Stochastic RSI. That's 7 distribution days above average. I don't know. So I'm still in the want to reduce my risk mode. Why would you say that, Benny? Why are you in it? Because just because we're up a little bit right now, I don't want to get too blinded by the fact that markets are not trending. They're sideways chop. We're in the lower half of this range that we've been banging out since January. We have some good news. The Fed injecting some $8 billion worth of liquidity, $8.3 billion worth of liquidity by the Federal Reserve. That's meant to shore up the banks, and we got a nice bounce. If you looked at the 10-year, you could see when it happened. The news hitting. Okay, you can clearly see it. 10-year, you got whacked. The bonds like TLT at highs. I wouldn't buy bonds up here. I'd see what's going to happen if we pull back in or not. Junk bonds. Let's see if junk bonds bounced. Okay, junk bonds still not giving us a super bullish signal, but we're back above the 50-day. S&P starting to fade a little bit now. S&P, very nice recovery. MACD crossed back up, volume picking up. It's not as much as it was earlier. Or I should say late on Friday. Late on Friday, we had this spike in volume. That's about what we were seeing this morning, volume-wise. MACD is bullish. We defended 6,800.
High took alert plus 8.
More high ticks. More high ticks. VIX dropping off, looking good.
We've seen that here at Citizens, and we're seeing that in our backlog. I think it's not just going to be a tech market. I think it's going to have a variety of opportunities. We had one that we took public earlier this year called Equipment Share. That's a quiet period today that's done extraordinarily well. I think what that's telling you is
All right. Nice recovery. S&P continues here. Cheap calls with 25 cents. Cheap calls at 25 cents. They're $1.33 now. The 6900s. I've just been following the 6900s. That's just what I picked to start the day. Okay. All right, looking good. S&P. Nice recovery. Can't believe this bounce. In terms of the intensity, we're still pushing here. S&P still pushing.
Make sure they price these offerings properly. Some of those cautionary tales that once got canceled, frankly, are a good sign because it shows you that pricing matters.
Mark, this has been awesome. Thank you so much for spending so much time with us. Appreciate it.
5, 15, 30, 60 are on buy signals. Tick cumulative is actually green, so that's another confirmation signal. I'd like to see more. From the breadth side of things. Okay, let's go take a look at breadth real quick. GE still looking really good. Let me just check out GE real quick. I have a position in GE, but it's not that big. I say that. Let me just double check, make sure I have GE still. Yep. Okay, GE is at the high. Just caught it out of the corner of my eye. GE. All right, that looks good. Nice bounce on GE. I got June 340 calls. Okay, so that's a little bit out of the money, but we're expecting to see this break higher. RSI is rising. MACD stochastics looks good. There was a little selling last week. Made this a little iffy. If we had lost the 21-day or the 50-day, we probably would have got stopped out, no doubt. Bitcoin, nice bounce in Bitcoin. Can we follow through? We're stalling right now. We're stalling at the moment. Looks like it's nice out. I see the neighbors walking around with no jackets on, so. Okay. MACD cross. All right, got a fair value gap here. Can we get some more out of this? Come on, let's do this. MACD is still bullish. Need to see more volume. All right, so
Tick alert plus 800.
more high ticks. There's a lot of volume coming in. Calls are bid. Calls very much bid. There we go. A little bit more upside. So we were up quite a bit this morning after the initial move lower. Can we get back to 6,900? Probably not. We got supply overhead from Friday coming into view. MACD looks good. Okay, Tesla looking good. Tesla off the low. Tesla looking good. Hedge flows continue to look good. We're headed higher. S&P. I reduced a little bit this morning. SPHD. Constellation, I'd like to add to that one. That's looking super strong along with GE. Those two look really good. GE. Okay, GE, nice bullish. Look at the size of that candle. Wow. GE, $15. Okay, looks good. GE. Let's look at the 60-minute. You always want to keep an eye on your 60-minute. So consolidation above and below the 60-minute for the past few trading days. Now today we're breaking out of that pattern. Okay, Tesla had to get back above the 20 EMA, still not there. Amazon, same thing. Amazon's just about to turn here. You see that? Amazon's trying to get above the 20 EMA on the 60-minute. This could be a multi-day run setting up off the low. Microsoft, MSFT. Still needs to get above that 20 EMA, and that 20 EMA needs to turn up. If the 20 EMA turns up, it'd be a product of price, of course, but we could see a multi-day rise back up a little bit higher as we base down here. Looks good. Come on, let's go, S&P. SPY. Big range. Everybody knows we're in a range. Everybody knows we're in this range. Oops, I don't want us to do that. Okay.
Hi, took alert plus 800.
Looks good. S&P looked good. All right, Micron topping out right there. Micron. What time is it? 11:26. Trying to push a bit higher. Hedge flows. It looks like they shut it off for now. Hedge flows.
Workloads on our platform. We reference Sierra AI specifically, for example, building different kinds of things, not just on our infrastructure, but also incorporating intelligence into the speech-to-text, text-to-speech workloads that they're creating for their customers. And so I think what's going to play out...
60 minutes still pushing higher. 60-minute on the S&P. But hedge flows have tapered off now. All right, puts are stabilizing. Calls, looks like they're still taking profits in the calls at the high here.
I think we stand to be an AI winner over time. I think investors appreciate that.
That's a really interesting point. I wonder, to the degree that voice AI truly innovates, what does that tell you overall as AI sort of feeds its way into the economy?
Oh, I think we're very early days in terms of the AI opportunity more broadly. I mean, I think voice is the easiest point to start, and I think it's so natural because it's just
UNH off the low. I just caught that out of the corner of my eye. UNH. Big reversal off the low. Looking at Microsoft, maybe not at this extent, but this is the kind of base I'm looking for Microsoft. Something like this. Obviously not exactly the same. Two different companies, two different market segments. But you get Microsoft looking like this, and it's just kind of sitting here, and people saying, I'm not interested. And then you get a multi-day rally off the low. Volume starts to pick up, MACD stochastics, RSI rise. That's the signal I'm looking for Microsoft. Okay, Microsoft, nice bounce at the low. Tesla, same thing, Tesla. Hate this new interface. Tesla, basing. I'd rather buy Tesla down here than up here at the highs. That said, I am watching Tesla. I do have a small TSLL shares. Why is everything small, Vinny? Because we're not trending. We're sideways range, right? We're not trending like we were. We're not trending like we were over here. This is a trend. 2025, that was a trend. Now we're just kind of sitting up here with the expectation that this is distribution and that any day we could wake up and this could be kerplunk down to 650. That's why I have those puts. Okay, we're starting to back off now.
And I can tell you that's something that Twilio is very focused on for our own business.
Speaking for the sector, I'm just curious, do you see consolidation at some point? And if so, you know, the idea of take privates across the industry, are you hearing anything about that?
Not a lot. I mean, you know, look, again, while asset values are down and certainly, you know, some of the customers that we serve, like we're seeing asset values down with those guys. The reality is that when I look inside of our own customer base, which I think is broadly representing
UNH. Yeah, UNH looks good. UNH.
performing really, really well. They put up
Nice bounce, UNH.
really, really good print just over the last few weeks. And so I do think some of this is overblown. I do think there are some companies that are probably at risk as well. But again, broadly speaking, I think the economy is going to be an AI beneficiary, and I certainly think Twilio is.
Well, we appreciate you taking the time.
Are your kids going to Indiana? I noticed Japan.
Well, look, you know, we're national champions, so I had to kind of wrap that. And my son is there right now, and my daughter's going to Vanderbilt next year. So thanks for that.
Awesome. Cosima, we appreciate you taking the time. A lot happening in this sector. Your guidance is truly appreciated. Cosima, CEO of Twilio.
Thank you.
We did hit session highs a few moments ago as the S&P almost got back to the flat line. Let's get a news update with Kay Rogers. Hey, Kay.
All right, I'm going to take it over, Carl. Amid U.S. and Iranian nuclear talks in Geneva today, Tehran partially closed the Strait of Hormuz, citing security precautions as it conducts military drills in the region. It's the first time since President Trump took military action back in January that Iran has shut parts of the strategically vital international waterway, which does connect Middle East oil producers with markets around the globe.
Okay, what are we going to do here?
Petition to revoke the safety status of processed refined carbohydrates unless food companies can prove they are safe and do not lead to health issues and obesity. Health and Human Services Secretary Robert F. Kennedy Jr. said over the weekend he would take up the request to remove corn syrup and dozens of other sweeteners and starches from the list of ingredients in the category of quote-unquote generally recognized as safe. And a federal judge in Pennsylvania is ordering the National Park Service to reinstall a slavery exhibit at Independence Park in Philadelphia. The exhibit was dismantled last month in response to President Trump's claims of anti-American ideology at historical and cultural institutions. The order is in place while litigation continues. Carl, I'll send things back over to you.
All right, thanks, Tom. Meantime, the stock and crypto trading platform eToro is coming up on the other side of the break. Stocks higher after an earnings beat. Crypto trading volumes taking.
Can we get another higher high? I don't think we're going to make it through this level right in here. This looks pretty formidable overhead. Starting at where we just got rejected at 68.50, 68, 68.60, 70, all the way up to 68.80. I don't see us getting through this level. If we do, that would be something else. But for now, looks like bear flags off the high. Futures, 5-minute sell signal. Tick cumulative looks pretty good. Okay, I'm going to leave my vote until later after lunch. If we can follow through, we have to stay above 6,800. That's the bottom line. 6,800 is a must level. Okay. Micron fading from the high. Tesla fading from the high. So people who chase this late, if they missed this first run up, if they didn't buy the low in that reversal, people that bought it right here are starting to question why they did it, why they chased. We got a fair value gap. People were chasing through this candle right here. You can see it very clearly. Okay, fair value gap. Fair value gap is a 3-candle pattern. Okay. So you get this first candle right here, this big bullish candle. That's actually a fair value gap too. You take this candle and the third candle, which is this one. Look at the middle candle. There's like a big gap. If you would remove this big green candle, there would be a gap between this candle, this green candle, and this red candle. fair value gap right there. It's just like a gap, just the way they call it, what they call it. So this is a fair value gap. Sometimes we'll come down and refill that and then proceed to continue on the prevailing trend up. That's what it looks like we're going to do right here. Okay, fair value gap. You can just call it a gap, except that there's a candle there. So gap right here, fair value gap. Don't want to mislead. Fair value gap. Okay, fair value gap. Okay, let's see what we're going to do here. A lot of flights coming into Myrtle Beach. Bitcoin's looking a lot better. I will say Bitcoin looks good. So check out Mara, Riot, BITX, IBIT, all of the Bitcoin related assets that you could trade. Those it looks pretty bullish off the low here. We've been moving sideways for 3 weeks. Can't seem to get above 70,000. So we're watching that. We're at 67.9 at the moment, 67,900.
That is going to happen. It doesn't mean necessarily that the whole software sector is going away, but we are seeing also investors, the market that is also.
Welcome back to Money Movers. Watch shares of eToro today up almost 18%, getting a nice boost after the trading platform posted its third consecutive earnings beat in Q4. Crypto trading, though, in January did take a hit when compared to last year. The total number of
All right, a nice bounce. Fair value gap got filled, or got tested anyway. Didn't get filled. Puts are losing their bid. They're dropping off. Calls are catching a bid. Calls catching a bid on the S&P. Bitcoin looking much better. Stocks are looking a lot better now. Had a very negative tone this morning. Now we're starting to look a little better. Stocks like Walmart, though, aren't doing much. Walmart pulling back. Chevron, the energy stocks. Okay, they're starting to catch a bid. ExxonMobil. Okay, BLO. Those ran up over the last several weeks since January. All of January. Let's see what's actually doing the best right now. Okay, so these still look pretty good. General Electric up 1 point. At one point this morning, General Electric up quite a bit. Let's see, S&P. GE, 4 1/4. That's a big candle. 330. Oh, we're right back up to the highs on GE. Recent highs. GE, Constellation Energy having a good day. That looks like it's going to trend for a few more days. Constellation Energy. Whoa, what a move on Constellation Energy. Very nice.
But more than that, in the tokenization of the entire financial services industry. And when you think of all assets over $100 trillion being tokenized and moving on chain, and that's quoting SEC chair, that's a huge opportunities for companies like eToro, or both on the equity side, regulated and security firms across the globe, around the world, and as crypto native companies with blockchain capabilities.
I guess the speed at which Bitcoin has sold off has been quite surprising. Yoni, can you describe the profile of the customer who's been at the forefront of the recent selling, and I guess if that helps us understand, where crypto goes from here?
Sure. So again, on the long term, I believe we'll see significant higher prices in Bitcoin and Ethereum. This is for us the fourth cycle. We saw
Constellation looks good. Bitcoin. Let's just look at BITX. This is 2 times Bitcoin. Okay. Yeah. Let's go ahead and take a look at Bitcoin. Got to get above 70,000. If we can get above 70, 72, we can start to see higher highs and volume pickup. Then I'll be more comfortable with Bitcoin. All I have is BITX right now. It's not a big position. A lot of my positions are not that big. I'm talking about my trading account, investing account. Just kind of reduce some exposure. When TRBCX started to lose it, I started taking some off. TRBCX. Okay, so if you look at the weekly TRBCX, this is heavily weighted. The top 10 are heavily weighted in the big cap blue chip growth stocks. Okay, hence the name T. Rowe Price Blue Chip Growth Fund. Okay, so these are not looking as good. If you look at the New York Fangs, that'll tell you the same thing. Okay, these need to. We got a hammer now. Maybe we start to build something. Okay, what's over here on the left? Let me see. Let me go out 10 months. Yeah, there's really nothing down here as far as support. We had this big trend up. Now we have a trend down. It's like a big curve. Let's look at the New York Fang. NYFANG. Look at this on the weekly time. Oops. Don't want to do that. Let me change symbol SPY and go back to New York Fang. For whatever reason, it doesn't give me a clean chart. Okay, New York Fang. This is pretty important. Okay, so now let's look at the weekly. Weekly trend. Look at this. 50% retracement. Okay. 50% retracement on this one. From this low. 50%. Okay. Coming into view. I guess we got something there. A previous breakout level. I guess that's support in this area. Okay, so maybe something going on here. Let's do this. New York Fang. Okay, so right in this area.
Whether or not you're confident that policy can help sort of restrain efforts to engage in fraud, or even put, military units at risk, for example, as they bet on outcomes regarding geopolitics.
New York Fang.
Any wave of innovation brings also risks, and risks bring together usually regulation. In crypto market, I'd say that's very similar to financial services market, just at a much wider, faster adoption than what people are used to in Wall Street. But in 2017-18, we saw the ICO market. The ICO market dropped when the markets dropped. In 2021, we saw NFTs, which were quite a craze. Everybody's bought their apes and their punks and their pudgy penguins. And in each of those, you see those sites.
Okay, what is these guys talking about?
Microsoft and Google and Meta and so on. We are going to continue to follow the Warner Brothers story, which I'll tell you about in a minute. Apple was rated with an outperform of 350, has its special Apple Experience Day on March 4th, so mark your calendars. Of course, there'll be more on some Mac updates, but also about how they'll have new video podcasts. We'll be getting more on that. Elliott Management jumping into a stake.
Okay, let's look at, speaking of Rick, let's take a look at his slow-mo rule. Okay.
the minutes from the Fed, and so much more durable goods. And I'm looking forward to it. And also Walmart is one of the earnings reporting this week, so I'm looking forward to that.
Yeah, certainly a lot to look forward to, but I know that you know my love for this ongoing Built for Hollywood saga that is Warner Brothers Discovery and its acquisition. And we do have an update here. Can you take us through the latest?
Absolutely. I mean, I feel like I need the emoji that's just sweating because it's another moment in this huge, long soap opera. I mean, we're still seeing that it's going to be Warner Brothers Netflix. However, there is a 7-day waiver, a 7-day period until February 23rd that Paramount Skydance could come in and wow everybody. So far, not happening. Gone from 30 cents to 31 cents. They offered a 25 cents ticking fee. I never heard of this before. If this thing doesn't close by the end of 2026. So they have the ability to up the offer and make it somehow more attractive.
Tesla, high or low, trying to print.
Is sending out the mailing proxy materials so that people can vote on March 20th. So it's a big deal. I mean, they still.
Okay, so slow-mo. Let me go to 4 months, a little closer view here.
Netflix does have matching rights if Paramount comes out with something wonderful. Netflix also said that some of the funding that Paramount's putting together, they find risky for national security concerns. So this, and also the $31 from Paramount Skydance, they said that may not be their final offer. So we may get more between now and February 23rd. So keep it here on Schwab Network, and Marley and me and everyone will keep you abreast of this because it is an exciting story and a really big one, an important story as far as mergers and acquisitions go as well. Marley?
Yes, we certainly will, Nicole. Netflix just trading marginally lower today. Paramount Skydance seeing the biggest move to the upside. They're trading up 7% higher on the news that they will have 1 week to participate in discussions with Warner Brothers. Warner Brothers also about 3% higher on the day. Nicole, we appreciate you breaking that down for us. Nicole Petalides. And now it's time for our disruptors. George Tillis, our senior markets correspondent, here with today's company. We're talking about Palo Alto Networks. They've got their earnings coming out after the close. We'll, of course, have them live on Market on Close. But what can we expect, George?
Well, this will be interesting. I mean, if you look, Marley, going into this earnings report, some of the analysts
Still feels like distribution.
like Truist reduces their target to
Nice that they got it back above 6,800, but
or lower their target at 205. I think when it comes down to for Palo Alto, which is still one of the leaders in endpoint cybersecurity protection and cybersecurity analytics, capital expenditures have been relatively high for the business. But I think what analysts will be looking for, irrespective of the top line.
oh boy, hope everyone's having a good day. I need to stick my head outside, get a breath of fresh air. So I'm going to take a couple of minute break. I'll be right back before the 12 o'clock hour. Give me 2-3 minutes, maybe 5 minutes tops. I just want to get some fresh air. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, February 17th. Give me a second and I'll be right back. Give me 5.
Despite Chippy having knowledge of Norwegian from his time on the board, it's way different managing a cruise line day-to-day. It's way different than managing Subway restaurants. Those that win in the cruise line industry are the ones with deep experience and deep relationships. I've learned covering this industry for about 15 years. Norwegian could use a more experienced deckhand as its stock has been pummeled the past 5 years despite strong post-pandemic cruise demand trends. Royal Caribbean is doing cruising better, getting higher income cruises because of fancy, huge new ships. Carnival, meanwhile, has become a destination for the youth of America for cheaper packages that promise one big party on board. Activist investor Elliott is now on NCL
his deck with a fresh 10% stake and a whole list of improvements he wants to see from Chidsey. It is also blasted the CEO choice, according to a letter Elliott sent Norwegian board this morning that I checked out. Elliott thinks the stock could rise 159% to $56 if the company makes sweeping changes. Let's get the roundtable chime in here. Franchini, Nesberet, and Brooke DePaulo. Brooke, I'm coming to you because you did that interview with Chidsey. You were following Subway. What is he all about?
I mean, this is a gentleman that certainly steps in and looks to turn around the company, and that's really what we're seeing here with this new pressure, especially from Elliott Investment Management. We need someone who will certainly make changes right away based on the coverage of Subway during Chidsey's tenure. This is someone who steps in, ultimately makes changes quickly, and then leads to more profitable growth. We saw Subway start to regain some same-store sales momentum, ultimately get bought out all under his tenure. And certainly this is something that we will look to see and how many changes he'll make quickly as the new CEO of this company. Ultimately, what Wall Street's largely saying here, liking this new announcement, stock is up today, but Citibank largely saying in a note that they really need to sharpen execution, improve performance, and deliver durable long-term value creation. And so certainly that's looking for what the street is looking for today.
Clearly, Norwegian loves its fast food executives. John Chidsey now, the CEO of Norwegian. Former restaurant brand CEO Jose Silva, who I've known for many years, good guy there. He's still on that board. Brent, do you want to see these type of leaders run a cruise line company, even if Norwegian is seen as some form of value, as Elliott would suggest? I mean, you got to have the right leaders here driving the turnaround. No.
Yeah, I'm probably the wrong person to ask about cruises, given the fact that I've never been on one. I think broader terms, it is refreshing that we're talking about something outside of the technology area. So that would be point number one. I think point number two, leadership can extend across, I think, corporations and companies. We are talking about consumer demand on both sides of the equation. So not just from the Subway perspective, but also from the Norwegian perspective, which it sounds like to me, based upon your description, which I know nothing about individual stocks, they're kind of stuck in the middle between the higher end consumer and the younger consumer that goes on Carnival Cruise Lines. And so they probably need a strategy refresh, which I assume that a leader can do no matter what industry they have been in the past.
And as you know what Norwegian has to do? They need to open up some Costco's in there and start selling pizza. I mean, that might just be a suggestion. Yeah.
Look, I mean, the cruise line industry is strong, so the issue seems to be on execution and also the pricing. It seems like they're also trying to get in more families, and when you do that, you are charging more for the adults, but not so much for the kids, and that was sort of peppered into their last earnings call as well. And they had record revenue in the last earnings quarter as well, but it's not, it was a miss. Wall Street was expecting more, so perhaps compared to the peers, it's not as great as a performance, especially in an industry that is becoming so innovative, where you have cruise lines that are cruise ships that are themed, that are going skewer towards younger passengers, etc. So this does seem to be a place. The CEO placement seems to be a little bit of a disruption, sort of in for them, to sort of bring in somebody from the outside. You know, who's been on the board since 2005, not a long time, but nonetheless, it does seem to be sort of, as Brian was alluding to, it is still consumer facing, and perhaps this is the change that they are seeking, something that disrupts what they've been doing.
Well, I'm going on the record here. If I see Subway restaurants on the Norwegian Cruise Line, I am never going on these ships, ever, ever, ever. All right, let's keep on the consumer. Walmart is set to announce earnings later this week. The report will bring two firsts for Walmart. One, it will be the first earnings call led by new Walmart CEO John Furner. And two, it will be the first earnings report for Walmart since it eclipsed its stock market value of $1 trillion. Polymarket odds show an 89% chance of Walmart beating on quarterly earnings. All of this brings up my question of the day. What is the better buy in retail? Walmart with a ton of momentum behind it, Amazon, which has lost momentum and is firing people in mass. Brooke, I'm coming back to you here because you also cover Walmart.
No stock recommendations here, but what I will say is that Walmart over the past few years has really been doubling down to make sure that it drives more profit than it does sales. And that goes to come as it looks to compete ultimately with Amazon when it comes to advertising, especially third-party delivery in that key marketplace that it's really been doubling down on. But now it's kind of funny how you see Amazon mentioning more and more of the consumer on their earnings call, more so than they have in the past, especially when they double down on that perishable foods delivery. And now, when we hear from Walmart, in no means is Walmart building out a data center like Amazon is, but certainly we expect to hear more about how the company is doubling down on the very marketplace, that delivery business, and ultimately as well that advertising business, especially around Walmart Connect. And so it goes to show that both these companies are really driving or looking to compete in the same way and get the consumer who's looking for that last minute good that maybe they forgot to grab at the grocery store over the weekend.
Brad, if you and I were having this conversation a year ago on Walmart, I would argue that it was a value stock still, despite all of its momentum. But a year later, they've had a ton of sales, a ton of market cap. Is Walmart still a value play, or is Amazon something more fits the bill as a value play here?
Again, I'm not an individual stock analyst, but if I look at PEs, I think one is cheaper quite a bit than the other, and it's Amazon, just from a PE perspective. I think the more important thing here is just the state of the U.S. consumer and what Walmart has to say about that. You've seen the savings rate drop to 3.5%, which tells me that consumers are spending out of their savings or spending instead of savings. And that's where I think we're seeing some of those impacts across the economy. And this is something that I am concerned about. I know the high-end consumer has done quite a bit better over the past few years, but if you think about the market right now, it is the high-end consumer is heavily invested. I believe that households in America have their most exposure to stocks ever going back in history. And this to me reminds me a lot of late 1999, 2000 period, where the market is now the risk to the economy, not the opposite way. And so this is kind of an area of concern. Just watching that consumer spending, what Walmart has to say. But certainly, I don't know that Walmart, at least in my 31 years of doing this and thinking about what value stocks typically are, I don't think just looking at the PE it trades at, it qualifies to me from an overall just definitional perspective on that value stock.
And as last word to Walmart, they're going to have to really mess up this year. I think to get the bulls off of this story. I don't see them messing up. I mean, the company has a ton of momentum.
It's up 20% year to date, and you've got Amazon that's down 14% year to date. And Walmart's revenue, such a big part of it comes from groceries, and yes, the 100 plus Ford that is increasingly buying at Walmart, and it doesn't have the CapEx.
All right. So we're trying to make another leg higher. This point, nice outside. You should go out and get a breath of fresh air. Not going to miss anything. You step away for 5 minutes. Be nice if I kept the right chart up, though. So I was looking at this before. This is Lee Star's slow-mo. So above and trending, you're looking to buy 3 to 4 months out, like a 30 or 40 delta. Below, it's not much going on right here, right now. Just feels like distribution above and below, above and below. So you can't really get anything out of this when it's not trending. That said, we're trying to push a bit higher. We're above 6,800. That's an accomplishment. We want to stay above 6,800. This has to hold. Okay, MACD's turned up. That looks good so far. Yeah, I like ELF. Did I put that on the watch list? ELF on the watch list. Yeah, ELF on the watch list. Okay, ELF, ELF, let me see. Okay, S&P is trying to push a bit more. Having a little difficulty right and along this line right here. This high needs to get taken out. Okay, it's we're coming into 12 o'clock. Let's see what they have to say over at CNBC.
Doing exactly that across every single layer of the AI stack. If they're closing
closing the gap, Deirdre. I wonder if that changes the Trump administration's take on selling some of the older, chips of NVIDIA to China. If, again, it's still finding ways to help them.
And supply just overhead of that. Okay, we got supply just overhead. Looks pretty good for the daily. I mean, we bounced right where we have to bounce, 6,800. We've hit this level twice before. This is the third time. A move back up into the range wouldn't be that unusual. It's just that we've just been doing this for so long that everybody's expecting that we are going to just roll over. That's possible too. That range. All-time highs.
Sort of wear a badge of shame, as he once said. Really fascinating look at least what they're doing in robotics there, Dee. Thank you very much. Meantime,
Those Kung Fu robots, that was definitely real, right? Not AI generated. Thought that was pretty unusual.
We'll see what we get on Thursday. Let's get to the judge and a half.
Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The latest on the tech takedown. NASDAQ's been down 5 straight weeks, so we will discuss all of this with the investment committee. Joining me for the hour today, Joe Terranova, Jenny Harrington, Jim Leventhal, Josh Brown. Let's check the markets. It has been a bit of a struggle for risk lately, but we have had a nice little turn in stocks here at noon in the East. So we're a little mixed. We're still searching for something today. We're on back-to-back losing weeks, Joe, for the S&P. Gold, silver, and Bitcoin are all lower. NASDAQ's down, as I said, 5 straight weeks, longest streak since May of 2022. Where does this leave us as we start a new week?
I think it leaves us where we were at the beginning of the year, anticipating an environment that was going to be more volatile.
All right, so apparently it was real.
And the need to really be a little bit more tactical.
All right, it looks like we're starting to fade from the high now.
Areas of the market, whether that's geographically or by sector, and I think that's in fact what you're doing. You have some carnage in some of the highly speculative areas of the market. Obviously, software being one of them. I do not believe that totality, the entirety of this level that it's unattractive. You'll find some.
It's on its way to doing that.
You're going to find some winners on the other side. You have to allow this process that's going on right now currently, where I think the marketplace environment is kind of looking towards risk and saying, okay, we want to take down leverage. So I just think that continues. I don't think you get too high. I don't think you get too low about what's going on right now. We're kind of spinning to a lot of different places and ultimately ending up in the same spot. And I think that's the environment now for the next several weeks.
Yeah, Jenny, there are differing views as to whether this spinning around, this volatility that's been introduced here, especially around tech, draws these stocks into some form of broader correction from where they've already gotten. I mean, yes, software sucks a lot of air out of the room. Down 23% year to date. The Mag 7s collectively, the Mags, are down 7.5%. So what do you make of that?
Well, it's so hard to figure out. Is it going to trigger something and we have the whole market down 10 or 15 or 20%? Or is it going to be this really intensive rotation? And through the rotation, the broad market ends up kind of flat where it is. But within that, you have more of what we've had so far, where you've got like value up 7-ish, growth down 3-ish, energy up 20-ish, tech down 2-ish. So I'm not sure. It feels to me right now like the rotation might continue to intensify, where you end up the year with like the market in this really neutral-ish, lackluster ho-hum territory.
Well, it doesn't have to necessarily. It depends what part of the market. Like if you have the...
I love how he asked Jenny her opinion. She starts to talk, and then he starts talking over it. I don't know. Guess I should give him a little bit more leeway. Micron.
You can still have lingering uncertainty in tech, as UBS says, but that a broader range of sectors looks set to keep the rally on track. It's exactly where you're going to, as Morgan Stanley as well says, despite the sell-off in tech. several constructive drivers for equities are emerging. We can go through them all, but we talk about the same ones every day.
Right. So, what's emerging, and how is it emerging? And this is what I've been struggling with, which is it that kind of what's done well so far? Again, energy, value, dividends, have they done well because they suddenly have great?
Okay, so we're just kind of pausing at the moment. Elf Beauty, Elf. Back above the 50-day Elf.
And the money's not going to come out of stock. So where is it going? So are the parts of the market doing well right now? Are they doing well because they suddenly have great earnings growth? Or are they doing well simply because they have really, really compelling, relatively lower valuations? I'm not sure, but I was really concerned this
Maybe it's a
morning
combination
too.
of both.
Maybe, but like this morning I was concerned because there were a lot of really underwhelming negative earnings reports, and they were from companies that I think are very reflective of the broader U.S. economy, of the consumer. So you had companies like Genuine Parts, Allegion, Builders First, Floor Corp, Herc, Vulcan Materials, all kind of rotten earnings. And I see that as maybe a challenge to my hope that the broader market stays flat. It's a weird world. And Scott, when we think about the last...
So we have NVIDIA earnings, on February 25th? That's a Wednesday. NVIDIA's just kind of been sitting in a range for months. Okay, can we get a break higher? That'd be nice. That'd be nice to hold this 6,800 level and turn back up into the range over the next several days. Going into NVIDIA earnings.
But it's not like the businesses are suffering in any way whatsoever, because as part of the Morgan Stanley note, which I've already cited, with the headline being, despite the recent sell-off in tech, several constructive drivers for equities are emerging. Forward revenue growth for mega cap has accelerated to plus 18%. That's a multi-decade high. Okay, so that's number one. Number two, earnings revision breadth across semi-software, tech hardware, and the Mag 7 has rebounded. The Mag 7's forward PE has compressed to 27 times, 12th percentile since early 2023. High CapEx sales factor continues to outperform across.
Trying to push above this level. We're just stalled at the moment.
Year over year provides a tailwind given the global revenue exposure that a lot of these companies have. It's just people have gotten a little queasy about the rarefied air that they've been living in terms of the CapEx. Queasy's a good word.
Apple with a little bounce after getting shellacked last week. Apple, what's it doing right now? Apple at the high of the day. Amazon high of the day. Day 8 on Amazon. NVIDIA bounce, got earnings end of the month.
But the question that I think has to be answered is whether this rolling correction becomes something worse, or if it's just a lot of noise that we're going to get through. I am firmly of the belief that it's just a lot of noise. Now, why do I say that? Two things. One, if you look at what I believe are core principles, we've got a rapidly expanding U.S. economy. We've got decent, not great, but decent employment. You've got inflation in the mid-2s, depending on which indicator you use. There's a lot of things going right. This is in the early stages of a very stimulative budget bill, or what should be very stimulative this year. The second thing that gives me comfort is some of the areas of the market that you would really expect to be taking it on the chin if this were a harbinger of something worse are not. So if I look at today, some of the hyper discretionary companies, cruise lines, hotels.
All right, we're trying to push through this level. MACD is still bullish. Volume is tapering off though. So futures just watching 5, 15, 30, and 60 minute are all on buy signals. Momentum is clearly shifting to more bullish on the 60 minute. Tick cumulative says we could see more upside. Apple's going here. Watch Apple. Apple following through after a big Thursday and Friday down. 2 down days. Apple looking better. All right, maybe some AAPU. Maybe some AAPU.
That the current generation of founders have received since they arrived in Silicon Valley. The stories that they've been steeped in are things like Motorola and Nokia and AOL and Netscape, and these are almost like things that keep them up at night. And they understand that what all of these stories of obsolescence have in common is that they had management that was more focused on quarterly earnings reports and missed the next transition, whether it was PC to web or web to mobile or social media to video. It's just this constant thing that's in the backs of everyone's minds. And I think when you look at it that way as an outsider, we're coming from Wall Street. We're coming from, most of us, a very New York perspective, which is like, what have you done for me lately? What are my quarterly earnings? Did you beat the whisper number? Blah, blah, blah. And they're thinking about, oh my God, if we don't do this, and not just do it, but if we don't lead, we might disappear. This platform might have a terminal value that's coming up on us way faster than we might have imagined. And could you possibly blame them when you look at the rate of acceleration among startups utilizing AI, building robots? Startups, equity-funded companies that aren't even public. You look at how quickly the innovation is coming. Of course they're terrified. And being terrified in that context, a Silicon Valley context, is not let's spend less and hunker down. It's the opposite.
Apple's still pushing. Microsoft trying to do something, but no follow through. Bitcoin just got starting to see some profit taking on Bitcoin. S&P, no follow through yet.
The reason Microsoft is Microsoft, Amazon is Amazon, Meta is Meta. It's not that they're 10 for 10 on every spending decision. It's that they've had the guts for every iteration of the future to be amongst the leaders, and that's why they're hyperscalers and no one else is. Sure, if we understand that, we worry less about CapEx and more about, oh my God, which of these names is about to be obsolete?
I mean, this is the greatest sort of spend I would gather by a collection of corporates in the history of
they're spending because of the perceived demand. They are spending because the backlog orders are well over $1 trillion. Now you can question, and I actually think the market's doing its job, because if you look at last year for Microsoft, their CapEx increased 58%. What was the return on that? What did their cloud revenue increase? It only increased 20+%. So the market is actually saying, okay, in the moment,
Bitcoin pulling back.
Realizing you are not showing us the return on that, therefore your stock moves lower. I think the market's doing its job. You can question if that intended demand, if that backlog number is real. Why? Because, Scott, in the case of Microsoft, 25% of the backlog comes from OpenAI.
Worst performing mega cap year to date, by the way, it's down 17.5%. We know it's been caught up in the whole software thing, which I want to get to in a minute, but I thought the Bank of America February Global Fund Manager Survey was quite interesting, where they
Futures pulling back a bit.
frame it as CIOs deem CapEx to be
GE at the high of the day, starting to stall up here. GE having a good day. GE.
The idea of increasing your CapEx even further, and investors coming away with the whole idea of sort of how we framed it. You're over-investing at a new record high, Judge, and the payoff is so uncertain.
I think one thing that needs to be brought up, and we never bring it up when we talk about AI, one of the reasons they're all going all out to grab as many users as possible and continue to satisfy all of the prompting and querying is because there's a gigantic meteor heading toward the AI theme, and it's going to hit this year. And we don't know if it's going to hit in May or in September, but I want people to understand this. Apple is coming, okay? Agentic Siri is coming, not Siri chatbot, okay? Agentic Siri. So instead of typing something into a text box and getting a text response, telling Siri to move money from Bank of America into Fidelity, rebalance your IRA, and make a minimum required distribution from another retirement account and put it at Chase Bank, And when you have Siri being interoperable with every app in the iOS ecosystem, all of a sudden this
All right, S&P is still sitting here, not able to get through this level. We got this fair value gap that looks like it still needs to be tested or filled. Imagine a lot of people got long at the low, some taking profits. Intel looking pretty interesting. Intel. Intel, nah, I guess not. It's looking good on the 5-minute chart, but Intel is just sitting here. Probably comes back to the 50-day. If it does, it might be an opportunity there. Intel. This is a really slow mover. You have to have a lot of patience with this one. Apple still pushing.
What happens when the device maker of choice all of a sudden also decides that they're going to get into the game, and that's in the works.
Well, that's why Dan Ives today again says the sell-off in Apple's unwarranted. That 2026 will be the year Apple finally gets into the AI game. It's a case that he continues to make. It's not a new thought, but he'll expand on it today when he joins me on the closing bell. Which leads me to something I find really interesting. So you bought Apple on February 11th. Okay. Am I right that I have this in front of me? You sold it the next day?
Absolutely.
Why?
Because on final trade, they gave everyone a 264 stop. I mean, this isn't the WWE. I put the stop in. I got stopped out. I gave everyone a final trade at 264
okay,
stop
that was
on the
at
trade.
261. Why didn't you buy it back?
No, I'm not doing that. No, I've traded Apple twice in the last 3 years. I made 21% from August through November. I'm trying to, in this environment, keep my losses tight. 4.5% was enough. Did the same thing with Twilio.
But why'd you buy it? Why'd you buy it on the 11th?
I had a signal.
What was the
I had
price?
a momentum signal. You know what was interesting about the momentum signal and the powerful reversal thereafter? I told myself afterwards, and I actually spoke to a few people about this who are looking at the same systematic signals that I am. They're becoming more popularized. We're all looking at the same thing. So you had a really aggressive advance on February 11th. Why? Because all the trend systematic signals that are looking at short-term momentum identified what I saw, right? And then the next day you had the power, I think it was down 5% because everyone's basically neutralizing that momentum signal. So I'm comfortable with what I did. I told them exactly where I thought you should get out, and I have no problem with it. Now, but one last point, by the way, on what Josh said, which I think is more important on Apple.
Yeah.
It's interesting because if you think about the hyperscalers, the big four, they're increasing their capex by 40% year on year. What's the one name that's actually not? Apple's capex is down 20% year to date, and there goes Josh telling us they're actually going to win. So is all this spending actually necessary or not?
Well, you're talking about.
That's, yeah, I feel the same way.
In terms of the kinds of businesses.
Apple seemed to have, I don't know, I like the idea Apple better than, say, Google. But Google, you know, Apple using Google, Gemini, right? That is what they're using, I believe. I'd rather do that, let somebody else build the infrastructure and have a partnership with them. Apple, I don't know, I think Apple's pretty smart. Less SG&A, less capex.
I want to hit something also that seems interesting in that, you know, the whole software sell-off.
January 26th, entered a multi-year $1 billion annual partnership to integrate Google's Gemini AI models into Apple Intelligence, heavily upgrading Siri's capabilities for conversational, contextual, and on-screen tasks. This collaboration allows Apple to use Gemini while maintaining its own privacy standards via private cloud compute. All right, Siri has been needed to be overhauled for ages. It's like, what, 10 years? It hasn't done really anything. Okay, so it'll be iOS 26.4 in March, April of this year.
So there's a lot going on in this space, and these, have they been swept up in the sell-off, or do they deserve to be hit the way they have been?
I mean, I guess I would just say like a little bit of perspective. CrowdStrike is negative 8.8% on the year. It's been compounding at 56% annualized for the last 3 years.
Futures are just kind of grind here. No volume, just fading. Still hasn't put in a reversal per se. Still possible for this to bounce and follow through. With 3 hours and 40 minutes to go. 3 hours and 40 minutes to go in this session. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, February 17th.
SMA, it could be growth managers with a software sleeve that they're lightening up, whatever the case may be. The selling pressure hits everyone, and then when the dust settles, people come to their senses. I can't promise you that'll happen today for CrowdStrike or for Checkpoint or Palo Alto or any of the other names. I'm just saying if you're an investor, you're obviously not selling on AI because AI means one thing guaranteed, more workloads, and those workloads need to be defended.
Yeah, theoretically, yes. I mean, that's what we keep hearing, Jenny.
But here's the thing, Josh. Like, I can imagine a world.
This time of day, things are a lot slower anyway. KMB, Kimberly Clark.
Small businesses say, hey, I can build this on my own, or even large businesses. And one of the things that I've worried about a lot with the concentration of the cybersecurity firms being in this small handful of names is what if one of them goes down? And what if the disintermediation of cybersecurity is now possible? And what if that's a better model broadly to protect against the cyber threats that are out there?
Respectfully, none of those arguments make sense. Small businesses building their own cybersecurity out of what? Scotch tape?
Absolutely, they could. And it's not my size small business, but it's bigger. It can be done. And I think that's what's so scary about this, so scary to the software companies about the Claude Code and all the new coding programs, is anything can be done. And I think we should be very careful to not say I can't imagine, because right now you need to be able to imagine anything.
I think where Jenny may have a point here is not small companies developing their own security products, but small players developing threats that the incumbent security providers are not ready for. Now, they will get ready for it.
So who is, though?
No, that's fine, Josh. But I think what I'm trying to do here is to explain why these stocks may have sold off. And it's not dissimilar to what Brad Gerstner said about software in general, that the cash flows have become just a little bit more unclear. And so the multiples come down. The threats that have been protected against so far using things like firewalls or identity verifications can frankly easily be gotten around small players. Now, I do think that Palo Alto and CrowdStrike will be the ones that solve these new threats, but it's going to take a little bit of time. It's going to take a little bit of money, and I think that's why they're selling off. But this is probably a buying opportunity.
How about this? There was another interesting blurb out of the B of A desk today. We talked about the flow show information to set up.
All right, markets are just kind of killing premium now.
First net sell across equities on the B of A platform this year. Retail remains a committed buyer, and they were solidly adding to positions last week. 89th percentile buying, consistent with year-to-date patterns. So, buy the dip, because the bigger trend is still intact. Is that fair?
I think it's consistent with what we witnessed last April. I think retail is looking at moments where they believe they see a decline in the market in individual equity names that they believe over the long term are going to have the appreciation. I think on the other side of that, institutions have become more short-term oriented.
Constellation Energy off the high of the day. Tesla pulling back from the high of the day. Apple still pushing just off the high right now. Apple. Can we get a multi-day rally out of Apple? Let's take a look at Money Magic levels. Apple. Money Magic updates. Thanks, Money. Apple 260, 265. 255 puts below. All right, so we're just above 260. We could see a little bit more upside if the bid keeps coming in. Microsoft rolled over just now. Microsoft.
We know this is true. And what's happened over the last several weeks? Tax refunds. Tax refunds from the budget bill are picking up. Now, when we say retail is buying the dip, we don't know if that's big retail, small retail, young or old, but at least a cohort.
Okay, Apple watching the S&P.
The hardest question it seems to answer these days is which companies have some degree of AI immunity versus the ones that are going to be disintermediated. Edgar Denny was talking about that last week. I bring it up because JP Morgan has tried to
Oh boy.
do a screen, and they've come up with the top mispriced stocks amid the AI disintermediation. Looking at ones that are the most insulated from disruption. It's interesting. Carvana, Joe, is on the list. They were
Micron still fading from the high. 3 dojis in a row, basically. We're in the lower part of Friday's range. Currently, Micron. What's Oracle doing? I haven't looked at Oracle. I meant to do that before. Oracle. Still basing Oracle.
It's more than just the AI potential disruption. It is about this Gotham City research note that it suggests that there is in 23 and 24 an overstating of earnings to $1 billion. So I think on the call, you're going to hear that being ultimately addressed. I also think you have to remember there's a very strong tailwind that benefits Carvana, and that comes from the tariffs and the ability for interested buyers of new vehicles to be discouraged by what they're seeing as the tariff is built into the actual price. So tonight's report is going to be interesting. I think the expectation is they need to kind of really show what they're going to do. $5 billion.
Okay, again, we have what looks like distribution. There's no follow through at the moment, so just watching this very closely. Okay, so we got another doji. We had a doji on Friday, off yesterday. This needs to get back above the 50-day. For now, we're holding 6,800, so that's a line in the sand that we need to stay above. We need to stay above 6,800. Markets are just kind of chopping around. I'm going to take a 5-minute break. I'll be right back. Hedge flows turning up.
I think there were some expectations that we might got a little bit of bump up in the guidance, which did not come, but not a terrible report. I do have some analyst commentary. Here's JP Morgan, which rates the stock a neutral, citing in general terms it was a beat led by hard devices, but the stock is focused on what's next. Reiterated full-year guide. An implicit guide lower for the fourth quarter should make this move more achievable. We wouldn't be surprised to see pressure on the shares as Q4 forecast, along with perhaps full year 2027 plus, they move a bit lower. And then here's Leerink Partners, which is outperformed, saying analysts looks forward to management's commentary on the drivers of the third quarter performance and the assumptions underpinning the 2026 guidance. It gets back to the guidance and maybe looking for something a little bit more, but saying, okay, what's next?
Yeah. Just show me the chart.
I was going to show you the chart. All right, let's go to the Wi-Fi Interactive. Here's what happened today. Let me just show you what's happening this year. You can see the stock almost back down to where it closed late December of last year. But here's the 10-year chart. This will show you what happened in the early pandemic when we saw all these medical device stocks really get a nice boom there, and then we saw that bad bear market, and we came right about to the halfway mark. So that's a place where the really attract short sellers again, but we haven't seen too much of a decline from that. So I think just waiting for the next catalyst here. So quite a bit sometimes, but
From medical devices to cereal, let's talk about
nice
General
transition.
General Mills is cutting its fiscal sales outlook for the year. The maker of Cheerios pointed to weak sentiment and heightened uncertainty putting pressure on consumer purchasing patterns. And this is the company that cut its prices actually in December. It talked about cutting prices, but we know what's going on with the consumer, and that folks are making different choices.
That is true. Nevertheless, most staple stocks saw a really nice bump up in January and even into February. We're going to take a look at that in a second, but first let's focus on some of the earnings details. What's driving the story right now? Management says consumer sentiment plus uncertainty, like we were just talking about, are slowing category growth and making volume recovery slower plus costlier. There's that tariff impact. We do have a quote from, let's see here, the General Mills statement itself. Weak consumer sentiment, heightened uncertainty, and significant volatility have weighed on category growth and impacted consumer purchase patterns. And let's go to Mizuho too as well. They rate the stock at neutral. Update is particularly disappointing given optimism expressed in the second quarter EPS in mid-December. So a little bit of disappointment there. We go to the Wi-Fi Interactive. I will show you what General Mills is doing this year, and this is today. Let's switch over to year to date. And you can see kind of a rocky road there, but in the red for about minus 3.25%. Here is General Mills compared to its peers in the food space. This is the year to date, and here's General Mills. It is down 3.2%. Excuse that, and you can see most of the stocks up nicely. There's Newell up almost 25%, Hershey up 20%, Pepsi and Coke up about 13%. So it just hasn't been able to ride the momentum of some of its peers there.
Yeah, no, it has not. And then let's talk about a very different story. Major C-suite shakeup at Gemini Space Station. Just as a reminder, this is not a space station. It's a crypto company. It's a crypto exchange platform. It's parting ways with its chief operating officer, chief financial officer, and chief legal officer. And this comes just months after the company's IPO. As a reminder, this is the Winklevoss-backed company, crypto company. So the shares are down because it's unusual to see an exodus like that, especially so shortly after the IPO.
Yes, we're arguably in a crypto winter, so it's not that difficult to understand. There's going to be a lot of pressure on the space, and you're going to see the same thing we've seen in past cycles, where you're going to have winners and losers. And I'm not trying to paint this stock as either of those, but we do have to give some attention to these big profile departures. Yeah. Let's go to the Wi-Fi Interactive, and here's Gemini. Since its IPO, you can see down 82%. And it IPO'd almost top tick from my memory, one of the either the all-time high in Bitcoin or the retest of it. So it hasn't had that tailwind, that favorable tailwind of rising crypto prices that gets everybody excited. That's one of the things you want to look for in there. So back to the story, we do have some big firms named. We have one for the CFO, that's the chief financial officer, another interim for the general counsel, and looks like the COO, the chief operating officer, will not have an interim.
That's right. Do you have Coinbase on there somewhere? Because Coinbase is a company that's now been public long enough that it went through the prior crypto downturn, right? And it saw, and that happened, I guess, not too long after its IPO. So it saw a big drawdown, that then obviously saw, maybe we can max that chart out, and then we saw a recovery, and now it's coming back down. In other words, to your point, when you have a crypto winner, you have companies that are not as strong that don't make it. You have companies that are stronger that make it. Obviously, Coinbase survived the last one, but you can also see the shares are,
it's highly levered to Bitcoin. That's not a surprise. And all of these exchanges, they want to diversify. They don't want to be this highly levered, but it's a very difficult thing to do once that's been your kind of story. Yeah. As you pointed out, this just reminded me, Coinbase IPO top tick Bitcoin in 2021, I believe. And so they had to ride that all the way down. You can't even see this chart right now because that was right around the same time though. And so they're in a similar situation right now. Bitcoin's going to take off again. I think eventually. Is it going to be as flashy? I read a number of arguments that because it's been so financialized, you're not going to see these 500% rocket, to the moon gains like we saw in the past, but only history will tell.
All right, markets just sitting here killing premium.
the lay of the land.
SLG can be a big test for young homeowners bringing in their parents.
There's an overflow lot somewhere in the vicinity. The garage is full. They go to the auxiliary. He said if our garage is full, they go to the overflow. I heard him. I was right here. Let's just stand quiet. I bet you guys have driven some great cars, huh?
Progressive can protect you from becoming your parents, but we can't protect your home and auto when you bundle with us.
If you might have brought the wrong car, we had the
I still love to surf, snowboard, and of course skate. So I take Keno Magnesium to support my muscle bone health. Keno's high absorption magnesium glycinate helps me get the full benefits of magnesium. Keno, the brand I trust.
S&P still sitting here consolidating. We haven't dropped off. Futures going nowhere. Nvidia trying to push a bit higher. So is Apple. Apple's trying to go right here. Apple trying to push a bit higher. Apple having a good day. Big pullback Thursday, Friday. Apple.
My friends are still broke because they won't try free cash. Okay, this is what I've got playing games with free cash. I literally just signed up with my email and password. I logged in and saw a bunch of game offers right away. Yes, the name sounds like a scam, but go check out their Trustpilot score. They have a 4.8. You're just playing. You're not overthinking it. You're having fun, and you're getting rewarded at the same time. Look, it's not going to cover your rent or anything, but this paid for dinner.
Stupid commercials. I can't believe people are actually spending so much time playing on gaming apps.
Officials claim the boats were traveling on known drug trafficking routes. The U.S. military has now carried out more than 40 strikes on alleged drug boats since last September, killing more than 140.
Stop bringing drugs
Ukrainian officials say Russia attacked the
into the country. You're fine. SPY still moving higher. S&P. New York Fang is putting in a hammer today. Could look a lot better though. Okay, here goes Apple. Apple going. Apple's going here, folks. Watch Apple. It's above 360, 260.
So the spotlight is on real estate, which hit a 52-week high today. Tell me more.
Wait till I show you these charts, Judge. Some of these are overbought. So what we did in the column today is we looked at, okay, you wouldn't buy it today at a 78 RSI. Where's a better entry if you want to take part in this sector, which by the way could continue to work for the rest of the year. So let me just show you them quickly. Realty Income, the ticker is O. This is one of the most popular REITs there is. They call it the monthly dividend company because they do in fact pay out a distribution every month. This is look at this stock. It's parabolic. This is 78 RSI, which is a measure of momentum. You want to let that cool off. I use 58 as my line in the sand for risk management. Maybe let this thing have a red day or two. Just consolidate a little before entry. Iron Mountain, IRM, we had a 3.3% dividend yield, also a 77 RSI. Let this thing cool off for a second. Here are the two I like. PLD, this is Prologis. I've been in the stock before. I've talked about it on the air for a long time. Not too overbought. I think about 130 is the trend line that you're watching for risk management. I think you can own the stock right here. The other one is Simon Property, another name I've traded on the show. Another name that I've been talking about for years. This is one of the best charts in the entire market, not just in REITs. Steady grind higher. No parabolic spike. No Empire State Building in the chart. The RSI right now is 64. Not yet overbought. I think we're tracking that 50-day weekly closing price as our risk management, which is about 187 if we're trading. Investors can use 180, which you can see right before your eyes, has been true support for months and months and months. I think you can enter this stock right now as well. The one I bought, which is not on the list currently, is CBRE, which we can talk about at another time.
I did it the other day.
Real estate as a theme, real estate as a theme is super durable. I think it's Halo. I think it works in this environment. All right, Jenny.
So the one place I disagree with you on, Josh, is I don't think you need to actually hold off on buying these. If you take the lens out a little further, and if you guys don't mind, if there's any way to put up the realty income, the letter O, on the chart, and maybe put it out 10 years. You see, if you take a longer term horizon on these, they're really flat over the last 5 and 10 years, and they're still trading at very inexpensive valuations compared to the market. So just again, focusing on realty income, you've got it trading at like 16 and a half times. Yeah, you've got a nice 4.9% yield. And if you extrapolate further, that's true for most of them. I think it's a great place to be. And don't forget, even with this industry or this sector being up so much year to date, if you take a longer term horizon on that too, and look out over the past, say, 14 or 15 months, it's still well below almost every other sector in the market.
Realty income and iron hitting a 52-week high today, respectively.
Yeah,
Welltower.
not all-time high.
Welltower, that's the best name for me in the group. We've owned it since July of 24. That is senior housing. The revenue growth is consistent, 20+% for the better part of the last 3 years.
All right, we'll take a break.
Apple pushing higher.
He's on the other side with his midday word.
Okay, 260. All right. Just taking some notes here.
More likely than not, a pleasant surprise from investors when we see the earnings come out.
And we'll leave it there. That is Landon Swan, co-founder of Likefolio. Now, for the trading perspective on all things eBay, let's bring Tom back into the fold before we get to the example trade. So, Tom, you got a lot of insights from the Likefolio team. You saw the charts, especially with how it compares. Is it time to bring Beanie Babies back again? That's my question. I'm just kidding. What's your thought, Tom, before you guys get into the example trade?
Yeah, I mean, historically on their earnings events, they've been relatively shareholder friendly, right? Announcing buybacks, raising their dividend. It's nearly 1.5% dividend yield. If they continue to, pay that out, that's been a positive for this company. It's always been a head scratcher for me because Likefolio typically has positive data out of eBay. Maybe it's just because I'm not a user of that platform. I just don't get it as much. But at the same time, when you look at valuations of this company, they're not very elevated. It's an asset-light model. They take a percentage from each sale. They've got their own individual stores. They've got their confirmation parts of their business, whether it's luxury watches, trading cards.
Okay, Apple trying to hold on to this level.
That keeps, I think, that core group coming back, as Landon mentioned. But Kevin, if you look at this one, option market pricing in about a $7.20 move either way. It's pulled back. It's in bear market territory from the recent high, down over 20% from those levels. How do you want to look at this one from an example trade?
Well, the one thing I want to look at it is cautiously, because two things. Number one, there's a liquidity problem here. These are wide markets, guys. And so what does that mean? You have to really be ready to use price discovery to figure out where this is really trading and where the markets are wider than they should be, frankly. So you really have to be careful here, Tom. I mean, the 85 call in the front expiration, which is just a little bit inside the expected move, is 35 cents wide. And by the way, it was wider earlier in the day. And so you're dealing with some wide markets. What I looked at, Tom, is it's about a $7 move, just a little over a $7 move. Very similar idea to what we looked at in the first segment, which is the 1 week call calendar
in line with the expected move towards $85. Tom, I did the February 27th, then February 20th, 85 call calendar. It was, here's how I knew there was a liquidity problem. When I originally hit it up, it was a credit, which means the markets were so wide, it was reading a credit. I put it in for 15 cents. It's trading about, that's where it's lining up, 13 or 15 cents, Tom. So it's relatively inexpensive. Do I know you'll get filled on an order? I have no idea about the overall liquidity, but you do have to be extremely careful. Now, whatever debit you pay for this 1 week call calendar, focusing on the 85 strike, that is the risk on the trade. No matter what happens, the only thing you don't want to happen is it goes significantly lower or significantly several standard deviations higher. Either way, the risk is only...
All right, S&P is starting to pull back a little bit.
Low tick alert minus 800.
All right, here they come again.
Because it aligns with the same strategy that you used for Palo Alto, just a 1 week wide call calendar, but pinpointing that 85 strike on this, about that one standard deviation move that the option market's pricing in of about plus or minus $7. But buying the February 27th weekly options expire in just...
All right, we're pulling back. S&P pulling back.
Buy the 85 strike call and then sell the near term February 20th monthly options at same 85 strike call 1 week wide. Calendar paying roughly $15 Kevin. Here's your risk, $15 per spread. But as Kevin mentioned, price discovery may be warranted on this because the bid-ask spreads on the individual options are pretty wide, not that liquid. So keep that in mind.
Again, the latest jobs report he's commenting on said it provided further evidence the labor market is stabilizing. The current employment rate, he says, is consistent with his own estimate of the long-run level of where it could be.
Okay, S&P pulling back.
Is in balance. You have that low firing, he points out, the low hiring world, but the labor market could be vulnerable.
Okay, fair value gap was right there. That's the center of the fair value gap. We're right back to it right now.
It's reasonable to forecast, he says, that tariff effects will work through the system and ease later this year. He is concerned it could remain elevated for a time. On AI, which is a very long speech about AI and the effect on the economy, he says it's unlikely to be a reason for lowering the policy rate, in part because all that investment could be inflationary and put upward pressure on the neutral rate. In addition, he says monetary policy cannot address structural factors created in the job market that could determine the long-run unemployment rate.
Generally not the best idea to trade S&P during this time period between 12 and 1. We're watching if we get any kind of follow through. We need to take out that upper trend line right along in this area, horizontal. Right now we're back down to this fair value gap, that green box. We'll see which way we go with this. If they test 6,800 and take it out, push lower, that would be risk off. Reduce risk, take more off. If we manage to hold 6,800 and bounce right here, that would be really good. Potential for it to turn back up into this range that we've been banging out since January.
After holding them down, and I wonder what the impact of that is going to be that we just haven't seen to this point.
Well, that's why we have two kinds of Fed folks. Those who are patient and want to see this process play out, and those who say, you know what, we've been there, we've done that, we know what it's going to be, and if we said that there are higher tariffs here, we're going to get lower prices over here, for example, housing and shelter. So that's why we've gotten these 2.5%. We had Austin Goolsbee on this morning. He said not so fast, pointing out that we dropped 12 months ago a very high rate, and that's one of the reasons the CPI fell. And I can tell you, Scott, the Fed's going to be more guided by the data we get on Friday when we get that PCE report than it has been by the CPI report.
Yeah. All right, Steve. Thanks as always. Steve Leisman, senior economics correspondent. Thanks to Mike Sisoli as well. Mike, we'll see you at 3 o'clock on Closing Bell. We have more of today's biggest stories next.
All right, Apple. I hate these intra-week options. Just too much. Apple 265. Looking for a bounce. Futures. Apple's at the high of the day.
Wall Street is looking for earnings of $2.11 per share. That's on an adjusted basis. Keep in mind, shares of Toll Brothers are just off of 52-week highs and approaching. They're closer to that all-time high, which was north of 169. Time now for the breakdown. For that, let's welcome in George Silas, senior markets correspondent, taking a look at Toll Brothers today. So this one has been a winner recently. George, what's the fundamental take on this one?
Well, this will be interesting because you're right. If you look at the price action of the stock, it's actually a good performer. I mean, last year it's up over 30%, year to date up 20%. If you look at the EPS numbers that Toll is expected to report, as you mentioned, 211, that's up about 20% compared to the same quarter last year, which they published $1.75 on an adjusted basis. And sales are expected to be flat. I think it's important in the context of that EPS number, which I'll explain in a sec, but $1.84 billion in top line sales. I think if you look at last quarter, interesting enough, they did talk about their fiscal year backlog, which again last quarter in their Q4 numbers was reported to be around $5.5 billion. That was down about $1 billion compared to $6.5 billion. And net signed contracts also slipped a little bit. But the thing about the business is the sensitivity to the end customer is not necessarily there. In fact, the customers, at least on the luxury end, are less sensitive to interest rates. They typically have a higher down payment as a percent of the total notional value of the home. And that seems to be less impactful to the underlying business for Toll. Even though the backlog numbers are down, the unit expectation is still expected to be around 4,650 units backlog, with the average selling price for that backlog now nearing $1.1 million. If you look at the trailing numbers in terms of average selling prices, they're around 990,000. So they are expecting essentially lower unit volume, but significantly higher prices. For what it's worth, I think that's been a huge catalyst for the stock. The other thing is, if you just look at the ratios for sales to earnings, this earnings number is 20% sales.
Markets are just falling asleep. Gradual grind lower at the moment off this little bounce that we put in from 10:30 up till 11:30.
Low tick alert -800.
That's never good. Low tick alert. So we bounce. People get in there. They sell into strength.
Interest rates on the 30-year fixed mortgage loan, 10-year yields come down a little bit. Those are still above the 6% level at this point. It's about affordability. George mentioned the fact that this is the high-end consumer as far as home buying goes, nearly $1 million in average selling price for Toll Brothers, but that doesn't make them immune to the environment out there as far as the housing market goes. They're giving more incentives to buyers also. So with this run that we've seen so far this year, up nearly 20%, we're back to levels that we haven't seen since November of 2024. So we're basically just below record highs in here. The RSI on it, about 68, 67. So getting close to overbought at this point. And we haven't seen any improving housing data. So I looked at a strategy. They don't have weekly options. So I went out to the March monthly options here, Kev. So about 31 days to expiration, where I'm going to buy the 165 strike put in the money by $3.50 or so, and then against it, sell the 150 put. So a bearish $15 wide put vertical that you're paying roughly about a 570 debit. It's what I've got on here. It's trading closer to 590 at this point, so it might be a little bit more. The stocks have pulled back, as we mentioned. But the debt you pay is going to be your risk. So if you pay $570 in risk.
All right, Microsoft pulling back.
If it goes back below 150 over the next month in this trade.
So attempting any longs, still having issues with resistance overhead. So that's telling me to continue reducing risk, especially if we lose 6,800.
When you're long them like this is you need a move, right? The question you always ask is what happens if nothing happens? And this needs a move to be profitable. But if you're right, remember this stock has had a pretty great run even in a sluggish housing market. If you get that move down, then this pays off multiple times.
Yeah, and the option market pricing in $8.50 move. That break even to the downside, we're starting to show some profits, only about $2.50 off the current share price in there. So a lot less than that one standard deviation move. And you got 31 days in it. You have some flexibility as far as trade management. You don't have to wait 31 days. If you get the move that you want to the downside where this thing starts to expand, you can close all or a portion of this type of trade. But as Kevin mentioned, you do need a move on this example trade to the downside if you think this stock's overbought at this point, maybe has some downside exposure here, Diane.
All right. Well, that's going to do it for us today on Fast Market. I'm Diane King Hall alongside Tom White and Kevin Hayes. Download the Schwab Network app. It's available in the App Store. Tune in 24/7 on SchwabNetwork.com. Stick around. We've got Next Gen Investing coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you with unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft.
All right, just watching the S&P just bounced.
Keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts.
Don't like the risk down here.
Brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab
closing bell, we've got you covered.
Inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on ETF.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed.
What's the dollar doing?
And precision.
I think one of the most important things is you're making a play in a risk.
Apple back up to the highs. Excuse me.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Apple still pushing.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant, I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Nvidia at the high of the day. Apple at the high of the day. Oh, we're still chopping around here. Apple looking pretty good. Volume not quite 50% of Friday's slower trade. Apple. Let's say you're thinking about the markets. What do we do, Vinny? What do we do? Right now, I don't see a reason to do a whole lot. Either we have to bounce and see a follow through tomorrow, or this 280, I mean, this 6,800 just keeps getting tested. We're down 3% from the high. I don't know. We've hit this level so many times, it seems like we're going to drop through it. RSI is below 50. We got 7 distribution days. Don't like it.
Well, we just can't shake these AI jitters, it seems, Jenny, as we very much are heavily focused on this disruption concern in the market. Who is immune? Who is vulnerable? For now, we continue to see this narrative in the market very much of sell stocks, ask questions later, and we have very much seen this sell-off by association. I mean, take a look at some of the cybersecurity stocks. You mentioned Palo Alto, due to report later this afternoon. I mean, these stocks have been really hot, as we know that the AI risks have very much increased that demand for the cybersecurity, yet even those names have been dragged down as well. So you did a really good job of breaking it all down for us on that Morning Trade Live and
actually has managed to pop its head into the sunshine a couple of times. It looks like these markets are really trying to regain their footing because, of course, this has really been something that has been driven down by technology, and even that sector alone has sort of flip-flopped between sort of green and red today. But it very much feels like, again, the pressure is coming from the software. I mean, if you take a look at the IGV, for instance, as I mentioned, off the lows of the day, it's still trailing down about 2.8% right now. So we see that very much back under some heavy selling pressure again. If you take a look across actually at the Max 7 performance, Amazon coming off this 9-day slide, losing about $450 billion in market cap or something, is now attempting to stage a bit of a comeback here, up around 0.5%. It had tried to earlier, it came off again, but now it'll be a very interesting story for us today with respect to this experience that it is reportedly now talking about in March with this launch. So we're going to be watching out to see what details are fleshed out about that. And then NVIDIA is higher. That's going to be our last Max 7 cab off the rank as far as earnings are concerned. So you continue to see this bifurcation. You've got some of the memory stocks which are lower today. Interesting because you've got this Wall Street Journal article out about Micron looking at more investments into expanding capacity to try to address some of the bottlenecks in these AI memory chips. You've got Western Digital, Texas up, but you've got the rest lower. And then, of course, across some of the down components, you've got a bit of a mixed picture as well. What is encouraging is that financials have managed to rally off some of the pressure that we'd seen last week, as that sector had been very much being dragged down with this broader AI disruption fear, particularly over the wealth managers. Looking across some of the other asset classes, we are very much seeing a pullback across metals today. That perhaps has got something to do with the volatility that we've seen really playing out in that space with the higher dollar as well. We are seeing some strength actually going into the FOMC minutes this week, and also, of course, the data at the end of the week. And then oil continues to be a big story for us as well. We're pulling back now, actually wiping out some of the gains we'd seen earlier, as it looks like markets are tracking this progress on the Iran-US talk. So there's lots of little bits in this market, but it just seems like overall we've got this overhang of the AI disruption fears continuing to linger here, Jenny.
Yeah, I do think you make such a good point about seeing this drag not only weigh on software, which has been, I mean, sort of the famed target of some of the pressure, but also now into the memory chip components, which have been, frankly, are really life-saving both of the broader AI trade. So it's being felt pretty widespread today. Although I will say NVIDIA is attempting to claw back here, and Amazon and Apple have also been at least green throughout parts of today's session. But we'll focus more on these discretionary travel names to kick off our coverage today, with Southwest Airlines continuing to really outperform, up another 6% today, adding to its near 80% gain over the last 52 weeks. So partially due to a UBS upgrade. And you walk us through this note, because it does seem like the street has really turned a corner on Southwest.
All right. So what if we do continue to pull back like this? 10% off the high. I'm so looking forward to adding back some funds here on the pullback. Reducing risk, it's down 10%. If you started to do it when it was down 2 to 3%, 4%, you're sitting pretty on some cash, just waiting, no hurry. It's taken almost 4 weeks to get here, 5 weeks.
From extra legroom and then assigned seating and check bag fees when these initiatives achieve full maturity in fiscal 2027. So they see the bag fees as presenting a sizable opportunity. So really there is this view out there that this airline has a new source of revenue that could be very lucrative for this company. I mean, this really was a company which had to prove itself as far as, better results than had first been thought when it came to some of these initiatives. The changes that we're seeing over at Southwest appear to be really resonating with the market now and very much being rewarded on Wall Street. I mean, you can see it reflected in shares.
Reduce your risk. If you think about this, Let me zoom out just a bit. Easier to see the distribution.
like things are turning a corner today. Let's see if things hold up. Yeah, and you're right. I guess we are still ways from being able to say that this is going to firmly lead to upside in shares, but it does make a good case for comparing Southwest. And of course, we've seen various trends weigh on both of these names, but right now Norwegian looking a bit lackluster just compared to, again, like you mentioned, its peers. But to shift gears into Shopify now, we know Truist did upgrade shares to buy from hold, did raise its price target, actually calling it one of the few software companies that has shown strong accelerating growth. So I thought extremely positive commentary for a name that has been battered along with the rest of software, but not seeing a lift that has held it today. And so walk us through this note and finding some of these winners in the broader right now software meltdown. Exactly what it's all about. I mean, right now the markets are grappling with trying to get their head around who is immune and really, I mean, who is vulnerable in this space. And I mean, when we hear a note like this, you think, right, I mean, this is how the market thinks of this company. This should be helping the stock as far as picking the winners and losers, but it's clearly still under pressure, being dragged down by the broader sector. Look, Truist has upgraded Shopify now from a hold to buy. So they've got a price target, 150 up from 110. What they've said is it's one of the few software companies to show strong accelerating growth recently, and they view the recent large drawdown in software valuations related to these AI fears as having created an attractive buying opportunity for long-term investors in Shopify. So again, one of those names where, since we've seen this pullback, could be an opportunity to step in as things have come off so much from where we've been previously. You know, when you looked at the beginning of this sort of software meltdown that's been accelerating over the weeks, they believe that they can materially benefit from agentic commerce and continue to grow their share beyond the current 14% plus of US e-commerce going forward. So this seems to be a good story amid some of the AI software concerns, but it just feels like it's not enough today. It coming off the back, and you and I were talking about this name last week with its mixed quarter. I mean, adjusted EPS was slightly lower, but revenue was a beat. They've expanded.
All right. Apple still. A lot of things, a lot of mixed signals. And Apple's giving us a bullish signal. Of course, it already pulled back quite a bit Thursday, Friday. People looking for opportunities. Okay, let me zoom back in a little bit here. 8. Should be pretty obvious. This is a trend over here. I don't want to seem alarmist. I'm just being proactive. Okay, we got a trend up. Just trend up. This looks like distribution up here.
The analyst perspective, and of course, different what we're seeing from price, but same has pulled back now about 25% this year.
S&P just kind of chopping around. This will be all for naught if this breaks out to the upside and starts to move back in the top of the range. The forces that be are much larger than us. So if they want to sell this, or don't want to support it will drop below 6,800. For now, we're holding up fairly well. Apple is continuing to move up, so people are taking the risk with Apple. Let's see what a butterfly would look like for S&P, centering around that 6,500 level. Let's see what that looks like. S&P butterfly. I haven't done much today. Just reducing risk. That's about it. Apple looks good. Let's see, when is April? All right, so let's see, April. Butterfly, buy a butterfly. Let's see. We'll center it around 6,500. I just want to see what this is, what it goes for. VIX is at highs, so we know that that's going to be expensive. Buy a butterfly. 6,500. Wow, this is buy. All right, so buying a 6,600, 6,500, 6,400 put fly. Okay, I'm going to show you what I'm doing here. I'm pricing this out and see how this looks. Okay. So pricing out some cheap insurance. 6,500 would be the middle of.
High took alert plus 800.
Oh, here we go in the opposite direction. Just like that. They make the bears like me. I'm not bearish. I'm just saying they make me or anyone that's thinking lose 6,800. All right. So this would be the fly here. So I'm just going to keep this on the chart for now. Okay, so put fly. It's going to look like this. So there's twice as many puts. So you buy a put above and below, you sell two puts at 6,500. And if prices start to move towards 6,600, you start to make money. Those are going for $3 right now. Okay, Apple back up to the highs.
Sure.
see this particular chart, we have our highs 142.40 that we reached recently. We had a bit of a pullback. Now we have this upward sloping white trend line that's still in play. So our prevailing trend is more geared toward the upside, but we also have kind of an interesting pattern potentially taking hold.
Okay, I'm going to keep this on the chart for now. Okay, there goes NVIDIA and Apple. NVIDIA and Apple pushing higher. Tesla turning up.
That could be an interesting place to be on the lookout for a potential bearish play. I'm not saying it's going to happen, just saying this is see potentially forming if you're interested in that sort of thing. So then if we were to move to our moving averages that we follow, our dark blue 5-day weekly EMA comes in near 126. It is crossing over its slower counterparts like our teal monthly 21-day EMA near about 125. Meanwhile, our blue 63-day EMA, our quarterly EMA, that comes in right around 129, which coincides with the trend line that we established here. So that could be a notable downside breakout area to be on the lookout for. RSI, our measure of momentum, trending upward here, crossing above the 50 midline. We do also have a bit of bearish divergence that we saw heading into our current situation, though, where price was making higher closes, RSI was trending downward. A bit more complicated, though, because the RSI was also in overbought territory, which is typically a sign of strength. So for now, though, what the bulls would want to see would be a break above some of those old highs, and for RSI to continue making new highs in tandem with price. Our volume profile shows that we have heavy trading between 121 and 133 here. Not a particularly strong, clear node in a narrow range, just kind of a general area. And if we were to move lower, our next node right here near about 112 to 116, that would be right around the neckline of our head and shoulders type pattern here. So a pretty interesting setup to be sure, Jenny.
So as far as now looking at this name for example purposes, we do still have earnings at the beginning of March, I believe. So we have that at least look forward to on the horizon.
All right, Tesla, nice little bounce. Apple bounce. S&P is still messing around with this level. All right, I'm going to take a couple of minute break. Let's see if we can't get a bounce that follows through.
So a more neutral trade, -1 March 20th, 150, 155, 110, 105, iron condor, and a 125 credit. Max profit, 125 as what you receive as your credit here. Max loss would be 375. So about that 1 to 3 reward to risk ratio that traders commonly look for this example trade here. So our break-evens are not exactly equidistant from where we are now. The break-even, number one, 108.75. That's about 14% to the downside. Meanwhile, break-even to 151, about 20% to the upside here. So a bit more leeway there. Expected move, 12.3% though. So either way, this would be a higher probability trade. You can see that for the most part, the market is expecting us to stay within those boundaries here.
Okay, now as we shift to Dollar General, which is facing some more significant pressure today, but I mean this Rothschild note really accelerating, which just feels very rare, especially given the outperformance we've seen from Dollar General over the last year or so. And so what do you watch for here? Technically speaking, I mean, I'm sure there's similarities, but also today, just the key difference is we're down 3% on the session.
It's a pretty different situation, I would say, here, despite these both being discount dollar stores here, the similar factors affecting them. In this case, though, what we have is, for now, we have stalled out at these old highs after making new intraday highs beyond 155. Our
trend line is still in play here, connecting our recent relative lows. Horizontal levels to watch out for include our old highs here near about 152, our relative lows near 140, and this area of resistance and then support near about 133. Finally, to 116, just an interesting example to point out. Repeated ceiling here, and then the opening of our gap up, which we never really looked back from that point.
Okay,
So now, if we were to think about our moving averages that we follow here, we have our 5-day and 21-day. Those are the closest to where we are now, kind of bookending our trend line there. So a breach below 146 or so would mean that a lot of those factors have fallen by the wayside then. So that could be impetus for further downside here. Meanwhile, our quarterly 63-day EMA comes in near about 136. RSI actually showing a pretty similar situation to our last chart here, where we have some of that bearish.
High took alert plus 800.
The 50 midline green trend line still in play for the most part, making new relative highs in the shorter term at least. So from here to here, things are behaving as the bulls would want them to. Finally, our volume profile study shows that we have some nodes here that the traders might be on the lookout for. One here between roughly 132 and 138, and then another one here from which we attempted to break out 144 to 150. So beyond that 150 level, things could start to get interesting.
Okay, last but not least, as we think through trading Dollar General here again, for example purposes, given today's pressure and the recent, strong performance we've seen from this stock, walk us through your thinking.
Yeah, I know that the analyst said it was a downgrade. I just see a chart that's testing all the, these notable highs when we have and also our expected move range going pretty far beyond that level here. So to me, I thought, well, sometimes a contrarian play can make sense here. So again, targeting that March 20th expiration here, our yellow box, about plus or minus 14.6% here. And if we were to kind of overlay everything on each other, then we can see that we have our standard deviation channel here, our old resistance. That's the area we'd be kind of looking for a breakout and then targeting our short strike near the edge of that range. So our call vertical in question here, our example trade, +1 March 20th, 155, 170 call vertical, and a 375 debit. So again, that kind of 1 to 3 risk reward, in this case max losses, our debit paid $375. Max profit is 1,125 potentially. You can see our shaded area lines up with the edge of that profitability area, reflecting that that's the edge of our expected move potentially here. Break even 158.75, 7% to the upside or so versus our expected move range that we mentioned earlier, 12 to 13%. So well within that boundary potentially here.
Yeah, and I think a good point also that, this is one analyst's conviction, and also it was hugely on valuation concerns. So it just depends on, how you are assessing the valuations of these companies. But appreciate it, Ducat, for bringing in all the technicals and example trades in 2 of our discount retailers. But coming up next, it's time for FOMO. We will be discussing the latest with the drama between Paramount Skydance, Warner Brothers Discovery, and Netflix.
CRTO. WING.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
SMG app.
Welcome back to Next Gen Investing. It's now time to discuss the latest with you.
All right, we're finally moving back up.
Discovery now opening some conversations with Paramount Skydance as it is trying to see if it can get a sweetened offer. So joining us is Marley Caden, host for the Schwab Network. So Marlene, it has become one of our favorite stories to discuss because I knew the drama wasn't over. I knew the saga was just in its early chapters. But I mean, walk us through the latest regarding Paramount Skydance because it does not seem like that bid is entirely off the table yet.
It's not. It's not entirely off the table yet. That is accurate, although it's not being supported, we can say. Warner, a couple things were announced today in the development of the saga, as we like to call it. Warner Brothers has announced the date for its shareholder meeting. We've been wondering when that was going to be. Now we know it's going to be March 20th at 8 a.m. Eastern. That's the day of their shareholder vote on this potential merger with Netflix or potentially Paramount Skydance. Because the second component to this is that Netflix has allowed Warner Brothers Discovery a 7-day waiver, a limited waiver, to carry forth discussions with Paramount Skydance about potentially sweetening the Paramount Skydance offer. They're allowed to have these discussions for a 7-day period ending on February 23rd to seek some clarity for Warner Brothers Discovery stockholders and provide Paramount Skydance.
Still trying to get up above this level.
Final proposal. Now, during this period, they will discuss the deficiencies that remain surrounding the deal and clarify certain terms.
MACD rising. Futures look a little better.
Important to note here that Warner Brothers Discovery is unanimously recommending the Netflix deal. They are in favor of the Netflix merger, but as they say, they want to make sure that they're getting the best deal for Warner Brothers Discovery shareholders, so they are exploring all avenues. So a senior representative from Blue Sky did tell a board member from Warner Brothers Discovery reportedly that if they were authorized to have discussions, they would sweeten the deal. The deal that was on the table was not the best and final. So that's what this 7-day window is for. What that sweetened deal could look like, we don't know at this point, but we likely will know at least by February 23rd if there has been some updated deal. The CEO, David Zaslav, coming out and just saying the sole focus has been on maximizing value and certainty for shareholders every step of the
Apple.
way. So this is why they're talking to Paramount.
What are you doing, Apple? Apple's still going here. Apple looking good. Apple's still looking good here. Having a good day. Apple having a good day. 265. Coming up 265.
Reiterating the board recommends the transaction and what they call their superior offer. They also want to acknowledge some of the things that Paramount Skydance has claimed, and that's the word that they use. They say, while we are confident that our transaction provides superior value and certainty, we recognize the ongoing distraction for WBD stockholders and the broader entertainment industry caused by Blue Sky's antics.
All right, hedge flows continue to rise. All right, so it's looking pretty good. Hedge flow still going. We got some resistance up at 68.55, 68.60.
By suggesting its proposal will sail through, misleading stockholders about the real risk of the regulatory challenges around the world. WDB stockholders should not be misled into thinking that PSky has an easier or faster path to regulatory approval. It does not. And I thought that was a very interesting point that they were making. They then provided some evidence about how Paramount Skydance went on to cite the German FBI giving their deal clearance on January 27th without disclosing that Netflix was also given clearance from the same regulatory body for their deal with Warner Brothers on the very same day.
I mean, this is really interesting because to me, it's like I don't necessarily know why they're reopening this very brief.
Apple.
I guess I'm hoping for the better offer, frankly. But I mean,
All right, let's take a look at New York FANG. This is looking a little better. New York FANG components. Big hammer. Could be the beginning of something. Okay, 200 days up here. Whoops. 200 day is up here. 50 day. 50 days right there. 21 day, 90 MA is down here. 21 day. 100 day. Can't believe Netflix is $76. New York Fang Hammer.
Everything we need all in one place.
I can set up her college fund.
I've been learning about trading strategies. Schwab helps me generate retirement income. All this Schwab as everything you need is making me cranky.
Does somebody need a map?
All right, Nvidia still going. There goes Apple. Apple ripping.
Download the Schwab Network app and stream live coverage wherever you are.
OKLL.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls.
Well, we can breathe again. We're back above 6,800 and the market's rallying.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got
High took alert plus 800.
High tick alert. Apple. There goes Apple.
follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings. So that would be a further downside area.
Apple ripping here, looking good.
Actionable data, veteran traders, and trusted financial journalists streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. Welcome back to Next Gen Investing. The worst performing stock in the S&P 500 today is Genuine Parts, down almost 14%. Now, the auto parts supplier reported lackluster fourth quarter results, as well as plans to split its company in two. So here now to give us some context into today's pressure, I'd like to welcome in Diane King Hall, the host of Morning Movers and Fast Market. So Diane, is today's selling mainly due to the weak financials or the uncertainty with its split, or of course both?
All of the above. It's like all the parts are leading to the slide that we're seeing in shares of this company, Genuine Parts.
Apple, big reversal. Nice.
In terms of their outlook, it was a mixed picture there. So there wasn't really anything great for investors to hang their hat on. And then the plan to split the company into two things. It's just kind of too many things happening at once and nothing that was positive enough to kind of keep up the narrative that had been around this company over the past year. Because even with today's slide, it does still have a slight gain on a year-over-year basis, but it's severely dented that. So you're seeing shares drop about 14% right now. Adjusted EPS to catch people up with $1.55. The street was looking for more than that, $1.82. Revenue coming in a touch above $6 billion. The street was also looking for higher than that. And then in terms of their outlook for 2026, they gave some guidance for sales that came in stronger than expected, but the profit outlook was weaker than expected. For 2026, they were
All right. Tesla, nice follow through. Higher lows, higher highs on Tesla as well. Tesla working. Higher highs, higher lows on Tesla. Nvidia, higher highs and higher lows on Tesla, on Nvidia. Nvidia looking good. It's a big range. The only thing I don't like about Nvidia is it's been in a range for months now. Apple, big dump Thursday, Friday, big pop today. So if you bought the low, congratulations. Tesla, nice follow through. Tesla looking really good. Tesla. Okay, Apple looking the best though. If we could just get Microsoft to bounce, that'd be great.
housing market. The housing frenzy may have cooled, but for renters, the pressure has not eased. Prices are still high and inventory is scarce. So for more on broader housing trends, I'd now like to welcome in Kenny Burgos, CEO of the New York Apartment Association. Kenny, thank you so much for being with us today. The housing market is flat this year, but prices are still elevated. So to give us some context, what really does flat mean in terms of rent prices?
Wow, Apple looking really good here. Apple.
Like New York and California, but that means the same for the renters as well. So, like Redfin recently reported that New York has seen an increase of 11% in home prices. And interestingly, Douglas Elliman put on a report that average rents in Manhattan hit $5,700.
Apple looking good.
And also an 11% increase. And this is always going to come down to lack of supply. New York City builds about 30,000 units of housing in a good year. In a city with this much demand, the inventory is just not keeping up with the demand that rents are looking for. And that's going to put this upward pressure on rents continually until we meet that demand.
Okay, so as you mentioned, it's hugely attributed to the lack of supply, with homeowners now being locked into relatively low mortgage rates and not moving. And so is that really the entirety of the blame for what's freezing the entire housing ladder right now?
Well, as for New York specifically, it's certainly not the only issue of like supply is the main driver of rents, whether you have enough or not. But you have markets like New York where you have laws like 2019 rent laws, which is actually working to reduce the inventory. And these laws
coming out of a squeeze, AMSC, American Superconductor, Apple, big reversal on Apple today. It would be interesting to see Apple do the best out of the whole AI scenario with the strategy of using Google Gemini in their partnership, rather than spending so much on producing their own. It's pretty cool. Apple, prospects, Tesla still looking good. Netflix, higher lows, higher highs. Nvidia doing okay, but still in a big range. Apple, nice follow through on Apple. Apple still going. 265 is that upper call wall, 265.
Overall budget, and this is sort of as well as the federal government find themselves burdened by the same.
Apple still going. Futures grinding higher. It's not quite 2 o'clock on the East Coast. Markets responding fairly nicely off of that low. The low of this range is holding up fairly nice. Okay. Can we get back above the 50 day? Back up into the top of the range? That'll screw a lot of people up. That'll screw up the bulls and the bears. The bears who thought we were going to drop off. The bulls who sold only to see things bounce back into the range. Apple still going. Apple. Love to see Microsoft bounce. That would be nice. Microsoft starting to bounce a bit. Higher low on the intraday. Okay, let's see what the number of stocks are doing now. Okay, we've got 1-to-1 up down volume across the board, 1-to-1 up volume on the NASDAQ composite, the spiders, the Qs, and 5-to-1 on the diamonds, the only 30 stocks.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Apple's still pushing the highs. Futures trying to take these highs out right here. Futures, S&P cash coming up against some resistance overhead. There's resistance up here.
High took alert plus 800.
High tick alert. Okay, this is good. This is good stuff. Sorry if I came across super negative, but if we were to drop below 6,800, that would have a lot of things could have played out. Right now, we got the buyers coming in. The bulls are coming in. They're showing their stuff. Look at that volume. Check the volume. Okay, looks like we're going to pop a little bit higher. Let's see what hedge flows look like. Hedging flows continue.
Well, I think this is sort of an interesting situation. I mean, first off, Wendy's is a legacy franchise, at least in the fast food space. I think the competitive landscape is part and parcel what's happening with Wendy's. The other thing I think is going on with the business from a financial standpoint is the balance sheet's got some issues in terms of debt. I'll explain this in a bit as well. But you're right, if you look at the last year, price action has been down significantly over 50%. In the last 5 years, it's been about 66%. Now, if you look at the results from an earnings standpoint, they did post an adjusted profit of 16 cents. That's the estimate by 2 cents because they were expecting 14 cents. But nonetheless, that was still down about 36% compared to 25 cents in the same quarter last year. If you look at sales, they were down 5.5% to 543 million, irrespective of the fact that they beat the estimates fractionally. But again, looking at last year, they posted 574 million. So just looking at the earnings growth, or in this case, contraction, it's basically about 30% relative to 5% sales growth. So that's a problem. That speaks to why the trend is down. Because anytime you demonstrate earnings contraction faster than sales, and if you have sales contraction, for the most part, you're going to see a challenging stock price environment where it's drifting lower. But if you look at the analysts, they're still constructively, I would say, bullish to neutral on Wendy's across the board between $8 and $9 a share. Because there are some bright spots. They posted USA sales were down about 10.5%, but international sales were actually higher by 6.2%. And for the full fiscal year, they essentially raised their adjusted EBITDA guidance to 58 cents, so 56 to 60 cents at the midpoint. because they're actually looking to close down some unprofitable stores to focus on their growth areas, which are international franchises, and also optimize systems. And that's important because, again, this is a situation where sales and earnings growth are down. And the balance sheet, too, has been a problem for Wendy's. And I suggest that's another anchor they have to deal with. Because if you look at the debt load, it's around $4.1 billion relative to about $1.4 billion in equity, which is quite large. And if it wasn't for that debt, the business itself would have earned an additional $118 million in lieu of interest expenses. So, they're missing out on opportunities because of the debt. And the other thing I did notice, and this may be something that is addressed going forward, but they are paying a dividend of approximately 56 cents, which is about 97% of the forward estimated earnings. That's a lot. So that's also creating another drain on capital for the business.
Okay, so as far as some of these headwinds that are unfortunately plaguing a name like Wendy's, I mean, is this right now, is their overall initiative to revamp some of their stores, close locations, that's clearly not overshadowing the negative results. And so is this specific to Wendy's, or is this some broader themes that we're starting to see across the various fast food chains? I know McDonald's actually had a pretty strong report, but all that to be said, I know that the pricing environment specifically has been difficult. If you offer, these items at a relatively low cost, you have very little wiggle room to work with, as pricing has remained still a pretty major concern.
So I think, just broadly speaking, I suggest that about maybe 75%, these are just, estimates here, just my own opinion, of the problems Wendy's is facing is idiosyncratic. It's to their own business. About 25% are probably going to be external factors, including issues with supply prices and, of course, issues with consumer tastes and preferences, which are shifting. Their branding is a big issue, and I haven't seen a lot of marketing for Wendy's, just because they seem to not be able to afford it right now. But I do suggest that this is an interesting situation where if they cut the dividend, cut operating expenses, look to manage some of the debt in some capacity or refinance it, that might be prospectively positive for the stock. But the other challenge is the majority of their stores are franchisee owned. So therefore, they don't have the ability to sell some real estate and then lease those back from a company standpoint. So that's another challenge you have to contend with. But irrespective of that, you just got to go with the trend, which is unfortunately still down for Wendy's.
Yeah, and unfortunately not getting any sort of lift today, as we've seen a nice recovery in the overall markets. But appreciate it, George Tillis, for all that breakdown. As we close things out, we are actually now higher in our four major averages, and substantially so. So we'll see where the volatility will fall for the remainder of this session. That'll do it for Next Gen Investing for this Tuesday. We have the watch list coming up next.
may resume in less than a minute. WOLF.
Apple's still going. Apple is still going.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management.
All right, we're up against resistance right now. Okay, there's your resistance right there.
may resume 10 seconds.
You can manage your checking and investing in one.
IRN.
JDZG.
DHLE halted.
All right, up against resistance now.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines live
analysis, breaking news, and sharp trade ideas minute by minute.
Futures.
Break it all down in real time with speed, accuracy.
Tick cumulative turning red.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, and trusted financial. Live and on demand. Schwab Network, streaming 24/7, any screen, anywhere,
IRD.
free. SchwabNetwork.com.
IONL.
Mom, my
RCAT.
grandparents moved here. They know what our family
SMU.
would become.
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
RCAT.
All right, Apple. Apple at the highs. Still going. Quite the reversal on Apple. We had a nice drop for 2 days. Now we have a nice pop. Do we get another follow through candle and be back up to where we were? Above 265, you know what dealers are doing.
Good afternoon. Welcome to the watch list. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange on the corner of Wall and Broad. We have a big show for you today. Tom White is standing by and he'll look at the unusual options activity in some big names, including General Mills. We got the numbers, Alphabet, Micron. We've got a price target raise. It's Technical Tuesday, and Kevin Horner will take a look at the key levels of the S&P 500 after it fell 2 weeks in a row. Amazon and Amgen. And our panel will take a look at pullback we've seen in gold and silver. Meantime, there are people calling for gold 10,000 by the end of the decade. 2 hours left in the trading day. Take a look. After a couple weeks of selling for the S&P, 3 weeks of selling for the NASDAQ, we are seeing some volatility. And right now, some up arrows for all 4 of the major averages. The S&P 500 at 68.57, up 21 points. The NASDAQ 100 up 39 points. That's just over 1/10 of 1%. The Dow is up 1/4 of 1%, gaining 128 points. And the Russell also with an up arrow, 1/3 of 1%. Oil and gold broke lower. Gold's down $131, just over 4,920 ounce. And oil sitting at 62.35 the barrel. The VIX at 20.04, and the 10-year bond yield at 4.06. Kevin Hanks is with me, host of Fast Market here on Schwab Network. And another over the unchanged line kind of day, searching for direction. Now, meantime, even though the
Apple's still going.
we have story stocks up 12%, down 12%, upgrades, downgrades, earnings. So we have a lot to go over. But it's very interesting how the market stays around this unchanged line.
RGTX.
Well, Nicole, I think look no further than the information technology sector of the S&P 500. That's driving. It drove the market on the downside this morning. But communication services was also down. Consumer discretionary was down. But then information technology rallied. And remember, what's in that sector is that all-important software sector. Software stocks, they're still heavy. But the rest of information technology, and many names in that group, that information technology sector is now up almost 1%, 0.9%. So that rally has really brought the rest of the market up. Now, there were other things that were higher to start the day, like utilities, which are now lower. They were up this morning. As real estate is still higher, but those are the lower interest rate sensitive names. So pretty interesting day here as information technology has bounced back to be up 0.9%.
Okay, Apple's still looking strong.
Driving
CYBT
I mean,
Walton.
we are seeing Norwegian, for example,
Noah.
up 12%, almost 13%.
Okay, Bitcoin managing a bounce as well. That's helpful. Apple. What's IREN doing? IREN. Still basing. Okay, Apple though looking good. Nice reversal on Apple. Yeah, Apple looking good.
I have it right here somewhere. I can't find it, but he's the ex-president of Royal Caribbean. They want to put him on the board, and they want, like I said, they're an activist group. They've got a 10% stake, and they want movement on some of those board member names. Nicole.
Yeah, without a doubt. And also in Southwest Airlines, right? I mean, isn't that the other one as well that has this up arrow, right?
SUND.
Right. Now, Southwest, this is a great story because the change that they've made is noticed by UBS. They upgraded the stock from neutral to buy from neutral with a price target of $73, up from 51. Now, if you notice, it closed around 51 on Friday, but that's a pretty substantial upgrade. Here's the three things that they're doing: more legroom, assigned seating, and checking bag fee. Those three things equate to one thing: revenue, revenue, and revenue from all those. And just like for the larger firms like Delta and United, that's how they're making
Apple.
premium seats and, frankly, international flights. Now, Southwest doesn't do international, but they can certainly do premium seating, and they can make you pay for bags. Their conversion of their airline into a more suited with the other airlines has got UBS very positive on Southwest.
Yeah, understood. And the name you're looking for, Elliott, has been privately working with Adam Goldstein, former President Chief Operating Officer of Royal Caribbean, and one potential board nominee as Norwegian. I wouldn't leave you hanging. I know you had it, so I had to pull it up for you. And so then I wanted to know what his name was. Let's talk about what's going on with Warner Brothers.
So this is a new twist in this whole Warner Brothers Discovery, Netflix. So here's what they did. The potential acquisition of Warner Brothers has taken a turn. Netflix granting a 7-day waiver for Warner Brothers Discovery to reopen takeover talks with Paramount Skydance. That's Larry Ellison and his son are trying to buy Warner Brothers Discovery also. Despite this, Warner Brothers Discovery's board continues to recommend that shareholders vote in favor of the existing $72 billion deal with Netflix. So they basically give it.
Nvidia still pushing. Nvidia looking pretty a lot better. Still in a range, but looking a hell of a lot better. Back above the 50-day. Google. Can we finally get something going on Google? It's been off for over a week. Below the 50-day. Need a bounce. All right, let's look at the stocks that are actually moving higher on the on the NASDAQ 100. We got Coca-Cola Europe blasting off. Constellation Energy. Nice follow through on Constellation. Should see more upside. Apple, of course, number 3 on the NASDAQ 100. Airbnb. What's ARM Holdings doing? ARM Holdings. Okay, it looks like it's going to keep going. ARM. Nice bounce at the 90 EMA. ARM Holdings. Let's see, how much do I have here? Let me just check my ARM position. Okay, ARM Holdings. ARM looks good. Let's see, the ceiling here looks to be about 135.
inflation number is the slowest annual pace since May of 2025. In capital markets, this cooler report is being viewed as a green light for the Federal Reserve to potentially ease its restrictive policy later this year. Immediate reaction, however, Treasury markets. Lower inflation reduces the need for higher interest rates. Bond yields, which move inversely to prices, fell sharply. The 2-year Treasury, which is very highly susceptible to Fed policy, dropped roughly about 4 basis points right after that announcement. The 10-year Treasury touched a 3-month low, which is approximately 4.06%. This rally in bonds suggests investors are now more confident that interest rates have peaked and will likely start a gradual descent in the second half of 2026. Stock futures did reverse. Some and most of the CPI report
ARM Holdings looks good.
data came out. Markets were trading lower ahead of the CPI's release, reflecting a risk-off sentiment and AI sector weakness. But once that CPI print showed inflation cooling more than expected, futures moved back up and in some cases flipping from modest losses to small gains.
All right, I bought some 130, 140, 130, 135 call spreads on ARM Holdings. Added to my position. Excuse me.
Durable goods had investors breathing a sigh of relief with items like appliances and cars that showed minimal price increases, easing fears that recent trade tariffs would spike inflation. A quick look at the dollar suggests the dollar index did move lower. When inflation cools and rate cut expectations rise, the dollar becomes less attractive to yield-seeking international investors.
165 debit.
Gold and silver rallied, with gold surging, futures surging about 1.3% to approximately $4,985 an ounce. Silver saw a significant surge of approximately 5%. Overall sentiment, while futures inched higher, the markets remained cautious due to sticky core inflation, which stayed at around 2.5% unchanged. Economists and the Fed used core as a tool to filter out the noise of volatile prices.
I'll put a stop about 65 cents.
They want to see what the true underlying trend in the economy is. For example, food volatility is a hurricane can spike orange juice prices, or a geopolitical event can spike oil. That's why the Fed urged to remove these markets.
Alicia, may I jump in? Sure. Okay, thank you for that. What areas of the market do you like?
She understands. She understands. Like Nicole. Oh, let's see what's going on with Kelly. Kelly.
That's much more tactical, moving from place to place. These wealthy families, they're strategic. They're really saying, like, what should I have? What asset classes should I have for the long run? How much exposure do I have to tech? And they don't place heavy bets in single segments. They tend to be diversified. So as you see this rotation, they're in the middle of it, no matter which way it goes. Because what we're seeing is investors are staying engaged. They're just moving the chips across the table.
It always made me think with your X posts, formerly known as Twitter, because you highlighted something about the real rotation, and maybe that is U.S. to international, and that the S&P 500 has made a lot of people a lot of money the last few years. That's great. But if you've invested, there we go. If you've invested just around the world, you said, I'm going to rotate a little out of America, maybe throw a little money to Germany or Rick Santelli's Japan, or whatever it might be. You've done better. You see that continuing.
Well, it's been fascinating to watch investor sentiment around this. I mean, 2000, 2010, S&P 500 earned zero, like almost statistically impossible, while international everything else crushed it. But then the next decade, the U.S. crushed international. Everyone thought there would be an evening out. Coming into this decade, we're now more than halfway over. All the major places, no matter what's Vanguard, Goldman Sachs, BlackRock, predicting U.S. would lag behind overseas, and that large cap would lag small cap, and that didn't happen at all for the first 5 or so years of this decade. Large U.S. tech crushed everything in the world. It didn't matter what it was, and that's because the AI revolution was taking place inside of big U.S. companies. So last year we see this rotation to international, and wow, is it a change? The biggest performance discrepancy between international and U.S. stocks that we'd ever
All right,
seen.
ARM Holdings looking really good.
Whether it can continue or not is questionable.
ARM Holdings.
Still a better dividend yield, still a better P ratio. Sentiment is moving overseas. People don't like the United States anymore. And then you see
What?
people in the U.S. say, "Hey, Europe's a museum."
Who doesn't like the United States? What's the matter with you? That's blasphemy. Apple is still going here, Apple.
This huge tax on unrealized gains. In other words, stocks you make money in but having sold you might get taxed for, which, to be frank, and I love all my Dutch friends, is the dumbest thing I've ever heard. So why is money going over there? Well, so what you're talking about is more like this worldwide sentiment that we see, because the gap between the wealthiest and everyone else is more significant than it's ever been in history. This is going to be a real issue, a Ray Dalio level crisis that we're going to eventually have to face. I agree with you. This is not the way to solve it. All the Netherlands is going to accomplish is to get everybody that has a lot of assets, which tend to be your more successful citizens, to move somewhere else. But separate from that, a lot of people look at Europe as becoming a little bit more pro-business. It's getting easier to do business there. And, as we're
Apple at the highs of the day, Apple. Nvidia still pushing. So is Netflix, Tesla, Google, Amazon, Meta. Everything is moving higher now. Hammer. Okay, ARM's daily chart looking good. Looking for a break higher. Okay. Apple still flagging. Apple flagging. ARM. ARM. Looks good. ARM Holdings. Daily. Mm-hmm.
OLB.
OLB.
JDZG.
OLB halted to the upside.
OLB.
Apple looking good. S&P did fade a bit from that high. Looking for a follow through. Let's see if we can get some follow through here. S&P. We're up against just below resistance right here. Okay, fair value gap. It'd be lovely if we could hold up here and just close right where we are and then follow through tomorrow. Couldn't be that easy, right?
The bid process for Warner Brothers Discovery went from heating up to red hot nearly overnight. Netflix granting Warner Brothers Discovery a 7-day waiver to reopen talks and re-engage with Paramount Skydance. That is helping Warner Brothers and Paramount stock today, while Netflix, which believed it had won the battle to buy Warner Brothers, is lower. Now, unless you are a media investment banker or executive, you may not be sure entirely if the story matters so much, but it does. Let's find out more and talk about this with Wolf Research Media and Entertainment Senior Analyst Peter Supino. This is, I understand this is a media battle. Not in media, maybe people don't care, but this is like a between the billions and the egos. Peter, dare I say, you couldn't script this fight better.
It's been a drama already, and the drama keeps going. The dynamics here are that streaming is consolidating, film and television are consolidating, and that is a function of all the competitive pressure on all the players involved. And Warner Brothers owns some very special assets that really are the fulcrum of that consolidation process right now. And Warner Brothers is in a position to get exactly the deal that it thinks is best.
Yeah, and Warner Brothers shareholders are going to be the winners here, I would imagine, no matter who ends up winning it, whether it's Netflix or whether it's Paramount Skydance. But then,
All right, can we go? S&P going to go or what? Certainly would be nice, right?
Netflix without Warner Brothers will be just fine. Netflix has margins that are 3 times higher than the next most profitable streamer. Netflix has revenue per customer and a total amount of customers that are superior. And so it's the best mousetrap for monetizing video, long-form video, in the world. YouTube is the best mousetrap for monetizing short-form video. And so Netflix is in this wonderful position in which winning Warner Brothers would make it a stronger Netflix.
All right, can we get through this level or we're going to keep running up against resistance? NVIDIA is still going. Apple's trying to do more damage to the bears.
Paramount Skydance have enough to go it alone? Or if this deal doesn't work out, do they have to do something else? Just on their own, even with CBS and whatever else, they're just not big enough.
OLB may resume in less than a minute.
Respect for Paramount's ambition and the quality of their asset, the importance of their asset, we're concerned about the standalone path for Paramount. They have an underperform rating on the stock, and about 3/4 of Paramount's profit comes from linear television. The portion of that comes from CBS is a pretty good version of what it is, but the majority of it comes from.
All right, we're trying to get something going. Okay, let's see where we're going to go with this.
And how's CBS doing? They're online. People are dunking and dumping on Bari Weiss and the new CBS management. Talk that Anderson Cooper may leave 60 minutes. It's all.
Okay, let's go. Let's push through this level. All right, S&P futures rising. Futures are rising.
Important linear TV network in the country as a massive sports product, the news product that you alluded to, a big scripted entertainment product, and yet Paramount Plus, which is
6,800 held for now.
in streaming,
coming out of a squeeze.
And so it's safe to say that Paramount is struggling to transition what has been a very successful linear TV business to streaming. In the meantime, the Paramount Film Studio has had some big hits, but it doesn't have the depth or the breadth of other big name film studios. It's had a quiet decade, really.
Yeah, we'll leave it there, Peter, but I'm not sure a quiet decade is what anybody in that industry wants to hear. But, you know, like all things, maybe it's not as bad as people say it is because they like to make a political statement. Peter Savino, Wolf Research, cut through the noise. We appreciate it, Peter. Thank you very much. By the way, speaking of media, be sure to tune in today. Later on CNN.
Running into some resistance again.
Julia Borch will sit down with Netflix co-CEO Ted Sarandos. Big interview, wide-ranging, a lot of questions around this. We'll get some answers. 4:30 p.m. Eastern, 1:30 out west. All right, coming up, we're going to get very high energy with some red hot energy stock picks.
You may res in 10 seconds.
All right. Trying to push a bit higher, trying to get through this level.
They said tighten supplies and memory pricing, helping this company for the foreseeable future.
Okay, tonight earnings, Palo Alto, Nano Nuclear, and Devon Energy. Okay, all these are under 10%. Nano Nuclear, be nice to see Nano Nuclear start to catch a bid along with Oklo and SMR.
To the upside, this is where that trader needs this stock to go over the next 3 days. That's only about 4% above the current share price. So that's well within some of the moves that we've seen to the upside in Micron. But this trader's betting on some more gains into the end of the week.
Okay, I'll throw in too that the Bank of America analyst Vivek Arya is saying about the AI data systems, the center systems, just talked about the spending that goes on and the value that goes on. The total addressable market is this particular call, which was previous 1.2 trillion by 2030. Now just raise it to 1.4 trillion. You know, what's a little point? Yeah, from 1.2 to 1.4 trillion dollars by 2030. So doesn't seem like the AI revolution is stopping anytime soon with these kinds of calls from the likes of Bank of America, for example, and the spending. You know, we were talking about the 650 billion. Tom White, thank you.
Thanks.
Always wonderful to see you. Really appreciate it, Tom. Thank you. Coming up, let's focus on ETFs because Amplify has some funds to help you to trade silver, nat gas, blockchain. Okay, the firm's CEO will join us next.
SMGF.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation threats and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwabnet.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand.
All right, still running up against resistance at the moment.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network, Schwab Network. Trading
All right, getting rejected.
All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. I have some rumors for you right now. Check out Apple, up nearly 4%. It announced that it will hold a special experience event on March 4th here in New York. Bloomberg also reporting the company is accelerating work on 3 new wearable devices, glasses, a pendant, AirPods, all with AI capabilities. So get to that special Apple experience. Put it on your calendar. And then we have Genuine Parts, which is a big laggard, the biggest laggard on the S&P 500, down about 13%, after a double earnings miss and weak full year EPS guidance. The owner of NAPA Auto Parts also announced plans to split into 2 separate companies, one focusing on automotive and the other focusing on industrial parts. All right, let's take a look.
Okay.
I mean, we know that there's been record inflows into
Apple, good. GE, just flagging at the high. GE. Top 10 on the NASDAQ 100. Coca-Cola Europe. CEG, Constellation Energy. Apple's number 3. Warner Brothers Discovery, number 4. Airbnb. Number 5, GE Healthcare, AstraZeneca, Broadcom, PayPal, NVIDIA, and DoorDash rounding out the top 10. We got 260 stocks advancing on the S&P 500. 260, that's just over half of the S&P 500 stocks advancing. 56 on the Q, same thing. Just over 50% of the Q. S&P, NASDAQ Qs, 56 stocks advancing. And IWM about 850 stocks advancing. We're looking for a push through the supply overhead that would require institutions. It's 2:30 on the East Coast. We're watching for institutions to tell us what they're going to do next. That'll usually show up in dip buying if they're going to do that. Apple above the 260, 265 call walls, that becomes a short squeeze above 265. Okay, we're right at 265.50 right now, 265.50. Apple 265.50. Above that, call walls can continue to squeeze prices.
Yeah, silver, has been down this year from its highs, about $40 down from 115 to about $74, $75. But believe it or not, junior silver miners, the small cap silver miners, have done well this year, up 22%. Amplify is the only junior silver miners ETF, ticker SI.
Futures grinding up.
Had a great year last year, up over 185%. And then continued this year, up 22%. Seems like a great outlook for silver. We've seen some correction. But remember, about half the demand for silver is like gold, store of value. The other half is industrial demand, Nicole, which is data centers, electronics, batteries, solar panels. We think silver is kind of one of the future metals here that you want to continue to have exposure to. We have this SILJ ETF, and then if somebody really doesn't want full exposure to that, we have a covered call version of it, SLJY, which writes covered calls on those junior silver miners, still allows for some upside. That has gained 11% this year. So 2 ways to play silver. We think it's just a metal that will continue to be very
Still running up against resistance, S&P.
That's right. So we think U.S. natural gas infrastructure.
NVIDIA still going, by the way. NVIDIA, I don't know if you're paying attention, but NVIDIA is continuing this trend higher. Chips. NVIDIA is still rising. S&P trying to push out of this level. All right. All right, we're starting to rally now.
Tokenization and stablecoin. This is an actively managed ETF, and it's managed to kind of sidestep this huge drawdown in Bitcoin this year. Bitcoin down about 20-some percent today, Block down 5% for the year. So it's a risk-managed approach to blockchain in general, which includes crypto, it includes Bitcoin, it includes other types of tokenization and stablecoin usage. Since 2018, the fund has been out. It has averaged 18% a year. It's a 5-star rated product. So we think Block is great for someone who wants exposure to this blockchain crypto revolution or wants to have an actively managed approach that kind of tries to sidestep some of the risk. We're not going to perform as well as Bitcoin or crypto on the upside, but we're going to have some defensiveness on the downside, and that's what we're seeing.
We're trying to get through this area, but we're still running into this resistance overhead.
procedures are, I think, very valuable in this marketplace where you can see big run-ups and then definitely volatility that takes some of these spikes downward. And you need, we think, active management to play that. And again, over more than 8 years now, we see an active managed approach produce some alpha to the tune of 18% a year. And it's one of the reasons that we have a 5-star rating in the space, the block ETF.
Banging up against resistance.
Christian Magoon, CEO of Amplify PTS. Thank you. Coming up next, Technical Tuesday, Kevin Horner. Take a look at the key levels to watch in the S&P 500, Amazon, and Amgen. We'll be right back.
OLB.
FJET. TE. OLB.
PHOE. OLD.
All right, we're going to try again.
Sometimes,
OLB.
you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Coming out of the top part of these Bollinger Bands, if we got enough energy, watch the volume. It should see MACD cross as well. Okay, watching MACD here. Okay, we just got over an hour and 19 minutes to go. Hour and 17 minutes to go. Tesla trying to make a higher high. Tesla.
November, peaked then. It's down about 23% or so from that closing high in the fourth quarter. Year to date, we're off 13%. But the 198 level is very interesting. You'll notice we've got these Fibonacci retracements drawn in here. That 198 is the 61.8% retracement of the entire move from the April 7 lows, following the Liberation Day sell-off. So we've had this wonderful rally and a pullback. That pullback can give traders confidence, maybe just put a foot in the sand right here, kind of toe dip into a position on the long side. We are oversold pretty dramatically too, if you'll notice the RSI down below. But I have to point out, RSI oversold conditions does not encourage a buy. It does not suggest a bounce. We can stay oversold for an extended period. But one thing that traders are interested traders, bulls and Amazon here, are going to consider is their risk reward opportunity here. Because if you are wrong and we get a close under 198 or maybe under today's low, for example, the odds are that trader's just going to throw their hands up and say, well, I was wrong about the timing. I'll take a small loss. I'll move on. But if this level holds as support, the opportunity for a bigger upside reward does favor the bull at this point.
Right. And look, I mean, all the back 7 names are down this year. All, you know, at least this morning. I didn't check them all in the last 5 minutes. But for 2026, all mag 7.
Okay, looking good.
Let's look at that.
Yes.
Broadcom.
Healthcare, you've already seen it's had a better year than a lot of the other group and spaces in the market. This one's up 12.5% year to date already. And they built, following the most recent earnings report, built a beautiful
Broadcom, nice reversal today. Broadcom, off the 200-day moving average, rejected by the 50-day last week. Broadcom, Apple though, Apple looking good too. Apple. Sorry about that. I swiped in the wrong direction.
Pullback, which is what you want to see when we are in the process of building that bull flag situation. So just consolidating, building the flag, and trying to possibly break it today.
Okay, Kevin Horner, great to see you every Tuesday. We really appreciate
Watching for this resistance zone to hold.
Shocks to second rotations. We're tracking the cash right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do they. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Time to talk precious metals as we saw gold and silver soaring in 2025. Continue that really incredible move and only to pull back. And they are moving lower today. Stephen Orell, VP Portfolio Manager of the OCM Gold Fund, and Axel Merck.
Okay, turning back down. No follow through. Getting rejected again.
Chinese are in their new year, and it's our opinion here at OCM that the precious metals price has been, been made in the East right now. So when they're on holiday, the West can come in and can take it down a bit. And you've also had gold move in hockey stick pattern, and people jump on the momentum of the hockey stick pattern, and usually when things have great momentum, they tend to have momentum downwards too. So I think when anything goes up in a hockey stick like this, it's tends to have downward momentum at the end.
Axel, your thoughts?
OLP may resume in less than a
Well,
minute.
you earlier mentioned the MAG 7, or should we call them the LAG 7, being down year to date. Keep in mind that gold is still up year to date. I think that the main thing that has changed is volatility has come in. I think it started a year ago that speculators moved from crypto and meme stocks back to precious metals, where they historically are at home. The speculator historically loved the precious metals, was just distracted from the very long bear market. They're back. Volatility is elevated, significantly so, of course, right now. I don't see any quote-unquote trend broken or anything like that. The folks that are buying precious metals continue to do it for the same reasons. Now, obviously, there's always a price maximum that you want to pay for it.
OLP may rise in 10
Unless
seconds.
we see fiscal discipline break out in Congress, the Europeans stop spending money on military and infrastructure, and then the Chinese, when they're back from their Lunar New Year, also cutting their spending. The reasons to diversify and all gold are still there. Question is, of course, always at what price you want to be in the market.
Right, understood. When we think about this, Stephen, I think about why people are buying gold, and often we think about gold and the U.S. dollar as the hedges, particularly as other economies are seeing their currencies dropping and/or deflationary pressures that are happening abroad. Here at home, people may run to gold. Continuing, do you expect that rhetoric to sort of, that's what I read about between now and the end of the decade. Does that seem like a narrative that makes sense to you?
100%. I think going off Axel's point of, do you see federal spending going down? I mean, Apollo just put out a great chart about the CBO's estimates about
Apple at the high. Apple.
U.S. federal debt being 125% of GDP and up to 150% in the next 30 years. Here we've done our own math on the CBO's estimates back to 2006, and they tend to underestimate by about 50%. So do you want to be holding debt when debt continues to go, U.S. debt continues to go up? I think gold becomes the beneficiary of that trade. So I don't see gold, on the long haul. It's our thesis that it's going to continue its correlation with U.S. federal debt outstanding.
And Axel, we think about European defense spending, a factor of spending that we're seeing as a factor into precious metal performance. Sometimes silver can be viewed as an industrial metal. Axel, is it going to be going forward the next few years? Your thoughts on the precious metals? The same story for silver and gold, or a little different for each?
Well, they've always been distinct. Gold in the long run is really not correlated to anything. By the way, also key distinction to these crypto assets that are correlated with risk assets. When you go to silver already, you have significant industrial use, and that just further elevates the volatility in it. Because on the one hand, yes, if you have a economic downturn, you expect interest rate cuts and metals do well, but then of course industrial metals metals, which silver can be part of, don't do so well. What's unusual in this current environment is that we are expecting the economy to hold on, but at the same time we have easing on the Federal Reserve expected, and we have this massive stimulus in the U.S., in Europe, in Asia. And so one way I would like to phrase it is that the interests of governments in debt are not aligned with the interests of savers. And holding bonds is, of course, the traditional quote-unquote safe haven, but many people are disenchanted with gold. And so I'm not saying everybody's going to move the money from bonds into precious metals, but gold is a beneficiary of that trend.
Now here, Stephen, you did note a couple of things. Whoever was put in the place to take the new, be the new chief of the Fed, right? In this case, it was Warren. She said it triggered the sell-off, but maybe that would have been anybody. Tomorrow, we're going to get Federal Open Market Committee minutes. You noted names like that, you know, with the spinoff there. Tell me a little bit about some of these thoughts here.
Apple pulling back from the high. Looking for a follow through tomorrow. We're going to see some profit taking off the highs, no doubt.
Gold's over $1,000 above that today. So if you're looking for something that, you know, is going to redistribute cash with these gold prices, so that's something to take advantage of.
And you both said don't underestimate the absence of Chinese buyers, you know, this week for gold and everything, you know, that it can cause some oddities in the market. Stephen O'Reilly, thank you both. Good to see you.
Still seeing some selling into strength. We're holding up above 6,800, so that's a good thing. We do have resistance overhead. 6,900's a ways, a bit higher there. 6,900's right there. Okay. Remember, February is not the kindest month of the year as well. So far, we're running up against resistance. Can we get over this wall here? This wall of resistance? Hard to say. But we're above 6,800, so that's a big plus for the bulls. Chevron coming back off the lows. Chevron turning back up. An earlier dip getting bought. All right, so they're still buying Chevron. ExxonMobil, similar kind of look. Phillips 66. ConocoPhillips. Also, Coca-Cola Europe. These are doing fairly well. Coca-Cola Europe. Okay, Coca-Cola Europe. CCEP. Gapping up. Buyers at the low of the day. Pushing this back up to the high. Apple, Constellation Energy, headed back up to the 200-day, just a little bit overhead now. ARM Holdings, ARM pressing higher, ARM Holdings, looking for this to break out above 130, not the 130, 135s, 135, 140s. Should work too. Blah, blah, blah. All right. S&P trying to rally up. Okay, nice retracement back up to the highs after gapping down, rallying, moving back down, and then back up again. Looking good. Very choppy today. The main thing, though, we got to take away is that we held 6,800 for a third time. And now we're bouncing back up. All right, back up into this range.
Is it widespread? Is it everybody? Of course not. But there's a whole host of companies talking about what it's going to do down the road. But there are definitively companies right now that are seeing tangible benefits, check-in times from casinos and fraud prevention at banks, et cetera, et cetera. They're seeing tangible effects of it. Now, again, this is just
Very close to recycling. If we can get a follow through tomorrow, we get stochastics to turn up. Carvana on the move, Freno. Okay, thanks. Carvana. CarMax held up better, right? CarMax? Yeah, CarMax held up better. Warner Brothers Discovery, back above the 50-day. Airbnb, real estate, XLRE, real estate continues higher. Real estate sector, XLRE. GE, bullish day on GE and GE Healthcare, GE Vernova, Lockheed Martin, LMT, grinding higher, Lockheed, SCHD, consolidating up here, SPHD, same thing, SPHD with a bearish engulfing candle. Buyers stepping up the low of the day. This has made a nice run, about 11, 12% since the break higher on January 8th.
these companies on down through the GE Vernovas and the Amphenol's, the SanDisk, etc., have universally said demand still far exceeds supply from the top down to the bottom.
So you broadly think that some of the fears are overstated.
I do. In general, I think some of the fears are overstated.
Okay. And you think that the rally, to answer my question from the very top of the show, is intact?
Oh, I do. You've got 2/3 of the S&P 500 outperforming the index, and at any given moment in time, that should be half. So you've got the equal weight index is basically at a high. The mid caps are basically at a high. Not the Russell 2000, but the S&P, the SNL is basically at a high. Even the S&P 500 is basically at a high, and I think that speaks to you look at what's going on with energy and materials and utilities. You have FAN and TAN ETFs basically at highs. Look obviously Booking and Expedia and
Apple. Apple's still trying to hold on to these gains, maybe push a bit higher.
Okay, so Morgan Stanley today says, despite the recent tech sell-off, several constructive drivers for equity.
Yeah, Marriott looks good. He's got Marriott on the screen here. Marriott at the highs.
Savita at BofA says tech still leads. With your perspective.
Oh boy. Okay. Yeah, the main takeaway today is that we held 6,800. Bitcoin rejected a VWAP. Bitcoin. Robinhood. Still trying to hold this level. Robinhood. MSFU.
With which I find arguments against to be quite nonsensical. From a top-down standpoint, you have the Fed cut rates, so you have the lagged effects of some of that monetary stimulus that works its way through the system. The rally in the economy, so to speak, seems to be broadening out. You've got the ISM index tipping its head back above 50. That's the type of thing macro strategists like myself use to predict some sectoral adjustments. Jobless claims remain low. The jobs market, which had certainly been deteriorating, seems to have been stabilized. This seems to be stabilizing. So you have those macro tailwinds, and then from a micro standpoint, earnings season went quite good. Commentary up and down the space. Again, I mentioned AI earlier. No one talked about any issues on the demand side. Consumer-focused companies like the credit card companies, et cetera, said everything seemed to be fine. And again, you're seeing some of this productivity. From time to time, you'll see productivity-enhancing AI measures taking hold in insurance and banking and some retail-focused places. It's helping some of the logistics companies put trucks and rails where they need to be with a higher degree of confidence. So I think, again, from a macro and a micro standpoint, you've got some tailwinds here. And I know that we're constantly, since 2008, and the market in general is looking for reasons to be bearish at every turn. But it's not always the case. And this appears to me, at least for now, to be one of those times.
Okay, so stay with me, because as I mentioned earlier, we are on Amazon Watch today. That stock's in danger of notching its 10th consecutive decline. We're talking about the longest losing streak since 2006. Now, it is on pace. It is worth noting, Kate Rooney, who's following that money for us, that it is, if things hold, on track.
All right, Apple. We've had a really good day, so don't want to throw it away. Our S&P is starting to pull back now. Apple. S&P 500 cash. Looks like we're going to pull back some more.
System made delivery a lot more efficient. That boosted margins, and then AWS is another example of that. Now $142 billion run rate. So we'll see, but investors just don't seem to be trusting that right now, Scott.
Yeah, not right now, but we shall see, as you say. Kate, thank you. That's Kate Rooney. I mentioned at the very top of the program, Apple is
bouncing today as well following a tough week. The company announcing a special event on March.
Continue to fade S&P. In this bounce, I would probably be reducing. I've already been doing that, reducing my exposure a bit more. If we do bounce higher tomorrow, that'd be great. More opportunity. We need some catalysts. I don't know. Not really, Mondo. Not really. Let's see what the hedge flows look like. Hedge flows dropping. All right, hedge flows continue to fade. We got resistance overhead and a lot of positive gamma resistance overhead. Gamma resistance. All right, we got 49 minutes to go. 49 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Watching. It is Tuesday, February 17th. 49 minutes to go.
Questions for CEO Nikesh Arora: how much more capital will need to be allocated to grow inorganically, and to what degree is this negative sentiment surrounding software impacting customer demand?
Okay, these oil and gas names continue to come off the low. Buyers stepping up at the low.
What to expect this evening and what's been taking place in that group. It's good to see you. So why has cyber been swept up in everything that's been going on?
We continue to fade. S&P continues this fade now. All right. Big spinning top on the daily. Over there on the right. Spinning top on the daily. Be nice to see a little rally, but I don't see it coming at the moment. Okay, Nano Nuclear has earnings tonight. Nano, let's see if there's anything we want to do here. Nano Nuclear at the lows. Palo Alto's got a 7% expected move. Palo Alto, PANW, Palo Alto. This could go either way. Palo Alto, Devon, DVN, and not really that interesting. Devon, we're at the highs. Devon Energy. Devon Energy. 4.5%. Devon Energy. 4.5%. 10% would be about $9. $10. Easy to calculate. 55 overhead, 35 below. Mhm. Probably not much in the way of open interest either, right? Devon Energy. Yeah, there's no premium here, Devon.
Sentiment super negative, and that's why, to me, Palo Alto, CrowdStrike, those are the ones that I view as just names that, not even just in cybersecurity, but overall attack are two of the top.
I mean, I mean this respectfully. I truly do. I feel like you're a defend first, ask questions second kind of an analyst, right? The companies have an upset, very quick to come out and defend the name, defend the price, defend your call, etc. You afraid you're missing something on any of this stuff?
And look, it's valid, Scott. What I would say is that, but that's all the work that we do in talking to the hundreds of resellers, partners, all the checks, all the travel. It's the one that gives me the confidence to where if there's a quarter that we miss, or there's some nuance where the stock's down, the reason I defend is because of all the work that goes into it. And I know that I feel like based on our thesis and what I've done 25 years, I can defend it despite maybe sort of a speed bump or tripping over the shoelace. That's why I think sometimes, especially on some of these things, you have to be able to see forest for trees. That's all the work we do.
I feel like there's, speaking of seeing, I feel like there's a level of opacity here that makes it almost impossible to see. Because as we learned over the last we were showing that wall back at CNBC of at first it was software, then it's truckers, and nobody had truckers being affected by all of this on their bingo cards 2 months ago, and then we're on to the next sector, and then we're on to the next. We start asking ourselves questions. Well, maybe we need to actually sit back and see what happens before we
Palo Alto Networks.
in almost any segment of the market.
Yeah, and look, and you and Dan, that was a great conversation. I think that hits on it.
Palo Alto, PANW.
Some of those deals start to maybe pause, get downsized on the enterprise.
Palo Alto.
Salespeople start to get let go. Then that's one where it's like, okay, maybe we're missing something. There's something happening structurally that's not giving us
7%.
That's not happening.
Palo Alto 7%. Palo Alto.
I get what these stocks are telling you, but that's to me, it's like our career has been built in times.
Okay, market's starting to bounce a little bit. We don't have much time left if we're going to get any kind of rally here. Palo Alto.
Truist, Keith Lerner, Dan Greenhouse, of course, is still with us. Bryn, you first. I'll have you just look towards what's been happening with cyber. It's very, very popular trade on our shows among investors like yourself. What is going on here?
In some ways, well, I mean, right now, earnings and margins don't matter. It's all about sentiment. And I think that the one area where I'm actually quite certain you're not going to see disruption is within cyber. No one's going to experiment with their cybersecurity. I get it. Everyone's going to use a note taker here. You can put cloud, and you can go buy an Apple Studio with your Mac Mini, put an API, and yada, yada, yada. But when it comes to cybersecurity, there is no company that will experiment. I mean, go ask Anthropic who they use. They either use CrowdStrike or Palo Alto. They're not using themselves. And so this is this moment of time where sentiment and the shorts are just pounding these names. And if you take a step back, watch the technicals, find an entry point, you're going to see these companies using AI as a tool. But I think this is just where you have to respect sentiment, and sentiment right now is arguably
okay.
I'll be adding to Bug, which I own, and I will continue to add because I do not even remotely believe all of this nonsense that like last week some penny stock from a trucker penny stock announced something about efficiencies, and then like the trucking stocks are down. It's just like shoot first.
Palo Alto Networks with earnings tonight. Let's take a look at this real quick. Palo Alto. Palo Alto.
You say
220. 200's a strike call wall. 150, 140. Yeah, it looks like they're looking for more downside. Palo Alto. Okay, so Devon, I've been checking both of these. Let's see. Palo Alto, PANW. Pretty cheap call side. Put side is expensive. Palo Alto. So looking for more downside, looks like. No, not a whole lot of open interest, too. 175. $140, $150. A little bit of open interest at 150 and 145. Looks like they're selling some puts there. That's a 22 delta. I don't like it. Okay. Nanonuclear, right? Nanonuclear. Calls are expensive. Nanonuclear calls are expensive. Okay, let's see what that looks like. Nanonuclear. People betting on a bounce. Nano.
Much better. The reports were all quite good. Estimates went up, not down. And all the companies that everyone says, the software companies that everyone says is going to be destroyed by AI, came out and said they see no effect of it right now. Now, of course, these names are not down because of what's happening right now, but a year, 2 years, 5 years.
Yeah, people are not betting on this. There's a little bit of volume at 28 strike. Those are 36 delta. Open interest is only 200. Yeah, I don't like it. There's really not anything going on right here. People are just kind of like chilling out. Nanonuclear, Devon, and Palo Alto earnings. I don't see a lot of reasons to do anything. So I have to wait for tomorrow. What's coming up tomorrow? That's a good question. Tomorrow morning, nothing. Tomorrow, aftermarket, Carvana, 13%, DoorDash, 12%, 11%, eBay, 8%, Oxy, almost 4%, Walmart. Okay, looking for Walmart earnings. Etsy, Lemonade. Lemonade's 14.5%. Okay, well, maybe we'll do something on Lemonade. We'll see. What does Lemonade look like? Won't do it today. Do it tomorrow. Lemonade. LMND. Lemonade. Yeah, that one fell off. Markets are not looking that great. By the way, I was looking at put credits. Or rather a put fly. Okay, put fly example right here. Okay, so take a look at this. This is about $3 for downside protection. $3. If we were to start to ease down towards 6,600, if we were to lose 6,800, start heading towards 6,600. This 100 strikes, 100 points wide. 6,600, 6,500, 6,400. So what you do is you buy the outside wings. You buy a put above and below, and you sell two in the middle. That finances the put fly, and it run you around $3, $300, with a nice payout if it starts to grind lower. Preferably, you'd want to see this grind lower, not like gap down 200 points. Obviously, that's not going to happen, but so that's a put fly I'm looking at. Maybe I'll do something with that.
We're just getting started here on the bill. Up next, the financial arms race heating up in the NBA. CNBC speaking exclusively today to LA Lakers team governor, now minority owner, Jeannie Buss. Doesn't talk often, so you have to hear what she says about her franchise next.
Okay, we've got 34 minutes to go. 34 minutes. Okay. Still fading. S&P still fading here. We tried. We tried to get up above this resistance. Couldn't do it. Not enough time left now. Maybe tomorrow. Maybe tomorrow we can get above that 50-day overhead. 50-day is right there. 21-day. So 6,800 is the level we need to stay above this week. 6,800. Apple. Still flagging up there. Apple. Coming back a little bit. Apple coming back a little bit. Apple. Okay, that's fading like the S&P right now. Looking for a follow through tomorrow. Hopefully we get back above the 50-day. That'd be a nice retracement.
Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane Kinghall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Apple's still fading. Microsoft. All right, so we weren't able to get much higher. We are seeing profit taking. Tesla, same thing. Nvidia made a nice run for it. People are cautious. They're taking the profits when they have them.
Companies, just to put apples in perspective. So Amazon, of course, came out with their startling $200 billion capex commitment for 2026. Google at $180 billion, Microsoft $144. Meta gave that range of 115 to 135, which at the time seemed overwhelming. And here we have Apple, 13 billion. Not a typo, just 13 billion. So differences among the companies here, but Apple has traded higher today. We're trading up about 3%, a little bit more than that today on the news of this, plus its new experience that it has announced for March 4th. So a good day for Apple, but interesting to look at their capex spend for the year against some of its primary competitors.
A little short covering.
Sam in New York for conversation with our next guest, Megan Aurora.
Thanks so much for that, Molly. Yeah, that chart just feels like apples and oranges, doesn't it, compared to those CapEx numbers. All right, let's turn our attention to precious metals and welcome in our next guest. As Molly said there, Nigam Arora, founder of the Aurora Report. Nigam, always nice to speak.
What I do notice is that a lot of stocks are over in the left quadrant, which is telling you puts are super expensive. Volatility cheap, and we could see more upside in some of these names. Some of you are already trading Apple. Microsoft, Nvidia had a pretty decent day today. It has been trailing off for the last 15 minutes or so. 30 minutes. Amazon also off the low. Netflix is still hanging out at 70, 77. These are cheap though. Tesla. If we're going to get any kind of bounce, if we get a follow through tomorrow, some of these could look a lot better. Let me just check out ARM again. ARM Holdings. That one's doing pretty well. ARM. ARM Holdings. Okay, this is pretty cheap. So calls are cheap. ARM. I have a call vertical on ARM for April. Looking for that to follow through maybe tomorrow into Friday. ARM Holdings. Talked about this earlier. Okay, looking for a break higher. RSI still rising. Nvidia. Nvidia made a nice go of it, but it's still in this big sideways range. You can't escape this range. This range is really big. Just sideways. It's not trending like it was over on the left. Into the spring last year and higher after the April 7th reversal. Had a nice trend. This has just been moving sideways. Hard to trade this unless you're day trading. I don't know. Dollar likes to day trade these. So coming off the low, that was a nice little trade there. But I'm looking for something more for a swing. Okay, materials again. Materials are off today. Materials. Okay, you can hear the we're selling here. Materials. Communications. Okay, dojis. Could be a lot different towards the Wednesday, Thursday, tomorrow, Thursday. XLE, XLF. There's not a whole lot going on though. The banks bounced. I don't trust it right now. The banks. Once I see it back above the 200-day, then I'll look. I'll like it a little bit better. The insurance companies look good. The big banks look good. J.P. Morgan. I want to see more out of KRE, the regionals, and small caps. Small caps. Small cap S&P 600. Buyers did step up the low today. I'd like to see this break above this level, 167, 1627. If we can get that, then the IWM should bounce. So far, IWM buyers the low of the day. Emerging markets, another area. You don't have to be always in the S&P. Emerging markets look good. IEMG. Trending. EEM. VWILX. Vanguard International Growth. Admiral shares. Weekly. Trending. Okay, let's look at some of the international markets. See if there's anything there. I mean, it's pretty interesting when you have to hunt really hard for areas to put money to work. Looking for more upside. After a big gain into year end and distribution at highs at the moment. Let's see, ACWI, that's trending. Argentina, no. Chile, no. Emerging markets, maybe. Ireland, no. Australia, yes. Commodity rich Australia. Let's see what the weekly looks like. Australia. Okay. Canada looks okay. Sweden. Germany looks okay. Weekly trend. Germany. trending, bouncing. Germany. Italy. Okay. Switzerland. Switzerland looking pretty good, breaking out. Switzerland. Switzerland looks good. Netherlands, okay. Spain, back above the 20-day. Spain, trending. Not super compelling. France, trying to continue. France, above the 20 and 50-day. France looks like it might do something. Singapore, Taiwan, United Kingdom, Mexico. Yeah, not a whole lot going on, right? Greece pulling back. Hong Kong, Hang Seng. India. India might be doing something here. India. Trying to get something going. India. Higher low. This is a weekly time frame. Does it look like a big triangle? India looks like a big triangle pattern. Okay. Probably going to break to the upside, I would think. Just maybe not. Looks like the volume they've been selling. Okay, no big deal. India. Okay. Saudi Arabia, not much going there. Turkey. Turkey has just been trending like crazy for the last 10 weeks or so. Turkey just keeps going. All right, so that's the international indices. We left off with energy, financials, industrials. I don't see a whole lot of reason to go crazy on the long side at the moment. XLI, industrials look okay. Caterpillar, hanging in there. Caterpillar, John Deere, Snap-on. So industrials, consumer staples, even consumer staples pull back today. Utilities were hot last week. A little chasing. Maybe it comes back and starts the pace. Utilities not that interesting. It's already run up quite a bit. Healthcare, nah. We had consumer discretionary pullback. Maybe it bounces tomorrow. Software, XSW. Software. XSW. Okay, IGV. Software. Retail, XRT. We got Walmart earnings this week. Walmart, WMT. Costco, pulling back. Target, trending. Dollar Tree, above the 50-day. Dollar General. Ross Stores. American Eagle, Outfitters. That's on the watch list this week, back below the 50-day. Okay, Ross Stores, Dress for Less. Okay, S&P continues to fade with 21 minutes to go. Bond market, treasury protected securities, tip shares, bond ETF, not much going on there. TLT, gapped up last week. I wouldn't buy it up here. 10-year yield moving lower. It's almost like everybody's waiting for something. 10-year yield. Breath is off today. Not a whole lot to do except reduce your exposure. This looks a little better. Mid caps, small caps. These were pointing down before, like the S&P, like that. Now they're starting to show signs that maybe they'll tilt upward. Same thing with NASDAQ. So it's only the S&P that's looking like this. New York Stock Exchange. Buyers at the low of the day. So it looks like we're going to have to wait for tomorrow.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Okay, so the shipping stocks, that's something I keep looking at. MASI. Big gap up on Massimo Corp, STNG, TK. TK continues. These look good. Norwegian Cruise Line, Wingstop was up today. Wingstop. Just looking at stocks that actually have some follow through. Wingstop off the low. Wingstop, big move off the low. I don't know if you've ever been to Wingstop. I absolutely hated it. The service was so bad. It took, my son and I walked in there. I didn't realize that you needed to order ahead of time. People that have used it say that you have to order ahead of time. We sat there for an hour for some wings. I was so upset. You know, after about 15, 20 minutes, you expect them to call your number. You know, we wanted some Buffalo Wild Wings, completely different story. I much prefer Buffalo Wild Wings. So anyway, Wingstop, yeah, it's okay. I'm not surprised it is where it is. But a $300 stock, $250 stock, I'll pass. It is up on the day though. So CCJ, that was mentioned earlier by, I believe, Nick, right? CCJ, or was it? I'm not sure who it was. But CCJ, nice little bounce at the 50-day. That looked pretty good. Kamiko, Clorox, Nvidia, Yum China, YUMC, Yum China. Yeah, it looks okay. Nvidia, decent bounce today, but looks like it's going to close below the 50-day at this rate. What else? Massimo, Zim Integrated, that was mentioned earlier. Somebody mentioned Zim Integrated. Okay, big gap up. I don't want to chase it, but some of these maritime shippers, let's go look at those. Maritime shipping, let's see, shippers, bulk carriers. Okay, ASC, Ardmore Shipping. It looks like that's where money is flowing right now. It's a $13 stock. It doesn't move that much, 45 cents a day. It's up 46 cents. So you don't want to buy it here. I'd buy it tomorrow looking for a follow through. Or if you buy it here, put a stop underneath today's low. ASC, okay, Baltic Dry Index. Okay, Costamare looks like it wants to break out, buying, picking up. These are thinly traded. DHT Holdings at 15. These are breaking out. All these maritime shippers look strong. Diana Shipping. Wow, this is $2. Jeez. This used to trade a whole $5. So now it's half of that, 2.5, 2.5. Diana Shipping, it moves very little, about 10 cents, 17 cents a day.
Solidified most recently during our decline. However, 166, backtrack once more, repeated stopping point for price, notable low point here. That's about where we're stuck right now.
Diana Shipping.
So when we look at our moving averages that we follow, our blue 5-day weekly EMA comes in right around 165. Price has slipped below that today, but our moving averages, they're all trending downward. They're continuing to diverge farther apart from each other, suggesting the trend has not started to improve just yet at this point. Longer term downward slope on the RSI has not been broken yet. We are improving marginally. We are no longer oversold, but still looking like we're perhaps going to break through this green trend line on the RSI today. So earnings could also rewrite all this significantly here. So perhaps it might make more sense to look for any notable trading areas around current price activity. From a volume profile perspective, the heavy trading activity before 170 is what stands out. We are slipping below that range once more again today here. So that would be the place the bulls would want to make sure they take hold of.
And as I look at
What is Nokia doing? I haven't looked at that in ages. Nokia. Okay, we got 13 minutes, 40 seconds to go. Nokia. Okay, Nokia. It's up. Nokia up. All right, trying to do something, Nokia. I have April calls. What are those doing? Let me see what Nokia is looking like. Nokia. Okay, that looks fine, Nokia. I have the 7 call. I'm in the money. Had 5s. We rolled the 5s to 7. April 7 calls. Looks okay. All right, so continuing on with the bulk carriers, we left off with Diana Shipping. All right, let's see. Who is this? This is Golar LNG. Golar LNG. Volume has been pretty good. 44. Let's see what the weekly looks like. Weekly. All right, this looks like a big base about to break out, maybe. Golar. GLNG.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an
GLNG. Ginkgo Shipping. $22. Doesn't trade much. It's less than 200,000. Global Ship Lease. This one, obvious name. They lease out ships. 200,000 shares. Nah. Pass on that. Kex. Kirby Corp. Kirby. MACD Stochastics. Everything turning. Average is about 300 to 400,000. That's like a minimum for me. These look good. Let me see what the options look like on this. KEX. See if there's any interest. KEX. KEX. Let's see. Yeah, there's nobody trading it. Nobody trading. They must be just buying shares. September, June. KEX. Very little open interest. Okay, we got 11 minutes to go. 11 minutes to go. Kirby. Nordic American Tanker. This one tends to work from time to time. This trades 2 million shares. Wow, that's been on the run. since the beginning of February last year. Nice. A double. NAT. It moves an average of 13 cents a day. That's a snail's pace. If you will buy, you'd have to buy 1,000 shares of this just to get 130 bucks out of it on an average day. Or trade options, which doesn't have a whole lot going for it. These are bulk carrier shippers, not the most exciting group. Hence, no one seems to be interested in trading them. Okay. What else is working? eToro, ETOR. That was the CEO was on CNBC earlier. Okay, they gapped up. eToro Group. Broker dealers. Okay, broker dealers. IBKR. Are they up today? eToro is a broker dealer. Schwab, SCHW. Nothing there. Raymond James Financial. There's just nothing interesting. It's just really not that much interesting out there. Wingstop, Norwegian Cruise Lines, Knife River, KNF. KNF, Knife River, KNF. What do they do? KNF. Big gap up. Knife River, KNF. Sounds like a software company or something. KNF. KNF. They had earnings. Decent earnings. Aggregates, crushed stone, sand, gravel, related construction materials, ready-mix concrete. There was a couple of those. There was one on the watch list. I forget which one. The company. Oh, it was. What was it? Let me look at the watch list here real quick. Who was it? Speaking of, Rig had earnings. STNG. WMB. Let's see. What is Williams Brothers doing? WMB. Okay, still trending. WMB. Williams Brothers. All right, so we'll have to wait for tomorrow. This is kind of a really slow day. Hopefully, we'll get a few more things rocking and rolling tomorrow. Lockheed Martin on the watch list. Let's just look at the watch list, how it did today. Lockheed continues to move higher. American Eagle Outfitters, back below the 50-day. Caterpillar, we talked about. Flagging. CECO, this is education related. Constellation Energy, that one had a good day today. Constellation Energy. Turning back up. I didn't sell that, did I? Just make sure I don't have any limit orders to sell. Because these are very bullish. CEG, I'm still in CEG. That's up nicely, CEG. Constellation Energy turning back up. 60 minutes trending. So you want to always keep an eye on your 60-minute. If it's above the 60-minute 20 EMA, you got a good shot that this is going to start trending. Let's look at Microsoft, for example. Microsoft's been out of favor. We're watching for this to eventually get above the 20 EMA, and the 20 EMA turn up like it did over here in late January. Not there yet. Apple is saying, yes, I'm trying to do something for you. Apple pulling back now pretty aggressively. Needs to get back above the 20 EMA. That needs to turn up like over here. 20 EMA. Chevron, it's been above the 20 EMA. The last few days, it's been below the 20 EMA, so maybe you want to reduce your exposure on Chevron. It looks like it's consolidating. Take some cash. Unless you're in shares, take some cash, just put it aside, and wait for whatever is going to start going this time. BITX trying to do something. Bitcoin 2 times. Boeing above the 20 EMA, just gradually grinding higher. GE was higher this morning. So all of the GE spinoffs, GE Vernova, GE Healthcare, All of these looking okay. Okay. I'm just not really super enthused. The market looks like they could drop off here. This trade you might want to consider on the next bounce. Maybe we get a bounce that gives you an opportunity to take some hedges. Okay. The cheap way to do it is to buy a put fly, buy 660, the green, sell two of the 6500s, buy a 640. So for this particular combination, it's about $300. The payout, I don't even want to say what the payout is. It's many, 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 many times $300. I don't want anybody to take a trade that doesn't understand how butterflies work. Ideally, with a butterfly, you want this to gradually move down, lose 6,800, not gap down, but gradually move lower. As it approaches 6,600, these puts get more in favor, so they'll start to catch a bid. These short here, they're still another 100 points lower. This week's expected move for the S&P 500 was 128 points plus or minus. I posted that late Sunday in the trading room. So 100 points per week. Okay, so 6,600 is down there, 200 points lower. So it would take 2 weeks to get down there, given the current circumstances. At least 2 weeks, I would think, because we've faded a bit. We moved back above 6,800. And now we're showing some weakness coming into the close. Palo Alto has earnings tonight. Palo Alto, anybody guessing on what Palo Alto is going to do? Let's see what this 60-minute says. 60-minute. What do we say, Palo Alto? Palo Alto is puts are really expensive. Selling put spreads. Palo Alto. Only problem is some of these stocks have gotten whacked a lot more than what has been priced in. This one's pricing in. What did we say? Palo Alto was 11%. Palo Alto, 7%. 7%. So if you double it, 15%. On the put side, Palo Alto, PANW. Speaking of P's, what is Palantir doing? PLTR, Palantir. Okay, trying to base down here. Palantir is doing what I'd like to see Microsoft do. Base. Not happy that it's down here, but if it's going to do anything, base and move back towards the 200-day over the next couple of weeks. Palo Alto, PANW. Okay, so Palo Alto. Yeah, 15 deltas are bid at $1.65. So you get $65 for a put spread. 14, 15 delta. I don't like it. 65. It could work. 65. Call side though. What if this rips back in the other direction? And not a lot of open interest either. People seem to be reluctant to do anything. I'm looking at I looked at a Palo Alto Iron Condor earlier, and looking at a 15 delta, there's 227 contracts in open interest. That is a mistake. If you take a trade like this and you can't get out, there's somebody with 200 options and they want to get out. You don't have an opportunity. If you go 5 wide like I normally do, I guess you could get out of the 185, 195 or the 185, 190. That would work. 185, 190. Can I get the 185?
Download the Schwab Network app and stream live coverage wherever you are. Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on
Oh, that's the closing bell. Closing bell. All right. So much for that idea. I was looking at maybe an Iron Condor in Palo Alto. I looked at it earlier. Didn't like it. Still don't like it. All right, folks. I got a hard stop. Have a great evening, everyone. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is February the 17th, Tuesday. Kind of a drag of a day. I mean, we did have a nice opportunity on the gap down. The markets rose back up. We get the green again. We're closing green on the day, 11 handles. We faded the high. Right back up to a big choppy price action. Big doji spinning top. You can see that. Spinning top. All right, so maybe tomorrow we'll have a better opportunity and we'll open up higher. That would be a good thing. All right. So at any rate, I got to run my son over to Best Buy. Have a great evening. Take care, and we'll see you in the morning. Ciao.